Okay, mic check, mic check. Just getting situated. Hope everyone's doing well today that's tuned in. As we just get set here, gonna tweet out the stream. Pretty much ready to rock and roll. Just a moment. All right. Just like that, we're live. Thank you so much for joining me today. It's an exciting day, of course. It's GameStop earnings report. So I had to go live, had to take the day, hang out a little bit, just figured starting early on stream, go all the way, right? So here we are. Got a little stream layout going for today. Trying to get situated. Oh, got to get this Hetron sign going. Boom. There we go. Now we're officially rocking and rolling. Hopefully the lighting's not too bad. It is what it is with how the sun hits this room. So see if I can close this a little more. Oh, that's pretty much it. So it is what it is. We'll make adjustments later if we have to, but I hope everyone's doing well today on this very fine Tuesday afternoon. What a day, right? What a day. We'll see what happens, of course. Actions speak louder than words, and numbers are to be reported, right? And we'll have to look at those and analyze those and see exactly what happens. So here I do have some of the numbers pulled up for you guys. We have margins, revenue, net income, and then SG&A. So you'll see scrolling on the bottom of the screen here, there's some like estimates. You have analyst estimates, and then I also put like Tetrad estimates. I figured throughout this stream, I'll kind of determine. I kind of have my current mark around like 40 cents, like if you see on the right side of the screen here. So not that I'm necessarily going to keep that, but that's just kind of my rough estimate right now. And I do want to estimate on SG&A as well. I know the analysts did an estimate on that. They estimated on revenue and bottom line EPS, but I figured I'll throw like SG&A in there too to just get my thoughts out there. Let's fucking go. Soljo, thanks for being here. Cheers to you, sir. Have a couple brews today. It's a little party. Why not? I mean, not going too crazy. It is Tuesday afternoon, but just figure I'm off work. Like, I'm going to enjoy myself. Why not? Hang out, it's a party. And just to clarify, like, I'm not celebrating events like, oh, it's a lock. Like, GameStop is going to the moon guaranteed. No, it's just a matter of I like the stock and I believe in it long term. And I'm just going to enjoy the day. And whatever happens, happens. And the truth is, you should expect the unexpected. Who knows, right? With the market we are in and the world we live in and the nature of the markets, GameStop could have net positive EPS, 40 cents, beat analyst expectations, be fully profitable for the first year since 2017, and then they could still have the stock price decline, right? You never truly know. So let me just get this stream tweeted out real quick. Yo, let's fucking go. 420 Bong Smoke, good to see you, man. Hope you're doing well. Thanks for popping in today. Just getting the Twitter post out. Sure, we're situated. I'm so happy I finally have my desktop this time, because the last earnings I was doing on my laptop, or I set it up on my old desktop, and it was gonna be the first time I used OBS, and pretty much right as I was about to start, it was like, yeah, nothing's working, and I'm like, are you serious? But it is what it is. Learning experience. Let's get this tweeted out real quick. Just doing it on the side. GameStop earnings live stream on YouTube now. Boom. Fun fact about X and Twitter, because I was trying to look into the algo a little bit, where if you're gonna put something out, right? Like, I know you guys can't see what I'm seeing, so if I put the browser on, so if you want to tweet out a link, like it's like a landmine, so to speak, in the Twitter algo if you put it in the main part. So that's why you usually see me like put out the thumbnail now and like the earnings live streams on YouTube and then like a point down just to show like if you wanted to click on it from here, you know, the external link is there. But if I put it in the main like actual tweet, unfortunately it wouldn't really post or wouldn't really show up in as many people's feeds like from what I've looked up so far. So definitely got to text this over to the boys real quick too, and a couple homies. So let them know, you know, pop in throughout the day. And I understand, you know, obviously not everyone's gonna watch the entire day. Like that's just how it goes. But people pop in, people pop out, and those that do watch the entire day, I appreciate you absolutely. But you know, it's interesting how yesterday we had a bunch of movement in the stock, you know, out of nowhere. It makes like a pretty dramatic move during the day. Runs up right at the open, and then nothing really. Then if you look at the 1 day, when I was looking at pre-market before, see there was this interesting little bounce. Where was it? Oh, they don't have pre-market on here anymore. When I was on the pre-market chart before, I thought I saw like just a jump to 1650 and then right back down. One of those like double candles where it's like green, red, back to back, as if just for like a minute or two, it jumped like $1 in price, which you could speculate on whatever you think that is. It's just odd to say the least, right? So could we see GME at 16 by the end of the day? 1650 doesn't look like it right now, but who knows, right? Like we got a lot of time left. Although it's definitely been a far less volatile day than yesterday, because yesterday just had a big open, excuse me, and then a little decline, then kind of just ran the mid part of the day flat, and then at the very end of the day, power hour, or even the power 30 minutes, whatever you want to call it, starts to make a run, little after hours action, and here we are today now. And you know, it is what it is. It is what it is in the short term. I'm looking really just for the numbers today. Like I'm not too concerned about the price movement, to tell you the truth. Of course, I want to see the stock go up. Don't get me wrong, but I'm really more so focused on like what are the numbers looking like for today. So as I mentioned like just a few minutes ago, anything could truly happen in the short term with the stock price. It'll go up, down, left, right, fugazi, fugazi, tawazi, tawuzi, right? So it is what it is, and I would rather focus on the numbers and just focus on the long term because, in my opinion, that's just the best way to go about it. And then I put together, I've been using this cool app called Obsidian, where you're gonna see me flick back and forth a lot with today. So on Obsidian, like you can pretty much put images and like take notes, and like I can take a new note. You can put a live link, right? Like look what I put in here: the GameStop rewards credit card. If you didn't know, GameStop did recently launch a credit card. Again, not anything groundbreaking, but just another step in the right direction of doing the small things right. Major retail companies all tend to have credit cards, so I think it's good that GameStop does as well, just to be relative, right? And relative to the fact that all the other ones out there, all the other ones in terms of other retail companies, whether it's Best Buy, I always reference TJX or TJ Maxx because I used to work at Marshalls. TJX companies is Marshalls, TJ Maxx, Home Goods, Home Sense. So they have a TJX credit card. Best Buy has a credit card. Macy's has a credit card, right? Target has a credit card. So GameStop has a credit card. And again, just not something that it's major and it's like, oh my gosh, they're going to make a gazillion dollars now. It's just another thing that they weren't doing before that old management didn't have in place that everyone else was doing and they were just lagging behind. So really these past few years, in my opinion, have just been a lot of catch up and there's going to be challenges ahead, right? There's going to be ups, there's going to be downs, there's going to be lefts, there's going to be rights, there's going to be circles. And no matter what happens today, I think it's good to go into it like, all right, whatever individuals feel, like such as myself or yourself watching this in the afternoon, you might not feel that way tomorrow or a week from now. So you got to like go in like tempering expectations kind of. And then when you get there, like you react however you do, but then also like after try and just like reflect on like the overall big picture. And I think that's just important to keep in mind with any long-term investing in general. Let's hit the chat real quick. What's your free cash flow prediction for the quarter? Also, does GameStop have any is that cut off? Fulfillment centers left. Sommer, they do. They did. They are closing on that York one. I know that warn notice was put out, where essentially it's being wound down into like the mid part of this year. But they still have a couple open. We'll see if we get any updates in terms of leases. That's definitely something we're looking for. Store count, leases, like definitely looking for that information in the next 10K. But they still have a couple fulfillment centers and free cash flow prediction. That's something we could definitely look at together here because I don't have like an official one yet. That might be a good one to put on the bottom as well. I'm gonna kind of just ballpark numbers. Maybe I'll do a range, but we can kind of get into that. Let's just pull up last year's 10K. It's the easiest to reference. September, Happy New Year. Thanks for popping in. Yes, sir. It's officially, that's true. The new year of reporting. Well, I guess technically, since the quarter ended at the end of January, it's kind of in the new year, February 1st, but I know what you mean. And even though earnings are coming out today, I'm pretty sure the 10K filing won't be until either like late at night or I think it's usually the next business day that they do it. So we'll have to see about that. But let me just quickly text the stream over to a couple people. A couple friends might pop in throughout the day. All right, quick share. And thank you all for hopping in. I really do appreciate it. It's not often I do a day stream, but it's GameStop earnings, so gotta mix it up. You know what I mean? Let's get it over. And did you guys see that chip situation today? Absolutely crazy. It was like overnight, and as horrible as it is, luckily more people weren't caught on the bridge during that time. Like this ship just like crashed into the bridge, completely lost control. Bizarre world we live in. A lot of scary stuff going on. Honestly, I don't like to get too into all that, but it is something that's going on. And it's crazy, right? I read it this morning. I saw the video of like the ship, and it's like the lights went on and off and on and off. Like, what the heck? That's like craziness. But just texting a few people. It is a big day, so gotta make sure everyone knows what's up. Boom. All right, now we're rocking and rolling. But let me move this a little more here. Quick brewski sip. Had to take it out of the can because no free ads, right? No free ads. One day, I'm going to be huge. And people are like, oh, one time he was drinking that type of beer. He was advertising for them. So no free ads. Got to put it in a glass. And maybe I'm thinking about it. Maybe a quick chug before the actual earnings is released. Maybe just send a full beer. Although I'm putting myself at risk by doing that because if I mess up, it's pretty pathetic clip where it's like I couldn't successfully send the beer. So we'll see about that. We'll see how I'm feeling at around 4 p.m. But maybe do one. But obviously not like crazy. Not gonna get obliterated on here. Gotta drink responsible. So let's go just the faster way. Cash flows. Control F is really your friend on these filings because it just makes it so much easier to navigate. So, the interesting part also about like predicting or looking ahead to today is it's not only Q4 earnings, it's full year. So there's kind of two sets of numbers you're looking at. With looking at the Q3 filing though, like you can see this year thus far. So the full year numbers are definitely impacted by Q4, but at the same time, it really is just kind of Q4 numbers you're looking at because you already know what leading up to 3 months looks like. The leading up, the 3 quarters leading up actually looks like. So last 9 months, see, you could see for this year compared to last year. So right now they're at a net loss of 56.4, and the same year, 3 quarters in, or it's the same time of Q3 2022 was $360 million loss. So you already see significant improvement there. And then when you look at the 10K, if you look at net loss, right, at this point, at the end of last year, it was negative 313. So if you did these, so you did negative 313, but going in, it was at 361. So put about 40 something million. And then 2021 at the end, it was negative 381 million. And before that, it was 361. But wait, totally lost my train of thought there. But to digress real quick, if you look at the balance sheet over time and like where I have it over here, oh, I just realized I had the wrong thing pulled up. So this is why I usually do display capture. That's why I was confused. I was like, wait, what's going on here? So that's why I usually do display capture though, to kind of flick back and forth. But today I wanted to try it where maybe I just kind of alternate between like Obsidian and the browser. but maybe display capture is a little bit better because I'm going to be bouncing around a bit. And if anything, kind of swap it out later. How many beers are you drinking today? Just a couple, not too many. I don't want to go too crazy. I already just started sipping this one, and I fumble over my words a little bit. So, nah, I'm just playing. That was just me being goofy. But do you think GME will put more money in marketable securities? I think it's possible, but also possibly, it stays in cash equivalents because cash equivalents, by definition, is less than 3 months. So, if it's a situation where they are just keeping more in cash equivalents, they might be earning more because if you think about it, the yield curve was inverted not too long ago. So I'm not sure where it's at now. I haven't checked it in a while. So I think it's very possible, but at the same time, if there's less marketable securities or more, it doesn't necessarily make that much of a difference because of money market funds, which you can kind of pull your money in and out of at any time. And then also any cash equivalent, like a 1 month bond, is essentially, or T bill is essentially technically a cash equivalent in calculations. And it's like in their filing, they did have that. See, I have right here. It's like a little side notes. Cash equivalents consist of U.S. government bonds, notes, money market funds, cash deposits in commercial banks, and highly rated directed short-term instruments that mature in 90 days or less. So marketable securities are made up of highly rated short-term government bonds and notes, as well as time deposits that mature in less than 1 year. So pretty much marketable securities is greater than 3 months, but less than 12 months. And then cash equivalents is 3 months or less, so it can be very, very quickly accessed. Whereas marketable securities can be accessed relatively quickly, but not as fast because it's still a 1 year period. I'm John Lacey. Thanks for popping in. Hope you're doing well. Yeah, so what a day. What a day, right? Our GameStop earnings report. But I do definitely want to do more calculations where I was kind of just estimating, if we had a certain stock price and a certain EPS, what would that make trailing EPS versus trailing PE versus forward PE? And then also, kind of estimating EPS next year potentially. Analysts have 14 cents last I checked. It might have changed now. Right at this point, I had wrote 80 cents. So that was just kind of a number I threw out there just for the time being. But again, if you see on the bottom scrolling, you'll see it's just X's at this time. So I'm going to kind of decide probably right at the bell, probably right around 3:30 or so. I'm going to lock in my earnings estimates. But definitely pull up what we have right now. GameStop is slightly green on the day, although it's really about the after hours price action. And you also have to remember whatever happens in the after hours, it's not necessarily what's going to happen in the pre-market hours tomorrow. So even when earnings are reported, there's a lot of time between when the numbers actually come out and when the market actually opens again. And then there's also always instances where stocks open higher, close way lower, open way lower, and then climb all the way up. So you never truly know what's going to happen. So I would say just mentally be prepared for anything. And those of you that were here before, I was mentioning there's like a strange candle this morning. See around 8 o'clock or so, 8:01. Just quick spike to 1650 and right back down like nobody's business. So interesting what that is. I'll let you speculate. But let's see. Analysis. We have it for next year. So current year 2024, although current quarter, see, like it's a little bit messed up on Yahoo. Like the report coming out is full year 2023, but here they have it as current year 2024. So that's the same thing, whereas 2025 would be the next year estimate. So next year's average estimate right now is 12 cents. Even this quarter's estimate is, or sorry, this year's estimate is 12 cents as well. And then analysts have it at 29. Previously, I had it on here that they had it at 25 cents, or sorry, 24 cents. So they did actually revise it higher, or I just maybe accidentally pulled a different number from somewhere else, or I feel like it might have been slightly revised. But there really are only a couple analysts that cover GameStop, and I don't even think they're personally covering it accurately. But it was very interesting how after the whole events of January 2021, there were a lot of ratings, and many analysts chose to drop ratings on GameStop, just straight up choosing not even to estimate anymore. And think what you will of that information. It doesn't necessarily mean anything, but I think it's kind of interesting where and some analysts maybe had the perspective of, hey, this is a completely unknown thing. We've never seen something like this happen before in such a short period of time. and there's new management in place, and now the company's going to change, in some shape or form. I don't even know how to cover it. Everything I thought I know, clearly I didn't, and there's no point in covering it anymore because it's a new beast. Not that they're like, oh yeah, like we are just incapable, but just more like kind of acknowledging that it's a different situation, or it's a different structure of the company with new management in place, and like just a sudden shift in the share price, the management team, there's like, all right, you know what, like I don't know how to predict this thing, it's all over the place, right? And of course there are the bears though that are like, oh yeah, this thing has been a fluke, all of you are still following this since January 2021, it's crazy, give it up. And to that I just say, I like the stock, it is what it is, I like the stock, you don't have to. I totally understand that GameStop's not an investment for everybody. Do you think they continue to shut down more stores? Um, Honestly, Sommer, I do expect them to close down some stores. What I was saying in a couple of my previous streams is there could be various reasons. Someone brought it up in the chat last night that there's theft in certain areas, even more so than ever, and that might be just putting a store at a loss, and it's very unfortunate. But if you don't have better loss prevention in place, or whatever the situation is, maybe the area of the crime rate's just skyrocketing. But just something where they're seeing like, okay, like it's going to be very hard to continue to manage this store and get it back to profitability. We might have to wind it down. So I'm not saying that's necessarily like the greatest thing to hear, but I trust the management team to make the right choices of, okay, well, this store, it's in a strip mall with 10 other stores, and three of them just shut down this year. So overall foot traffic in that area is down about 10%. And we've seen it hurt our bottom line. We wind up marking more stuff down to clearance because not as many items sell, yada, yada, yada. And they determined that, okay, well, we can't keep that location open either. So I think it's situations like that, and having the analytics and people in place to understand when to do that and when not to. And the way things are going, it just seems like there's more and more store closures over time. Like it's just kind of a steady increase little by little. There's always companies that are going bankrupt here and there, particular retailers. And I'm not saying GameStop is, absolutely not. They're in great shape in terms of their balance sheet. But with other companies, it can kind of indirectly affect them because of foot traffic and just human habit over time of actually physically going to the store. So that's just generally speaking, but I expect them to maybe close down like a very, very small percentage of stores, and for particular reasons like that. And something else I was going to show at some point, I've been talking about this a little bit because I just found it recently and I really want to heavily analyze it and like write something up for like X, Twitter, whatever, when I really just like examine it. But I mean, I've already examined it. We'll just quickly go through it now. But just to have like an official like write up on it and just to share it with other people who may not have seen it, because I didn't see it till recently and it came out over a month ago at this point. But pretty much they started working with this company Ubic or Yobik. I can never say. I never know which one it is. So maybe I'm saying it right. Maybe I'm saying it wrong. But pretty much creating GameStop's own internal platform and utilizing AI in the sense it's able to answer questions. Like an employee can ask a question like, what is the return policy for a pre-owned game? And when they do that, it is actually able to respond to them because all the information is put in the system, and then it artificial intelligence responds to like, if I was a store manager asking that question, artificial intelligence knows how to pull the information out of the GameStop database and provide that on the spot. And one of the things this article talks about is it being slow, or I'm trying to find a keyword because unless I skim through it, where there's basically, maybe it was in the video I watched, right? Because they also had a video if you want to watch, if you're curious. It's blog.ubic and you just type in GameStop, it should come up. But right here, there's a video as well. A couple of GameStop representatives on there talking about how it's impacted them. And I'm trying to see if it's in the article here or they said it in the video. But pretty much, yeah, disconnected tech stack, or I'm looking for disconnected like employees. They said it used to be very difficult if you were on the store level and you had to ask upper management or just someone regional about something that you're not too sure about, or just clarity on something. It was a slow process through emails, hold times on the phone. And I've been there because I've worked at Marshalls, and that's how TJX Companies operates, where if you need to call a customer service line and just get clarity on something, like it's a long hold, or they have their own internal phone number for like their own technology when there's issues. And It was a disaster. Me and the other managers, whenever someone had to call for that, it was always like rock, paper, scissors, who has to call. Like, it was just so boring. And then you're distracted from all the other things you're trying to get done because there's always like a lot to do at retail, right? Especially when I worked there. But my point is, it's just slow and inefficient. So that's where AI comes into play for like retail companies and companies like GameStop, where it pulls the data and it provides it to people on the spot. And that's something that I like about Palantir, just as like a quick side. I like Palantir because I believe that it's analyzing data for companies and allowing humans to make smarter decisions, and that's just what their theme is, kind of. And I think that's really where AI has use case, right? Where it's you have data and you have something someone built, whether it's a company, set of information, uh, maybe you're coding, whatever it is, right? And it can kind of give you feedback on it. It's almost like when you have a friend studying the same thing as you, and you're like, hey, what'd you get for this one? Like, I got 27.6, right? If it was like high school math class or something. And the person's like, oh, damn, I got like 6.2. And you're like, oh, well, let's see what we did. And it's like, oh, yo, I didn't realize like you did that. And that's kind of how I see AI, where it's like it kind of gives you different perspectives. I don't know if that was the best example, but that's how I see AI being useful. And that's how I see AI being useful for GameStop, where it's using their systems and their information to provide to employees on the spot when necessary. And also think about a situation where maybe someone had a disappointing experience at the store. They go on the GameStop app, they call the number, someone instantly answers because there's no annoying phone menus. And when they answer, you're like, okay, well, I was at this store in this location, and I really thought this was supposed to be this price. Like, I think they forgot to discount it. Okay, like, let me look in our system. And maybe it's not necessarily Ubik, but it's the technological upgrades as a whole of GameStop, where that person taking that call, who's not working in a physical GameStop location, is able to get the information they need to assist the customer in the way they need. And that kind of goes back to, they talk about like being customer centric or something like that. Customer, I don't know, something they've used like keywords where it's like, okay, where is it? Customer leverage brand equity and support growth. GameStop has many strengths and assets, including strong household brand recognition and a significant store network. We intend to use these assets to attract new partnership arrangements, expand product offerings, and acquire new customers. We will simultaneously explore and pragmatically invest in strategic initiatives to support our growth. But pretty much another goal, I'm trying to skim through and see it here. Yeah, this includes app and site redesigns, better product availability across all channels, improved fulfillment seat partnerships, and store concepts to attract new customers, and further improved customer experience. So they're about the customer experience, trying to put the customer first. You know, a lot of people you might talk to will say, "Oh, you know, GameStop, I went there like 2015, and I got like 2 cents for my game, and this game I bought was slightly scratched, or this or that, whatever nonsense, right?" And what people don't realize is it's shifted where it does really operate better now. And, you know, that's, of course, that's my personal opinion. You're more than welcome to disagree. But I see it as a situation where when you have better management, it just goes from the top all the way down. And just things are run better. People have better experiences shopping and they'll actually want to go back there. So there are still people who do have it stained in their mind, like GameStop stained in their mind forever, like, oh, it's such a terrible experience or this horrible thing happened. And then maybe they just go there one time for whatever random reason, like, all right, you know, whatever, I'm just my friend, he's gonna stop in and get something. And then they have a good experience there, they get the nostalgia back, and then they buy something and it's actually not a problem this time. That's how I feel like they kind of get customers back. I mean, that's a very extreme example, but you know, there's definitely people like that. Like, there's that one guy, what's his name, like Camelot or something, some interesting guy on YouTube. He was like, another GameStop walkout. They are so terrible. I worked there like 15 years ago and it was so horrible. Or some kind of nonsense, right? So there's always going to be people like that that you're not going to be able to sway over, so to speak, or make them like a customer. But with keeping your same customers, you know, loyal customers are so important to any business. And that's one of the things I saw working at Marshalls when I did. We had some of the same people come in like multiple times a week. It's just like a hobby for them to shop around, and we had such sticky customers. Like, we had so many repeat customers, and it really, I think, is why those companies are successful. Because under TJX is Marshalls, TJ Maxx, Home Goods, HomeSense, and I'm sure you know someone in your life that shops at one of those stores like fairly consistently. So they have a very loyal customer base, and that's any company who's selling products dream, right? To have a loyal customer base that keeps coming back for more. And how you have that is providing good customer service. In the case of Marshalls, again, I can mostly speak from my experience because I was a manager there for a short time, and I did work there like 4 years overall. Kind of moved up through the ranks, saw the regular employee perspective, kind of supervisor perspective, and then the manager perspective, right? And overall, like as I moved up, they told me more and more, like, the customer is always right. That's kind of what they said. I mean, I don't necessarily agree, which is, oh yeah, whatever. Like, it doesn't matter. Like the client, client, I always say client because where I work now, we call it clients, right? But when I worked at Marshalls, it was like customer. So imagine like customer brought in like post-its like this, right? And it's like, oh yeah, this is how I bought it, and it's so ridiculous. I mean, this is a very extreme example. I want a refund. Give me my $3 back. I'm like, sorry, sorry. And then like, okay, as a one-time courtesy, like I was encouraged to do things like that. And I remember even meeting with the regional manager. It was a situation where he asked me, he's like, customer comes in with an old fan. It's rusted. You can see it's clearly used. It's not something we typically sell, but they're being really insistent. They're starting to raise their voice. What would you do? And I was like, I would overall, I'd take some time to address the situation, but ultimately determine to return the fan, give the customer just a store credit because you don't just give them their money back. So that's kind of like our, if you don't have a receipt or it's like more than 30 days, they would make you take a store credit, but it's just going to bring the person back to the store, right? I understand, we don't, something seems off here, but we understand that you're a customer here, want to help you. For one time only, we'll take it back, and here's the store credit. So like we would do stuff like that all the time, and I was encouraged to do that. And also from my perspective as a manager, I was like, okay, I don't want to deal with this person getting very, very escalated, right? To obviously de-escalate certain situations, but if they're going to get really, really angry, and some people get violent, it's just the world we live in. And I was very fortunate where I never dealt with a situation like that. The only situation that happened to me is some old lady threw her store credit. I mean, she said, "Hell to hell with your store credit," and that's when I was younger, and I almost lost it. I was like, but anyway, the point is, it was encouraged to provide customer service, and that's a very extreme example. I don't think GameStop should take back. Like if someone brings sunglasses, like, oh yeah, I bought these here, like, you have to give me my money back, right? I'm not saying that, but I'm just saying having that customer service approach and like having that be what's trained by management and just the people running things and just from the top down, like goes a long way. It goes a long way. It really does. And it's what GameStop has to focus on as another one of the many small things I talk about that they have to do right to just continue to improve. And people think it's, oh yeah, it's all just cost cutting, right? Like they're cutting costs and they're just barely going to be profitable. Like, oh, woohoo. No, it's they're trying to do all the little things right, and they've positioned themselves. And this is like the pinned tweet for me right now. With the strength of GameStop's balance sheet provides them with the opportunity to focus on the long term. At this time, they had 392. On here, whoop, wrong one. Right here, zoom out a little, 396. So it's even a little bit more now. I expect it to be even higher after today's numbers come out. But my point is, it overall allows them, as this tweet says, to focus on the long term. And then they can execute on shareholder initiatives, share repurchases, dividends, acquisitions, improving the core business, expansion to new segments of business. Brick by brick, they must continue to improve. But the balance sheet shows there's no need to take on high debt. And it's still true to this day. They don't have to rush into any decisions. And, and I'm going to hit the chat real quick to make sure I say hi to everyone. But where's the tweet? I love this. Today is the day. Yep, see, I said should have added a third option for neither on this poll, but I appreciate seeing everyone's responses. It was awesome to see. Like my phone was blowing up while I was at work. Like, this is crazy. Like so many people are responding and sharing their opinions, and I appreciate it. Like it's good to see different people's perspectives. And I was saying last night how I'm gonna just keep doing polls like this just to get people's perspectives, right? Like you could agree, disagree, or comment. In this case, a lot of people are like neither. I don't really want to vote for either of them because I don't want neither of them to happen right now. But overall, buyback shares won, just slightly, 56.3 to 43.7. versus issue dividend. There was a lot of results, so I feel like it's a pretty good sample size. Thank you to all of you that have voted. If you didn't, follow me on Twitter, Tetron Invest. I'll be able to catch the next poll. Going to be putting out some more. Just trying to poll GameStop investors, and even people who aren't investing in GameStop, just follow along. You're more than welcome to vote. Right? There's no certification if you own shares, so you're good. um, what do we need to have good earnings? I would say definitely lower SG&A than last year. So if we pull this up right here, slide on over. Selling and general administrative costs from 2019 to 2023. So in red, I have it as dollars, and in green, I have it as percentage. Excuse me. So looking from here to here and here to here, right? About $100 million less in SG&A. And then here to here was about, or sorry, Q2 here to here, it was about 50-ish million, maybe 60. And definitely percentage wise for every single quarter was lower. And you always see though, looking back at previous year's Q4, that the percentage is usually in the low 20s. And one year was even 19.7, but that was the year of the pandemic, so that's a little bit of a strange situation. It might skew the data a bit. But when I look at this, I'm like, I want to base my estimate percentage wise, right? So like I guess I would have to estimate revenue and then estimate use a percentage and use that to estimate the actual SG&A, which I am planning to do prior to 4 o'clock. But I'm gonna think about it a little bit more. I kind of lean maybe like a number like this again, 20.4. Like if we could see 20%, and let's say revenue was 2.2 billion. So if it was 2.2 billion, it'd be 2,200 million technically. So multiply that by, what do we say, like 0.20? That would make SG&A 440, and that'd be the lowest for Q4 out of the past 5 years. So if that's the case, right? Like if we get revenue of 2.2 billion, 20% SG&A, it would be 440. But we'll have to see. That's just a ballpark number. GameStop actually has a lower PE than it will say because they have $1 billion in cash, so technically you would subtract from their market cap. Retail is such a hard business. You have to keep low debt and focus on store profitability. It's so hard with e-commerce giants like Amazon, but I like how GameStop specializes in gaming and has a core. Hopefully that's somewhat of a moat for them. Yeah, exactly. No, I appreciate that comment for sure. It is absolutely difficult with Amazon just becoming larger and larger, and they get involved in everything. They even have Amazon Gaming. They own Whole Foods to get involved, with Amazon Fresh and all that. So they are just all over everything, right? It's like that giant octopus that's kind of like over everything that's kind of becoming Amazon. So there's got to be other companies, right? Like you need competition. You don't ever want a monopoly situation, but it's one of those where they're just so far ahead. Not far ahead, but they're the most popular, like everything sort of company, if that makes sense. Like it used to kind of be Sears, from what I understand, and how a professor explained it to me once, and I found this very interesting. Um, he was actually my favorite professor. Like he didn't even make us do like tests. Like he wasn't that type of professor. He was like, "You're gonna come to this class, and I think it was business ethics. Maybe that was the technical class." He's like, "We're gonna talk about what's going on. You need to pay attention." Like the first day, he grilled everyone. He's like, "Who's Emmanuel Macron? Who's Emmanuel Macron? Who's Emmanuel Macron?" He goes around the whole room like gets to be like 15 people before someone finally knows. It's the president of France, or like, yeah, I believe it's president. Yeah, not something else, unless it's prime minister. But yeah, maybe it is prime minister. But regardless, Emmanuel Macron, prime minister slash president of France, and he's like, "How do you guys not know this? You guys need to pay attention. You need to know." And his whole perspective was like, you have to be like in the know and constantly wanting to learn more. And what was I gonna say? Damn, I went too far off on the original. Let me read your comment again. I'm trying to think of what the main point was. I just had it. We're building cash. E-commerce giants like Amazon. I like how specializes in gaming as a core. Someone says a moat for them. Damn, it totally slipped my mind. I had one particular story about him, but yeah. Oh no, no. Yeah, I don't know. Totally lost it. Hopefully it comes back. Good day, people. Do you know if GameStop owns any real estate or property of stores? Summer, they don't. They pretty much just rent. So if you look at the 10K and you look at the particular stores, or you look at the like fulfillment centers, fill. Okay. Yes, they pretty much all lease. They only own the one in Europe, Italy. So pretty much they do all leasing, and it's fulfillment and distribution, distribution and administration. So I would imagine the administration is, maybe some of the people working for the customer service line, like when you call in on the phone. So that's probably what distribution and administration is, and fulfillment is, actually fulfilling orders. And it seems like now they're really just going to operate out of the one in Kentucky, considering the York one is in the process of being closed down. And they'll probably put that in the filing because it was put out on something called like a warn notice, where it's basically just notifying people that there's going to be like a major layoff, either all or some employees at a particular location. And the warn notice for the York, Pennsylvania store was all employees. So they are ultimately shutting it down. It's driving me crazy that I had such a good point to make about this professor. The thing is, he told me a lot of good stuff. So I totally lost the point when I was going off on tangent of how like he started the class, because he was just such an interesting guy. And my brother actually has him now. We went to the same college, so it's pretty dope. What up, Tet? John Jar? Hope you're doing well, man. Good to see you. Thanks for popping in. In your opinion, do you see GameStop being bigger than Amazon one day or no? Or do you think GameStop will specialize in one realm, unlike Amazon in all sectors, basically? Howdy. I don't think, as big as as big as Amazon, they would have to get to a very far along way, right? To be at that scale, to be doing something like that. I mean, I think they would have to. There'd be a lot in between now and then. That's kind of my point. So I don't necessarily see that, but I see them continuing to specialize in gaming and technology. I feel like technology is always evolving, and they are capable, with a generally younger management team compared to, your average Wall Street board of directors. I see a younger group who's more in touch with technology, and I feel like GameStop's business model and like what they are like crosses over with technology beyond gaming, and definitely gaming's the main component, but technology in general. So I feel like something with that they have to do in some shape or form. And I saw couple people floated the idea over time. You just see it here and there of GameStop maybe acquiring something like Newegg, not X, Newegg. See their current market cap. See, it's down to 98 cents a share. I'm not sure how exactly that would fit in. The market cap is 374 million, so that's fairly large in terms of the fact that GameStop has, let's see, what is it exactly? 396 a share for a total of basically 1.2 billion dollars. Obviously, we're going to get an update this afternoon, but when you look at the market cap of 374, they probably would have to offer more unless the company's in a situation where they're dead and they're losing so much that it's like they would sell for less than the current market cap. But then if that's the case, do they really want to acquire it? How would they implement it in a way where it would actually benefit them on the bottom line? But they do get 1.5 billion in revenue, and it seems like just at a glance their cash flow is not doing well. They do have 91 million in debt, not too bad compared to 54 million in cash. I mean, this is just an overview. It's always better to look at the actual like 10Q filing or 10K filing for the company. But possibility, maybe, but the only way I think it would actually work is if they said, okay, like we're going to be able to like whatever. Obviously, I would have to take a look at what shipping centers does Newegg have? Do they have administrative centers? Like how is that all broken down? So they would have to take a look at that and be like, okay, like what can we dissolve and what can we combine in a way where their products will acquire their revenue and it's also going to hit our bottom line and improve it there. Because otherwise, why would you bother, right? So maybe a situation where it would have to be worth less, but that's just a random idea from the perspective of just technology being more involved. So maybe it's something along those lines, and then there's some kind of not rebrand. I don't think they'd rebrand the whole GameStop name, but it would be like technology spot or something like that. That'd be maybe decent. Um, Something like that, but or technology stop, or I feel like technology spot would be sound a little bit better, but at the same time, not the best name. So maybe it's kind of like a branch off of what they're doing in the future, something of that nature. This is just purely speculation, but definitely think technology could be more involved in like the products they sell. Deep breaths for earnings release. Let's go. Namaste. Namaste. You're right. Also had 2 cups of coffee to get fired up. So like it's kind of like a blessing and a curse to have a lot of coffee. Like I get fired up going, but then sometimes like my mouth is moving faster than my brain. I feel like that tends to happen to me. Once upon a time, Berkshire Hathaway was a textile company. Netflix was a mail order DVD company, and Amazon was an online bookstore. Geronimo, thanks for being here. And yeah, you're absolutely right. That's nothing but facts right there. So we'll see. We'll see how it all plays out. But definitely, the fact that Ryan Cohen, and with the discretion on the board, has the ability to purchase shares of other companies or other assets. Keep throwing out the idea of Bitcoin, although again, I'm not sure that's necessarily going to be something we see. But maybe even gold, but I don't really see him doing that kind of thing. But the point is, he can invest the capital, and we'll see if he does that, because if he does that, then it is kind of like a Warren Buffett, Berkshire Hathaway style, although that was a little bit of a different situation because Warren Buffett pretty much just bought out the whole company of Berkshire because he was like at some sort of disagreement with their management, or like they didn't want to listen to him even though he was a major shareholder. Like I'm definitely just briefly covering the story, but there's a lot more to it than that. But then he pretty much was like, all right, I'm just going to buy all the shares. And it became his. And he was like, all right, well, I guess I just have this company now. So I'll just use the money to invest because that's all I really am, is an investor. And that's all I want to do. So I might as well just invest that company's money. And then he started doing that. And, what once was a little textile company that never would have existed today is now, one of the most major companies in the world in terms of market cap. And it's just because it owns a bunch of other things. Like they own Geico, like they own things you don't even realize. Like Berkshire Hathaway is huge. And Warren Buffett's whole philosophy has always been, when there's a major market downturn, buy big, buy aggressive. That's your time. Like stack cash until that happens. And then when it does, acquire big, because you have good companies uh, in tough situations, but they are good companies for when things bounce back. That's his like general philosophy, and that's why he swooped in and saved the banks in 2008. I mean, not just him. Like, there's a lot more to it than that, but he also just in a lot of other situations historically, like if you look all the way back, made like major purchases when, if you looked at it on a chart, like and just looked at people's confidence at that period in time, a lot of people, other people wouldn't be doing it. And I feel like Ryan Cohen does have that pose and understanding, and he might have that perspective, and that's why we might not see anything for like a year, right? I'm just completely throwing that idea out there, but maybe it's a situation where it's like a year, and then out of nowhere, the market starts to crash, whatever the case. Particular companies are just getting hurt by something that seems overblown from his perspective, then he acquires shares like on behalf of GameStop, and it has to have, I think, at least a technology connection. Like I don't see them investing in like Pepsi. Like I think that would be very bizarre. I mean, I guess you never know, right? But my point is, I think it would have to kind of be something correlating to the business. Like maybe it's a situation where Apple stock is getting beat down right now, especially with the new case that's coming out against them, where trying to say it's basically like a monopoly. Customers don't really have a choice. They're kind of forced towards it, yada yada. Like I'm not reading too much about it, right? But the point is, companies like that, like Apple's a great company historically speaking, and they have a ton of cash on their balance sheet. So they're probably going to buy back shares, and they're probably going to bounce back because they historically always have, right? So when you have a down period where everything seems negative, but you still have a great company, that might be the time to buy. Like I'm not personally endorsing Apple, and I haven't like looked at their numbers in a very long time, but I'm just giving like the perspective of maybe that's the situation with Ryan Cohen and the cash, like how he goes about it. Let's go. Was going through airport security yesterday in my GameStop t-shirt, and some dudes ahead of me in line yelled "GME to the moon." I yelled back, "Hell yeah, man! Ape sighting in the wild." I love that, man. That's awesome. Thanks for popping in, man. Yeah, anytime I wear out my GameStop shirt, I always want someone to be like, "Yo, GameStop!" Like that'd be crazy. Like, or like GME, baby, something like that. It's funny. Like I wore my sweatshirt. I remember like to my work event, my Christmas work event in like the end of 2022. 'Cause yeah, this past one was 2023, the end of 2022. And one of the people there was like, "Oh, who you were here with?" And I was like, "Oh yeah, like my company." And then they're like, "Oh, you're not. Are you? I thought you worked at GameStop or something like that." Because I had like the GameStop sweatshirt on, which I just thought was funny. Like I don't know. How do you think GameStop could overtake Best Buy? How do you? So I think there's a lot between now and that happening, but I think just more products and also probably have to be very specialized, right? Like it would have to be not just like as many products as they could, but just more technology and get educated on it to be able to share like with people shopping there where they know if they go there, you're gonna be able to talk to someone that is in touch about the products that they're selling, right? Not that every GameStop employee is gonna know everything, but I feel like generally you have people that are interested in technology and games that tend to work at GameStop, right? Like obviously it's very generally speaking, but that's just kind of one aspect. How does a company acquire a public company? Do they just buy up all the shares? No, not exactly the case. So pretty much, they usually negotiate with the board of directors and management. It could be a situation, I guess, where they start buying shares, but usually, it's some kind of negotiation. So if they wanted to buy Newegg, they might see the price, might look at the valuation, and be like, all right, listen, we're interested in buying the company at $1.10 a share. And then when that news broke, like if it was official, then Newegg stock would jump to 110 and probably just trade pretty much flat until the acquisition closed. So it's pretty much like they make an offer. I mean, again, it's just a random example. I don't necessarily think they're buying Newegg right now, especially looking at the market cap. I haven't even looked at Newegg's numbers. Like I'm just throwing it out there, right? I'm not saying it's like something that's very likely to happen or anything of that nature. All right, friends, let's get those likes up. Yes, sir. Anthony G, thanks for being here. Appreciate you saying that. If only Stream was a public company. Yeah, no, invest in Tetron. I'm gonna go in public tomorrow. No, I'm just kidding. But oh, Steam. I just realized I misread that. But yeah, no, if Steam was public, I feel like maybe that's something they invest in. But I don't know. Depends what the numbers are, right? Since it's public, like we don't know the numbers, so I'm sure you could look up like what's the valuation of Steam. But I wish GameStop stores were bigger in size. It's just so small. If they add more products, wouldn't they have to make the store bigger? Yeah, howdy in some cases. Although I think it's more of the case when I say add product, like you subtract other products don't work. Like things come and go. Some things will sell more, and then over time they'll start to sell less, and you kind of move on from it. So I think you have to just you can only have like X amount of products, right? Whatever that is for whatever particular store. You have to carefully select, and that's where you use your analytics and you look at the trends and etc. Like all that information, and that's where you make those kind of decisions. Damn, so dehydrated today. Excuse me. But pretty much, in terms of the store size, I like the idea of it being bigger. Like just thinking about it initially, but then when I think about it more, you need more employees and there's more overhead costs, and that kind of goes against, excuse me, SG&A. So it's a situation where you want to keep SG&A lower. Although I feel like when you look at the Milan, Italy store, that's more of the store type of store they should open if they go bigger, where it's a lot of customer experience. It's very flashy. Like if it's in a big popular area with a lot of foot traffic, where maybe you're passing by, whether it's a tourist or a localist, and you're like, I gotta check out the new GameStop. Like it just looks cool. Like let me pop in there, and then they wind up buying something, and that's also kind of how you bring in new customers, revive the brand a little bit more, so to speak. So if they do go bigger, I think it definitely has to be more like that Milan, Italy store. And I am curious if they are going to open any more stores like that. Like I haven't really seen anything. If any of you have, definitely let me know. But it seems like that was kind of just like a pilot store. And just with the nature of how they done things, it seems like little by little, like they want to get the information and then make the next step, then make the next decision. Like they're not in a rush. And that's where a lot of the bears say, oh, GameStop, they haven't done anything. It's been 3 years. Like, nothing's happened. Like, why do you still care about this company? To me, I understand it's a slow process, and like I'm okay with that. And again, that's why I say GameStop's not for everyone. Where I see it as a situation where it's just a slow and steady process, but I believe in the people pushing that process forward, and I feel like we're starting to see the actual shift. Like I've referenced this a couple times, but in its CNBC thing they made called like Dumb Money. No, that was the movie. What was the CNBC thing they made about Ryan Cohen? Like something meme investor. I don't know, but they made some kind of like hit piece, like documentary style thing, right? With all like the classic CNBC people, that Andrew guy, Melissa Lee, all of them, right? And they're sharing their opinion and just going through this whole timeline of Ryan Cohen as a meme investor. Initially, it's about the whole situation with GameStop. That's kind of the first part of it. And then the second part of it moves into, oh, well, he misled everyone with Bed Bath and Beyond and he screwed all these people. You know, it kind of makes people make me question, you know, his power, you know, that he's abusing as like a meme lord, or just like the stupidest stuff, right? But the one good piece of information I got out of that, I regretted watching it. It's a waste of time. I wouldn't bother. But the one good piece of information I got is that Larry Chang was on there as a feature, and he basically said, okay, it's not like turning around a car where you just do a K turn. It's like turning around an entire ship when you're trying to turn around a company. It's a very difficult, slow process. And their process from the beginning has been slow and steady to just figure things out little by little instead of aggressively trying to do a lot. Like the NFT marketplace didn't work out. Like that's definitely unfortunate. But when they looked at regulatory scrutiny being an issue and possibly getting interfering with their cost cutting, I think that's where they kind of decided, like, okay, we can't be involved in this, because if there is any situation where they get involved in a lawsuit simply because they have the GameStop wallet or GameStop NFT marketplace, that's horrible for the business. And if you do believe the company's under attack, I would think, you know, that would make it even more so likely, like another avenue, because you see like the Ethereum founder Vitalik, whatever his name is literally being investigated right now, I'm pretty sure. And you see all this weird stuff going on in Solana, and you see Congress write, I believe it was Congress, that there should be no more ETFs after the Bitcoin ETF. Like, only approve the Bitcoin. Don't do any more crypto ETFs. Like, it's too chaotic. Something like that. So, when you run into situations like that, you have to pivot. And all these small things they're doing, such as adding like Ubic as a part of what they're doing as like internal analytics, I really think it goes a long way over time. And that's part of the process. And again, I understand it's not flashy, it's not quick, it's not necessarily what everyone wants in an investment, but to me, I think it's just an epic journey, and I'd like to document it because why not? It's something I follow. There's a lot of people that keep an eye on GameStop, so we'll just talk about it, right? And then you guys come hang out in the chat, share your opinions. Sometimes people say things, and I'm like, damn, yeah, you know, I didn't really think about it like that. Or you just have to hear something in a certain type of way, and it kind of like opens up your mind more, if that makes sense. I don't know if that's the best explanation, but the more perspectives you hear, or I feel like at least the more perspectives I hear on different things, it just makes me more like self-aware and better able to analyze things. And I feel like we live in a world now where it's like, oh, you shouldn't, you know, argue with people, or like you're either like an arguer or you don't, kind of, where it's hard to have any like civil debates anymore. But I, you know, like that's why I don't mind like haters coming and like, oh, this or that, and I'm like, okay, well, let me think about that, like try and see their perspective of it, and dismiss because I don't believe it, or think, okay, you know, sure, there's a possibility, like whatever the case is, right? Just always trying to keep it real, like honest. Like I find that very important. Like I really, really do try and stick to that. Do you know why revenue is coming in lower as of recent for GameStop? Estimates are also lower from a year ago. So, Howdy, I think it's a little bit of a situation where some stores are closing and that does hurt them. And I really think that's where it kind of comes from. I'm not sure about same store revenue, like how it's looking like year over year. I don't think they have that particular information in the 10K. But I look at it as, you know, certain stores are closing. Like each year they've closed like a few stores, and it's enough to kind of decrease revenue. But I feel like revenue's kind of flat right now. So if we do pull up the revenue here, though, last year it was 2.2. The year before it was 2.2. So I'd really like to see it there again. Although I see what you're saying, where if you look at Q3 2023 versus 2022, there was a pretty significant drop off. Q2 was improved year over year, and then Q1 also a drop off. So with Q4 this year, I do see it being just as strong, because I feel like economy as a whole and just like consumer spending was pretty strong this Christmas compared to the previous one. Although I feel like the previous one, yeah, I mean, 2022 was like kind of a rough year for the market, and I mean, the market's not like the economy, right? But I'm kind of just throwing like general information out. The truth is, like, I won't know until the number comes out. Like, I'm gonna make an estimate, but I don't see a situation where they close so many stores that revenue is significantly falling off. So I see it going sideways this quarter. And yes, year over year it'll be slightly down, but I think that's just the few stores that are closing down. And maybe it's some situations where just not as much is selling or not as much product was available. But I definitely think, they have to push towards now in 2024, revenue has to increase year over year. Like, I'm not saying, oh yeah, like it's no big deal, like revenue keep going down. I just think the bottom line is the most important, and that's definitely like the main thing they're focused on. But with the top line, like that has to come into focus now. Like if you've got the bottom line under control at it and the core of the business, now you got to focus on pushing the top line. But I feel like you build off what you've established in terms of being able to create a net profit overall, and then you push forward, and anything you implement and do next that moves up the top line, but also the bottom line is going to move up with it, right? That's kind of my perspective, and that's how I sort of see it. And obviously, that's all just words. Like, it comes down to execution. So we'll see if they start to execute on that in 2024 and beyond. Why GME trading so flat? Maybe all the people took profit after yesterday. I'm John Lacey. There's always traders out there. So that could be the case. It is a little bit odd. I thought there'd be more price action today. It's not a terrible question. But, oh, funny you say that. Look what we have here all of a sudden. So a little bit of a move. But yeah, I mean, this morning we had a little bit of price action, and then it's kind of trailed off. It might move a little bit. I feel like coming into earnings here, we're getting about an hour and 40 minutes till the bell. And then probably the earnings will come out a few minutes after that. Looking at roughly an hour and 45 minutes or so, about 105 minutes till the official GameStop earnings. But it is what it is with the price action. Like, you're never truly gonna know. Like, it's gonna move up, down, left, right, sideways, circles. So it, maybe there's just a lot of people piling in yesterday. There could be all kinds of reasons, right? But that's also like just from how I'm talking about it, right? I think you can kind of tell I'm not really a short-term guy because I just like to look at fundamentals and what the company's actually doing and where things are going in the long term. I feel like the short term just has too much uncertainty for me, and that's just me. There's definitely people who trade and make a lot of money, and there's also those who trade and lose a lot of money, right? So for me, just trading really isn't it. There's very, very rare occasions where I might do something small. So also, it's easy to say this perspective in terms of holding GameStop because I've held it for several years now, where I'm not really in a rush, to do anything. And pretty much whatever happens after hours, like, it doesn't matter. I'm not really selling any shares tomorrow, like, literally no matter what happens, unless suddenly they just spent all their cash on a meme coin that went to zero, right? Something like that, which I do not think that will be the case. And I think there'd be a lot of lawsuits if that happened, right? But do you know why revenues come in as low as the K-Stop? Estimates are also low, or will Ryan Cohen's investments be showing today? We'll see. That's a good question. I think maybe is the answer, but also maybe not because maybe he didn't invest in anything yet, right? I feel like it was just authorized. This is the first quarter where we might see it, and it's 10K, so maybe we'll get a little more official language on it somewhere in the 10K. But I feel like right now, as I was kind of saying before, it might be nothing as the move, right? And as I was pulling up on the poll here between buyback shares and issue dividend, some people said other options, but a lot of people just said none. And then Prime said cash is king during economic downturns. It's not time yet. Have the power to invest or catch. Would rather see this. Neither. I'd like to see them invest in 1 billion in something exciting. So I think that does make the most sense to put in something, but you don't want to rush. So I feel like if there's nothing that's been fond for Ryan Cohen is fond of at this moment in time, like, he's not gonna jump the gun and buy it just out of like FOMO, right? So it could be a situation where we need a market downturn and asset valuations or a particular asset's valuation to fall before he actually pulls the trigger on that. So at least right now, on their cash and cash equivalents and marketable securities, they're able to earn that interest, right? Probably roughly 5% or so for the time being where interest rates are at. But I do understand the perspective that money's inflating away faster, or it's losing purchasing power at a greater amount than the current interest rate, right? So if that's the case, they do have to execute with the cash at some point or another. But at the same time, they can hold off a little bit because at least they're earning that high interest and just accumulating more and waiting for the right opportunity. So when the right opportunity comes, it might be a situation where the market has to fall a little bit, but we'll see. We'll definitely see. There's so many X factors, and today will just be nice to see like an update as to what's kind of going on as of late. Although I feel like it's good to temper expectations and not expect too much. Yeah, I think it's probably almost about time to start doing estimates. So I really would like to see like revenue in line from last year, and then we'll do some calculations on SG&A. So let's go half and half. For revenue, I think we're gonna say it went from 2.254 billion to 2.227 billion the next year, so slightly less, very slight amount, about 0.3 billion, so about what, 30 million this year. I'm gonna say it's pretty much in line. I'm gonna estimate two, and then what do the analysts have? 2.05. Let's see how many leases are up this year, or closures. In pursuit of our profitability, we seek to improve efficiency and effectiveness of operations across the organization globally. While we expect our intense focus on expense reductions to yield decreases in SG&A expenses, we continue to explore strategic options which may include further store closings and exiting unprofitable businesses. As a result of these actions, we have incurred and may continue to incur severance, store closure, and other related expenses. Yeah, so that's a great note right there, especially that last sentence, because as I was mentioning before about the York, Pennsylvania distribution center that's being wound down, there's a warn notice put out about that. Pretty much, it's just like a notice that either a large majority or all employees put out like in the state that like put out to like a state website basically saying like they're going to be let go, and that was put out a while ago. So that's how that information came out. And with that, we'll probably see it on the 10K like further explained, and that's another cost cutting measure. It doesn't necessarily even show up right away. Like we're going to see it more in 2024's numbers, and even like late 2024, early 2025, because it's kind of winding down right now. I believe this is technically the last quarter it's open. But pretty much it's a situation where there might be severance and store closure costs related. And last quarter, GameStop recognized like there's small things like this, right? Like they recognize a one-time profit on some land that was sold in Europe. It wasn't too much. I think it was like 6 or 7 million, something like that. But pretty much the value it was like on their balance sheet, they were able to sell it for more. So that was like a slight increase. It's just small stuff like that that's kind of taking place. And then from 2022 to 2023, they went from 4,573 stores to 4,413 stores. So they had 8 total openings and 168 closures. So let's see. Net, that's 160 less stores. So how many? 13 divided by 168. Oh no, it would be. Let's clear this. 160 divided by 4413. So they closed about 3.6% of stores last time, and then year over year. Put that as a side note. 2023 or 2022 to 2023. Oh my goodness. Why can't I type? 3.67 6% or 160 net stores closed. And with that, let's look at the revenue. So, or was that? So that was from 21 to 22. I'm sorry. And then so we'd have to look at from 21 to 2022. The revenue. So they closed stores, but the revenue decreased only slightly, like not a 3% amount from what it looks like here. So that's an encouraging sign. And I'm kind of just talking out loud as I'm thinking through like how I exactly want to place my estimate. You know, not that it really truly matters because the earnings will come out in an hour and a half, but I just want to have an official like estimate to look back on. So I'm kind of just thinking out loud here. Net loss 5.3. And if we looked at, yeah, this is the most recent quarterly report. Anything about closures? I see the 10K has way more information. See nothing about store closures. So we're gonna get a lot to read the coming streams. So definitely stay tuned. I'm trying to get back on a schedule, maybe like Wednesdays or something like that. But so 3.6% of stores were closed year over year. You know, maybe we see that number again, and it would be a little bit less than 160, right? You know, just as a little side note there. But with revenue, I'm gonna say 2.200 billion. We'll say 6. Okay, 2.26. That's gonna be my estimate. Or sorry, 0.26. Yes, I'm gonna say a slight decline because I'm estimating that some stores are starting to be closed. And also I see it as a factor where they're focusing on being profitable. So there might be like a few items less that they were selling that they really weren't turning a profit on that always wound up on clearance. So, you know, these are very specific examples, but of course, I'm not giving financial advice, right? I'm just ballparking numbers here because why not? And then I'm getting them rolling them on the bottom of the screen in a second or so. So with EPS, I'm going to stick to my 40 number. I do like that. Did I ever make the EPS chart yet? The margins. I guess we could estimate margins as well. Throw that in here. Gross margin, net margin. So net income, I'm going to estimate if it was 40 cents and it's about 304 million shares, what would that come out to? Or about 306 million. About 122. So it is a pretty large number. But I do expect it to be pretty good. Let's see the official shares outstanding. So 305.3 times, let's say 39 cents. 119. All right, I'm going to say, I think more like 110. I think that's going to be my guesstimation. So if we had 100, 0.37 times 305.3, 112. All right, so I think 0.36 times 305.3. I like that. I think that's what I'm going to go with. Because I could see that being the case. You know, I was thinking maybe more like 40, but when I translate the EPS to actual net income, I'm like, maybe that's going to be a little bit tough, but I feel like they really did cut a lot this year. So at the same time, I already improved 200 million year over year. About a 90 million improvement here, 100 million here, 100 million here. So maybe I'm being too conservative here. I should be a little more aggressive with my estimate. I don't know. Do you guys have any particular estimates? You could definitely let me know in the chat. I mean, again, why not estimate, right? Like it doesn't matter the actual report's coming out, but like just like throwing some estimations in there. But Tetron doing great today. Hit the like button, everyone. Thank you, Scott. I appreciate that. Just spewing. It's crazy doing a stream during the day. Like it feels so strange. It feels like I'm like out of place or something. But I really do appreciate everyone tuning in, and especially anyone watching it back. I appreciate you as well. Tetron, happy earnings, everyone. Platinum, good to see you. Thanks for popping in. I appreciate you. Hey, Fresh Maker. All right, now it's really a party. Now everyone's starting to come in. We're only 90 minutes away, so we are closing in on the earnings report in the very near future. But I'm getting to my estimates here as you guys are joining, and I'm thinking, I don't know about you guys with DPS, but I'm thinking maybe like 40 cents. I should just stick with what I had. I mean, that's what I had put out there previously, and if you look up here, I put 40 cents as of 3-8, and that was before they even said the official earnings date, and I was just starting to think about it. But 40 cents times 305, what was it? Get the exact number, 0.3. Get a vast out of here. Okay, 122.12. You know what? One lower. We're going to go 39. Slight revision. A slight revision. So 39 times 305.3. Okay. Oh, this should be here. And then this should be 119.06 or round up 07. Then margins. Guess we got to get to that on here. Margins, where are you at? Almost there. Oh, wait a minute. Come on now. Almost. Okay. There we go. Finally got to it. So this is by region. Like definitely this is going to be something else to look at on the 10K because it kind of gives you an idea of how the whole year went for each particular region and where they might have to get out more stores, potentially look to a big city to open another Milan, Italy type store because from what I can tell, that's doing well. So maybe we'll see something like that, but I would be interested, I'd understand GameStop's definitely quieter and I don't expect them to say too much, but I would be interested to hear about how the pilot has gone in the Milan, Italy store. Are we going to see more stores like that where it's kind of like like experience focused where like you go in, like you can like try VR games, stuff like that from what I understand on one floor. Another floor is kind of like a main GameStop level. Then the third floor is like puzzle games, like puzzles and like board games, stuff for kids, things of that nature, like kind of more collectible stuff. A little bit of mix all that. So I would be interested to see, is there going to be another store like that, and how has that test kind of gone for them, and like what kind of feedback have they gotten? Because I feel like if you put it in major cities, it's kind of like, oh, like this is like a next gen like GameStop store. Like I've heard about this. Like whether you live there or you go to visit that city, like you walk by and you're like, oh, okay. Like I'm like, well, I'm here. Like I just want to check it out. And then they might wind up buying something, or they're once were negative about GameStop and say, all right, let me just look at it. And like, all right, this is actually pretty cool. And like, maybe they're a little bit more positive, right? And one of those people, as I was saying before, that had a bad experience in like 2018 are like, oh, I'll never shop there again. They're so ridiculous. Oh my God, right? Like, there's always going to be some of those, but Tetron doing great today. Yes, sir. Hey, hey, hey. 42 cents. They will find a way. I like that. Sticks or statistics. I see what you did there. Yeah, no, 42 cents. I could definitely see that happening. Leveled up to an XXX holder. Let's fucking go GameStop. Yes, sir, dude. Congrats. Love to see it. Just before earnings, right? I see you're buying in for this little jump here. Or maybe Freshmaker. This is all your buy volume, just pushing it higher. But nah, I'm just kidding. But yeah, I mean, I think I'm gonna. We'll do 39 cents. I'm gonna leave it at 39 cents. I'm not gonna adjust it anymore. Did a slight correction or updated analysis, we could say, internally at Tetron. Spoke with my representatives over here. Yes, yes, yes. And 39 cents. So slight little change. But in terms of margins, I can look at them here. Let's get this out of the way. I should do this more like Neat. Okay, that looks way better. Well, just as I had it. Okay. So margins have definitely improved this year. That's definitely been, a topic of focus and something that I've been saying, definitely other individuals following GameStop and speaking about GameStop are saying. So what will this year's margin look like? Last year on the bottom line for Q4, it was 2.2%. I could see that being improved this year. And with gross margin, I see it, generally gross margin is a little bit lower in Q4. If you look historically, 2019 was a little bit of an anomaly, but they are a little bit spread out. So like not always the case, but definitely 2021, it was like exceptionally low. So I definitely am looking for low 20s. Like maybe we'll see, and maybe I'm going to adjust these, right? Because then after I put out all these numbers, I'm going to try and put them all together and see like, does it like paint a picture that makes sense, right? Like, I guess I should have maybe did this more so in advance. It'd be easier to like just speak about my whole thought process, but you guys are just getting the live thought process today because why not? And then the bottom line is looking for 119 million 39 cents. So what would 119, about 5% of it, or about like 1/20th. See the bottom line margin being, let's say 4.1%. And then what would that make SG&A? And we have to try and kind of compare these numbers to last year's numbers. Okay, so for this, we're going to look at the actual earnings release so we can get particularly Q4. Okay. Just gotta, oh my god, this thing's confusing. Okay, good enough. Just while we look here, so last year, gross profit was 22.5. I think gross profit was 499, 2.2. SG&A was 499. Such a large difference from the previous year. If I want to look back here. Yeah, very large swing. I didn't even realize that. Q4. So I'm gonna say, I think I should have to pick a number. I'm definitely dragging this out way too much. But with SG&A, let's say it's, let's say like 410 and see how that works out as a rough estimate to start out. Or say what percentage would that be? Definitely should have did this in advance. Definitely should have did this in advance. Much tougher like on the spot because I'm just trying to like ballpark numbers and then make sure I keep showing stuff on the screen. Don't want to make it boring for you guys. I hate having the tendency where it's like I just keep yapping and I'm forgetting to like update what's on the screen. So I'm just doing terrible math here. Go into it, 18.5. I mean, that's kind of a low number, but let's just leave it for now as ballpark numbers, and we'll circle back right before the actual earnings. So these are the current estimates for Tetron, but could be subject to change one more time before the earnings report. We'll have to see. But let's get this back over here. Oh, damn, I don't know why I'm so dehydrated today. I had like a few sips of beer, and then all of a sudden, like, so dehydrated. And shout out to Morantz. This guy does like such long streams all the time, and like it's crazy. Like I respect it so much. Like I don't know, sometimes after a stream, like I just start feeling like burnt out a little bit at a certain point. Like obviously I'm good to go. About to go all the way till 5 o'clock today at least with GameStop's earnings coming out. But definitely shout out Marantz. Like he's been so good to me since the start of like everything I've done. So definitely gotta show this off real quick. Got a very special shirt right here from Marantz. I'm a proud owner of I think one of not too many Marantz Ranch shirts, the official Marantz Rants. Check it out if you haven't already. Subscribe. His tune is so catchy too. It's like "Welcome to Marantz Rants." Catchy. I'm not gonna try and sing it because I can't be singing like that. But let me know what you guys think of these numbers. I don't know. Maybe just kind of but I don't know. I just feel like Q4 is one of the most difficult ones to predict because there's just holidays and it's pretty different in terms of the other 3 quarters of the year, and it's such a major part of GameStop's business model, and for a lot of other companies, that are in the same general sector as them. So we'll see. I'm gonna leave these as like the ballpark numbers for now, but we'll see if maybe we want to change them one more time before the earnings. And again, like take it with a grain of salt. Don't be like, oh my god, like like it has if it's not that, like this guy is the biggest idiot. Like, sure, I mean you can think that. But my point is like just throwing numbers out there, just kind of predicting. And one quick thing I do want to say, and I meant to say this towards the beginning of the stream, but this is the person I was referencing last night for anyone that was here. It was like, oh, somebody commented about like Solana GME coin on my post. Like, it's so ridiculous. Would love to see it get flipped by GME on Solana. Like, Bobcat Crypto, Bobcat Degen. GME Chad Degen Crypto Retard. Jeets never prosper. I like the coin, bro. Safe Moon Survivor. Show me only the dankest shitters only. So when you see accounts like this, I just personally think like if I had something against GameStop and I wanted to come at them, I would set out an army of bots to pump a BS coin with the same name, put GME in my bio, make it seem like I'm a big GameStop person so that the outside perspective of somebody just looking at different people who talk about GameStop online then sees a lot of individuals like this and thinks, oh, well, these are all a bunch of idiots that are invested in GameStop. I really think it's like accounts like this that are set up to do that. I don't know if there's incentivized in some shape or form, or some person or group of people or institutions have something against GameStop where they're setting out bots to do that, right? Like the M1 Finance thing I kind of referenced the other day. But even if not, right, like individuals, like why do they feel the need to do this so much so? And then like just proudly say, oh yeah, like crypto retard. It's like there's a lot of people who are invested in GameStop that do have good information and speak intelligently about it. But there's also like a ton that just I would say are not even actual real GameStop investors most of the time, like Bobcat Crypto or Bobcat Degen, where they're just like, oh yeah, like crypto coins, like just kind of trying to ride the hype, so to speak, or like the fact that a lot of people talk about GameStop, trying to like utilize that in their own way and kind of spin it. So, long story short, don't get scammed by this baloney. Like it's complete nonsense. Let's check on the stock. A little bit of a move. This isn't updating here. I'm gonna have to refresh, but slightly green on the day now. I do have to say I'm pretty surprised there wasn't more price action. But at the same time, like it doesn't really matter. Like whatever happens right now is not going to impact anything that happens for me tomorrow. Like in terms of action I'm going to take. Like if anything, I'm going to buy a little bit more. But I think I'll probably just be holding for right now. That's where I'm at. I'm not interested in trading. That's just not what I do. So we'll see. But whatever we see, like I'll just look at the numbers. That's mostly what I'll be looking at. But of course, I'll look at the stock price and see what's going on. But mostly focus on the numbers. And as a quick side thing, I meant to bring this up on last night's stream, but this account Chaos, I believe this was formerly PWN something, something, something. I don't know what her name was, but I'm pretty sure this is her now in a new account. But regardless, when supposed outlier behaviors repeat so much that they can be confidently modeled, they defy their namesake of improbabilities. So I guess it's pretty much around the same time of each year, like when you're looking to see 2013, 14, all the way to 2020, and all these dates are like nearly the same time, but I guess you have leap years and situations where there's holidays on certain days and that impacts like the amount of actual trading days in between. So I think that's why the numbers aren't exactly the same. But it is interesting around these time periods. Like if you look at GameStop's chart, like it does kind of always tend to bounce around that time. So I don't know. I thought it was like an interesting thing to share. It doesn't, necessarily mean anything, but I did find it pretty interesting. So start kind of go pre 2020. So let's just look at some random data. 2016 1-12. Okay, it's right around here. The jump starts, and then 328. It's right in here. 628 or 620, or sorry, 826. I guess it's always where there's a major move down, because this was the major move down here. But I thought this was like, maybe I'm confusing this with something else, or it was something with cycles, right? I know there used to be like a lot of like patterns if you look back on GameStop stock in some situations, where some people would even argue like this was a pattern, like these two. Like I don't know about that. Like it goes back all the way until this point. Like if that's the case, like that's pretty wild. So I'm not exactly necessarily sure about that, but definitely, there's and I'm not the one to talk about this, so like that's why I'm kind of going off topic here from what I normally talk about, where there's definitely some strange tendencies with the stock that we see in terms of how it trades. Like it does seem to always have like a very large day out of nowhere. Like today, um, not too much of a move after yesterday was a fairly large move out of nowhere. And then last earnings report, we got a fairly large move during earnings and then period after. Back in early 2023, just a large 1 day move, little decline, little run, back to decline. So it seems to kind of do run, decline, long, steep decline, run, decline, run, decline. Again, I'm not the heavy chart analyzer, but you just see like these certain tendencies with the stock. And I'm not saying like it's, oh, this very particular thing, or like you can identify some specific pattern, and maybe again other individuals can, but I'm just saying there's definitely like interesting patterns it trades into, and it kind of seems like if yesterday's candle was that indicator that maybe these next couple days are going to be fairly large, and then it will dip down, dip back near the peak of whatever height it touches today or tomorrow, or whatever the case is, or after hours today or slash tomorrow, and then maybe it goes back into a decline, right? But then what breaks that cycle, I think, is them being profitable and just making the right decisions. But exactly when that cycle's broken, I couldn't tell you, and I feel like nobody truly can, because it comes down to them executing, but then also there's a lot of other like market mechanics at play. So them executing just drives them forward, and at some point or another, like the market will have to catch up. And if they're making the right decisions, like the company will be worth more, and it can't be ignored forever. Like that's simply how I look at it. And I'm definitely not going to ignore it, and I feel like I have the advantage of getting in now before it does truly like go to what I believe it's worth in the long term. And I think it has to build into its valuation that I believe it's worth long term. It's kind of like how like I follow like sports, right? And like I'm a big hockey guy, and they say a lot of times like, oh, you want to sign a guy after like his rookie deal. If you see him like on an upward trajectory, you want to sign him in, get him locked in at a certain salary for like 5 years. So it's like if he gets better, like it's gonna be like, oh my god, I can't believe we're only paying him 6 million. Like obviously 6 million sounds a lot, but for hockey, if they're one of the best players, they're like up there 10, 11, getting near 12 million. If they're like uh, Matthews level good, or McDavid level good, right? Or Draisaitl level good. But if you get locked in at like a lower price, like Jack Hughes on the Devils, like just a random example, then it's like better for the team because they have a salary cap. So it's like they got someone of great value at a lower price, so to speak. I know it's kind of like a weird example maybe if you don't follow like sports contracts, but that's pretty much kind of how I look at GameStop, where it's like gonna be worth more in the future, and like they're gonna have to build into that value and grow into it, and it's gonna take time, and I'm okay with that. But I do believe in them to get there. And of course, talk is cheap. It takes money to buy whiskey, so we'll see what the execution looks like. And I'm excited for an update, honestly, because that's the most exciting thing to me about an earnings report is you can see the latest. That's what's happening with the company. And especially in this case, you have a 10K being filed. Won't necessarily be today. Probably will be tomorrow, I believe. But usually a 10K, right, is about 31 pages. 10K is about 92. So you get like way more information there. Just leveled up. That's cool. You can sing it when we move to plus 30% after hours. Yeah, Fresh Maker. If we go plus 30% after hours, I'll be like that guy. It's like the guy in like the robe, like with the crazy music, like you guys know what I'm talking about. It's like a classic meme. I think Whoosh posted it today for like earnings, like GameStop earnings day. Everyone get up, something like that. Whoosh has always got funny tweets. He's like the GameStop guy who just tweets kind of like random stuff people are thinking. Like, I don't know. Follow him if you don't on X/Twitter. He's an interesting dude. If we, you can't really go back into the old chart because this was a while where we made huge losses every quarter. This will change now, in my opinion. Very good point. Uh, Michael Venturi, hey Tetron, came here to say what's up and keep it up. You're doing great. Thank you very much. Thank you for popping in. Appreciate you stopping by. Only 1 hour to earnings approximately, so that's definitely exciting. It's a rare Tetron day stream, so it's definitely nice to see some new faces in the chat and just people popping in that might watch some of my stuff or be aware of who I am, but don't necessarily like go on YouTube at night or whatever. I don't know, whatever everyone's schedule is, right? Like everyone's in different countries too. Not everybody's in the U.S. like me, or in the same even region of the U.S. like me, right? So everyone's on like different time frames. So it's cool to be streaming at a different time where it's like there's some different people that wouldn't normally be in the live chat. So, but at the same time, got some people who are also usually in the live chat popping in. So I appreciate that as well. And I remember when I like would work. It sounds so stupid saying. So I remember when I would work on days GameStop's reporting earnings, I'd be so antsy. But the past, I think it's the third one in a row where I've taken the whole day off, and I'm like, you know what? It's GameStop earnings. Like I'm taking the day off, and I had the time to use. And what tends to happen to me and other people at my company, and I'm sure plenty of other people, like you save your time forever, and then you wind up just using it on a day at the end of the year because you have to use it because you don't want to lose it, and it's like a day you don't really have anything planned. So I'm like, I kind of have something planned, something I want to do. Excuse me, might as well do it. So just take the day. Although it's a little bit odd working Monday and then just taking Tuesday off out of nowhere, right? And then going back like Wednesday, Thursday, Friday. Although it's definitely gonna break up the week. Like it's gonna feel like a brand new week tomorrow, and then it's gonna be a short week. 'Cause it's only gonna be like 3 days, right? So yeah, we're getting closer to that time, guys. We're definitely getting closer to that time. But no, I really appreciate everyone popping in. Drop a like if you can. I do appreciate that. And follow me on X/Twitter because that's where you'll definitely find like me updating on the stream, like what's happening. I like to do some write ups sometimes, sometimes just post some memes. That's pretty much all I put. And yeah, I like stock. I like Bitcoin. I like to talk about economics and the way everything's evolving. And just really the importance of owning assets. I think that's becoming incredibly important. That's something I talk to a lot of younger individuals about, like that are in my close to my age, and like, oh, like you're interested in stocks and money and finance. Like, what should I know? What should I do? And I'm like, just start to learn as much as you can. That's what I always kind of say, and then get in the habit of, or build the perspective of understanding that you want to acquire assets. Like cash is ever being created, and it's being created at a faster and faster rate. And with interest rates where they are now, it's going to cost even more as time goes on to continue to pay off old debt, and then at the same time you have to issue new debt because we have a deficit because we bring in less taxes than we spend every year. And I'm talking from US perspective, but as the dollar is just printed, it loses purchasing power. So you need assets in the long term, whether it's GameStop or Bitcoin or gold or whatever you believe in, right? I think it's the importance of understanding that I need to find something I believe in that can fully understand and be willing to hold, because it's an asset and you need to hold your value, right? And everyone's assets can be different, everyone's perspectives can be different, but there's a lot of young individuals and individuals in general that aren't necessarily young, right? That just don't really invest. Like, yeah, they have their 401k, but they don't really get involved in anything else. So they do like the bare minimum on their 401k, and they're kind of like, whatever. But it's like it's so important to have assets with what's happening right now, and there's no sign of it slowing down. And debt to GDP is already 120%, and it's not looking like it's getting any better. More and more spending bills just keep getting passed, and I'm kind of going on a whole rant about economics, but it's scary, like, because it takes time to really like show up in our lives, and I feel like it's starting to here in the US. And I know a lot of people like a little bit older than me, like moving back into their parents' house because they're saying it's just so difficult to like my one friend says like just existing costs so much money like you don't even realize, man. And I'm like, damn, yeah, like it's pretty nuts. Like it's crazy out there. And I feel like that's why I want to do this channel, talk about like the importance of owning assets and just trying to help people like understand basics. Not saying everyone has to invest in GameStop. Like I'm never ever gonna say that. GameStop's one of the main things I like to talk about, but also I talk about just economics and stocks as a whole. But yeah, we are officially closing in on about 1 hour. I would say about an hour and 5 minutes, 65 minutes at this point, because you're looking at a situation where probably a few minutes after the bell, the numbers usually come out. Price will get very volatile as soon as it closes, but we're getting there, guys. We're getting there. And definitely check this out if you guys haven't or you missed this before. Ubik, Yobik, however you say it. Pretty much modern operations, how unified tech and AI transform their frontline experience. Pretty much internal app for GameStop employees to use and just get the information they need. And I think that's going to go a long way for them and just get a better experience for the customer as a whole. So, of course, I don't know what the actual app looks like. I can only just read this here. I haven't used it, but I imagine it as a situation where, I mean, I'm reading about it, it tells you like you can look up, or like if I was a store manager in a store, you could be like, what is the return policy for a used game? And it will give you a response as if it's like ChatGPT. And I think that's just crazy. That's going to kind of become the normal for companies, right? Like when you're training, and also it says like training is part of what they're implementing as well. And if GameStop's doing it and this company's doing it, right, there has to be other companies. So it's kind of just really opening me to the perspective where it's like, damn, this is really going to come to normal where AI is really involved in everything. And there's going to be like a chat bot, like a really smart chat bot for when you're like learning stuff that'll be able to like answer for you or like, hey, I don't understand this aspect of it, can you clarify? And they're like, sure, and they'll break it down in simple terms like, and that's also why I think college is kind of on its way out, honestly, or like it's trending downwards where it's just becoming more expensive and less valuable. It seems like more companies are willing to hire non-college graduates. The only thing is you have to be, motivated and actually active in learning in other ways. So like a lot of people, like older people, right? Like just my parents or like grandparents think, well, of course you got to go to college and you're going to stop learning. But it's like people don't realize that are older, I feel like, that now you can learn anything online. Like it's just about the commitment and the actual want to do it. But you can learn it online for way cheaper than college. And you truly can become more educated, I believe, than a lot of situations in college because it's a lot of just baloney. I went there. Like a lot of people, just cheating. There's people, just doing like what's it called that makes you focus, like Adderall, like all kinds of like crazy stuff, and it's because and also like everyone's attention span is horrible and a lot of people like come out of it, I feel like, didn't really learn that much. Like, yeah, they partied a lot, but they spent all this money, got a piece of paper, and didn't learn a whole lot. So it's kind of crazy how that all goes, right? But it is what it is, right? I'm no scholar. I can't tell you whether to go to or not to go to college. But my point is, AI really is changing everything. Not just like that, but you can see it like starting to creep into all of our lives and in business, like seeing it in this situation. Like I'm sure there's many other companies that are doing similar things such as this. And again, like a bear could argue, oh, well, this is nothing like outstanding for GameStop. Like it's like everyone's doing it, as you're saying, Tetron. But I would say like that's where they're keeping up with the times, whereas they once weren't, and everything was underdeveloped. And that's one of the first things Ryan Cohen kind of mentioned in his letter, or first things he tackled in becoming like the leader of GameStop. When I say leader, he's like chairman of the board and CEO now, or pretty much, the captain of the ship, I should say. He was like, okay, everything's like outdated and not a good structure. Like we need to improve that. We need to modernize essentially. So just taking steps to use companies such as this one, I really think is important. And even like I was mentioning before, like on the credit card situation, which again, it's not like this groundbreaking thing, but they do have a credit card now. And next time I make a major purchase from GameStop, I do plan to open a card because I love the company. And just gotta be responsible with the credit card. I always describe a credit card like a knife. If you don't know how to use a knife and you're being an idiot with it, you're gonna hurt yourself. If you know how to use a knife, it's going to help you in the wild, maybe do some hunting. Not necessarily like that, but you're going to be able to cut your steak. Like, you can appropriately use it. A credit card's the same thing. You can appropriately use it to earn rewards, whether it's GameStop or a MasterCard or Visa, Chase, Wells Fargo, whoever it is, right? It's a tool because you can use it to earn cash back as long as you're paying it in full by the time it's the end of every single month, right? And it's the same with GameStop cards. So credit card's like a knife. You just gotta use it responsibly. If you use it irresponsibly, that's how you hurt yourself or hurt someone else, right? So if you use someone else's credit card using someone else's knife, you hurt them. You know what I mean? Like same sort of thing. But because yeah, it's pretty crazy to me. There's a lot of people I mean not a lot, but there's some people I know or like I know of someone who knows of someone situations too mixed in this, but that don't even have like any credit, like any credit card. Like finally, my cousin just got one recently. And I was like, bro, just get a credit card. What are you doing? Like, you gotta start building credit. Like, you're not an idiot. Like, you're responsible. Like, just whatever. Like, bro, just you gotta do it. You gotta start building credit, right? So it is kind of also astonishing to me, like seeing younger individuals and talking to people about money and finance. Like, it seems like there's a lot of people are like pretty interested in it, or like want absolutely nothing to do with it. Like, there's not a whole lot in between. Like, there definitely is far. There's definitely some in between, but not always the case. Jimmy on Soul, Matthew Mark. No, no, no. I cannot agree with that, my friend. Thank you for being here, but GME on Soul, not the way. GME stock. You can look at the fundamentals and you're not just purely speculating on a meme coin. So, and it seems like it's just trying to copy GameStop's name. So, I do not endorse the GME Soul token in any way. But if you're holding it, best of luck to you. That's all I can say. Come to GME and Solana. This can't be shut down. Mr. Zendi, not the way, man. Not for me, honestly. GME and Solana, let's go. GME and Solana is waiting for you guys. Oh, the gang is here. I see. We can win both. I don't know. Explain to me why we can win both though. Like I just don't really see that being the case. Ryan Cohen loves us. He's a G-Gen. He's not though. He's not. He's way more intelligent than that. Jimmy on Solana. Hey Noah, please ban these bots. These ain't bots. We all like the stock. I don't know if you like the stock, man. It seems like you like the Solana chain and the meme coins. What other meme coins you guys in? But nah, I'm telling you, GameStop stock is something completely different than Solana's GME token. And I do wish you the best of luck if you're in it, but just know like it's probably gonna get rugged. Like it's gonna get rugged. Like that's how these things go. Like I don't want you to lose money. Like Mr. James Rose, like I do not want you to lose your wealth, man. It's not worth it. I'm telling you, at any moment, anything could happen. Just trying to warn you, man. But wish you the best of luck. All right. Anyways, back to GameStop. So, GameStop stock, that is. So, yeah, I'm going to leave these. Okay, that makes more sense. So, leave these on the screen. I'll quickly update. We're going to officially put the numbers on the bottom. So, you guys are about to see the numbers on the bottom update in a moment. Gotta keep it official. They call me the referee. So you get the live change on the bottom feed. What do I have there? 2.206 billion. Earnings per share 39. I think we're locking it in 39. And maybe I'm being a little bit too modest with my estimate or a little too conservative, holding back a little bit. But I'm all right with it. It is what it is. I certainly want it to be better. Don't get me wrong. And then SG&A 410. Say 410. 410 flat. I think that's good. And then say 18.5% of revenue. And we'll see if that happens, right? Just throwing numbers out there. So again, do apologize if these wind up being like totally wrong, but you guys are definitely more than welcome to make your own estimates as well. And I actually do really encourage everyone to do that. And for any stock you invest in, right? I feel like it just kind of makes you more knowledgeable over time, and you just can kind of keep like competing against yourself, so to speak, and like improving your numbers. Not that like again it literally means anything, but I feel like it just keeps you more in touch and like engaged in things. So, all right, there we go. Boom. The earnings scroll has been updated. Speed it up a little bit. Yeah, finally learning how to use OBS better as well, guys. Like, it took me a long time, especially when I got this new desktop. I was like, oh my gosh, yo, like, how does all this shit work? Like, it was getting so confusing, but making it work, making it happen. GME unsold, no, no, no. TZ91, crazy talk, crazy. Telling you, GameStop stock, completely better story, completely better story. That you're asking to get hurt, man. I'm telling you, you're definitely asking to get hurt, and they're just leeching off the GameStop name. And with price to earnings, definitely getting an official number, right, on the bottom line, an official positive EPS. And then obviously the stock price will change. It's already changed since I wrote this as of March 8th. Then we'll be able to calculate in the future, like trailing and forward PE for GameStop. And then also, we can start to put some numbers together. Maybe I'll make some charts like this, price to sales. Definitely, if you guys ever have any ideas on how you think I can improve things, like always drop it in the chat or like shoot me a DM. Like I'm open to hear everything. Like I can't promise like I'm definitely going to use it or definitely, just see and listen to everything. But my point is like I'm always like open to like hear about things. So do appreciate anyone ever has any insight. And if you also want to visualize the margins, I think I mentioned this before. These websites are really good. Macro trends, yeah, macrotrends.net, income statement, balance sheet, cash flow, key ratios. So here they have it charted out in terms of gross margin, operating margin, and net margin. So you can see where it kind of was still falling off with Ryan Cohen's entry, and now really 2023 starting to look stronger again. And then, excuse me, same with the net margin, but it seems like net margin now, is about to outpace. And again, this goes to where they're focusing on the bottom line overall, where that number is just about to go over this break-even line here, this dotted line. So they're almost there, and we'll see if they get there today, right? Like it's not a guarantee. Like even analysts are pretty much estimating a net profitable year for the first time since 2017, but nothing's a lock, right? Like they still got to get there. So we'll see if they do it. And we're getting closer. We're getting closer. Only about 50 minutes to go at this point. Swap out back to display so you can bounce around. And do any of you guys have the GameStop credit card yet? I haven't seen too many details on it. I'll have to look into this on my own, but definitely like the design. GameStop Palp Rewards with the red. And I do like that they went mostly like the black and white logo now. And then, they still use the red on occasion, but I do definitely like their brand colors. Getting closer, guys. We're getting very close. Jimmy and Solana. No, no, no. Exit out. And then here's like actually surprisingly not too negative article. Expected to report a profitable Q4 with Wall Street anticipating an EPS of 30 cents while revenues are expected to decline by 8% to 2.05 billion. Potential surprises could arise from even more optimistic revenue figures influenced by growth of the video game industry in 2023 and GameStop positioning as a leading retailer. Other areas of interest include updates on the company's investment policy shift and the quarterly disclosure of shares registered with a transfer agent Computershare, which may impact GameStop share performance. Definitely curious about both of those things, especially with the investment policy. Maybe we'll get a little bit more language on that. When I say language, I mean language like in the 10K of specifically what might be done. Not necessarily, but we'll have to see. GameStop's quarter four earnings preview. GameStop retailer, video game retailer GameStop GME will report its Q4 and full year fiscal 2024 results today, March 26th, after closing bell. Expectations for another profitable quarter are high, with Wall Street anticipating EPS of 30 cents, which marks a substantial 84% increase compared to last year's period. However, revenues are expected to decline 8%. All right, same stuff. Surpasses or meets consensus estimates, it would signal the company's first annual net profit since 2018. I do apologize, I said 2017 before. I thought it was that, but I guess it was 2018 by just a little bit. This achievement underscores the significant efforts led by Ryan Cohen, who has focused on streamlining operations and cutting costs to achieve profitability. One key area to watch is selling general administrative expenses. Any earnings beat could be attributable to reductions in this area. For example, in October 22, GameStop reported SG&A of 401.8. A year later, under Ryan Cohen's management, figure decreased to 310.8, reflecting a focus on frugality and operational efficiency. I do have to say, this article is putting it pretty well. It's pretty basic, but it is pretty valid in the way they're saying it. Like, it's pretty straightforward. It's a surprising non-hit piece, put out by uh, financial media company, The Streets. I don't know too much about them, but I've seen a couple where they actually write some fair articles, but it's actually like a fair assessment, which is very hard to find these days with GameStop and the news in general. But in anticipation of Q4 earnings, GameStop shares surged by 15% during a trading session on March 25th. The increase brought the company's shares back above 15 levels, along with performance seen in early March. However, company shares will maintain a 9% year-to-date drop. That is true. So they do have to make up some ground in order to get up overall for the year. We'll see if they get there after hours. Maybe, maybe not. And no matter what the earnings is, just remember anything could happen with the stock price. That's the truth. Like, anything could happen. It could go up, down, left, right, sideways circles. It's fugazi, it's a wazi, it's woozy, right? But if you focus on the fundamentals, some point or another, the share price will catch up. As I mentioned in the previous article, there was significant activity in GMA options trains, out of the money calls, activity reflecting the history of the report. Yeah, definitely. There's always going to be people that play GameStop earnings. I've said it many times. That's definitely not going to be me. But I do understand. There's going to be people that play it, absolutely, and it does tend to be volatile around earnings. So if you're a trader, I feel like you're probably looking for GameStop's earnings as something to act upon, right? Where might surprises lie for GameStop? In my perspective, potential surprise could stem from more optimistic revenue figures for GameStop's Q4. Data from the U.S. video game industry shows growth from 56.6 billion to 57.2 billion in 2023, driven by a strong holiday season when console sales reached 7.91 billion. Yeah, so those are some pretty large numbers, about a zero point 0.6 increase. So probably just under 1% year-over-year growth. We'll see how much of GameStop captured of that. If they do come in with my revenue estimate, which is scrolling at some point on the bottom here, then it would definitely be taking a large chunk of that, so to speak, because they'll have improved. Analysts are estimating it to go down 8% revenue, but I don't think it's going to be too much lower. I think maybe I'm a little bit too optimistic. Like, if anything, with my estimates, I think I'm a little bit too optimistic on the top line, and then a little bit slightly pessimistic on the bottom line, because I put not 39 cents EPS, so then on the top line I have pretty much in line from last year, just like 1% decrease, whereas analysts have about an 8% decrease in revenue. But we'll see, right? We'll see in less than an hour who's right and who's wrong and who's closer, me or the analyst. But regardless, it won't matter. It'll matter what number comes out in the next hour or so. Executives at Circana, a company specializing in collecting online brick and mortar point of sale data, attribute this spike in video game sales to one of the best release slates in industry history. Yeah, definitely a lot of popular games came out in 2023. So that definitely would help the company overall and just driving more people to GameStop in general. With a 5% year over year drop in video games demand in 2022, the expectation is that it will rebound in 2023. Given its position as one of the country's leading video game retailers, the trend will likely positively influence GameStop's results. Considering that GameStop's hardware, software, and collectible segments will benefit from the favorable release slate in 2023, it's reasonable to anticipate figures surpassing the 2.22 billion reported in the previous holiday quarter. Therefore, it seems feasible for the company to report figures closer to 2.1 rather than 2.0 billion. So we'll see. So this article, the writer is a little bit more bullish on the top line than analysts, not as bullish as I. So maybe I'm a little bit too much up there. I'm on the higher end. This person's in the middle end. The analyst's on the lower end in terms of the three of us. So, other potential surprises. Last quarter, the major news centered on the company's shift in its investment policy, which granted CEO and largest shareholder Ryan Cohen authority to allocate GameStop's nearly $1 billion cash reserve toward equity investments instead of its core business. While this change doesn't undermine confidence in the company's ability to grow its existing operations, it does signal a potential shift in GameStop's future trajectory, with the company potentially expanding beyond brick and mortar stores and morphing into a holding company. So that's, more speculation. Is it going to be the Warren Buffett style move where he's just investing the company's capital? I think it would be kind of awesome, but like I don't think it's going to be this report, right? Like maybe we're going to get, I keep saying like more language, more clarity on like how this may be done, or like some expectations to be put in place, but at the same time, maybe not, maybe nothing at all, just like it officially being there. Like he can purchase shares authorized by the board. Done, right? Maybe it's something like that, but I feel like it's something that's not going to happen right away. Like, I think they're just going to be very patient unless there's some opportunity already out there. And that's why he needed to authorize it and then take action right away to hop on it while a valuation was beat down, or there was a buyout opportunity, right? That's about to be closed, something like that. Again, pure speculation, but we'll see. See, it's almost that time. Any updates on this matter could significantly impact GameStop's share performance post earnings release. I do agree with that. At the same time, though, it could be volatile, right? It could be very volatile negatively, positively, or both. We'll have to see. Another topic commanding attention from loyal GameStop retail shareholders is the quarterly disclosure of shares registered with Transfer Agent Computershare. The retail investor campaign promoting direct register system is shareholding has effectively locked away a considerable portion of GME shares from brokers, hindering their ability to loan them short sellers. We do know it's 25% as of the last filing. Again, we'll get an update today, but it's only slightly moved over the past like few quarters, right? Like very, very slight amount, like less than 1 million each time. So we'll see if there's anything major on that. I'm not expecting too much though. According to GameStop's third quarter Q3 filing, retail investors registered approximately 75.4 million shares, roughly 25% of the company's total shares with the transfer agent. These retail investors are theoretically less inclined to engage in frequent trading as DRS makes shares less accessible. Very true. I don't really know anybody that's gone to directly register their shares and said, oh, let me trade them in and out of DRS. It just doesn't really make sense. But what you see is towards the end of 2021, this idea became out there. Was people became educated on it, what it meant. Some chose to do it, some didn't. I don't judge anybody for doing either way. I personally have chosen to directly register a good amount of my shares, but I totally understand that's not for everybody, right? And I feel like I understand computer share, and I want that true share ownership. But at the same time, I totally respect everybody's decisions, right? But when you look at this chart, it is interesting. Like there's two perspectives where it was steadily increasing, and there was some expectations that by this time, the float was going to be locked, whatever. But it got to here and it kind of just tailed off, right? It's kind of just gone sideways, especially the last year. So, is there long-term holders who maybe got fed up and sold, and it was just a lot of people who were doing it in the beginning, and then it kind of just tailed off now? That's one theory. The other theory is, well, it's odd that it was steadily increasing, and then now suddenly it's just flat. The language changes a little bit in the 10K filing in terms of, and the 10Q filings in terms of whether it's held with the DTC, and then another one says like computer share. Like they just worded a little bit differently. It's like, why do they need to change the wording? Why did it suddenly stop moving? So, again, I like to leave it open for interpretation. You can think what you want of that information, but definitely always interesting to see what the number is. And maybe if they word it differently, right? And it's just worth analyzing, but not like overly thinking into it, if that sort of makes sense. If these figures are reported to be maintained or even increased, there may be a bullish reaction precise due to this factor. This could be reflecting the company's share price. Honestly, I'm not sure about that. I don't think that's really the main thing individuals are looking for. Disclaimer is not financial advice. The author may be long one or more stocks mentioned in this report. Also, the article may contain affiliate links. Partnership does not influence editorial content. Bernard Zambonin, co-producer of the Street's financial channels and holds researcher and operations manager position at DM Martin's Research. Additionally, he contributes articles to Seeking Alpha. So I do wonder if this guy, like, just the way he wrote this, like, he does seem in touch with what a lot of individual GameStop investors talk about online. So I do feel like he's low-key probably engaged potentially, or like definitely reading a lot about it. So I do give him credit. Like I think this is a fair article. Like I don't necessarily agree with everything, but it's like a rare, fair article for GameStop, not a complete bashing of the company. So, let's go back. Let's see. Oh man, we got all the Sol people still in the chat. How GME on Sol helps the stock. The more exposure on GME on Sol gets more narrative build, and we can almost win a war in pumping the price of both. Who can pump higher, memes versus stocks? Nah, James, that's not how you gotta look at it, man. I do not look like that. So better get some GME and Solana. We like the coin. No, no, no. Join GME Telegram. You'll see. Oh yeah, yeah. Hey man, some constructive criticism. Would be good to use some brighter colors against a black background on your charts. A bit hard to read on a small screen. Thank you. I'm gonna take that note down right now. I appreciate that. The thing is, from like, I started doing red and green because that's what my logo is. But maybe I should update my logo too because I'm trying to. Or I guess I should pull one of them up. Like I'm trying to keep the theme of the logo with it, but I guess it doesn't necessarily have to be that. But at the same time, you know, like maybe it's time to update my logo as well because I'm not like totally like married to the color scheme, so to speak. But I'm actually gonna take a picture of your comment so I don't forget. I do appreciate that though because it's really, you know, just like GameStop, I say GameStop, they gotta do the small things, right? Like so does Tetron, right? If I want to keep growing. So I appreciate that, Decor, and thanks for being here. We are no stock coin pumpers. Bring awareness to stock. Let's be friends. Nope. Sorry, James. Get in the block. Get in the boot. No, the only person you are helping is this coin creator, no one else. Exactly. You tell him, Freshmaker. Spitting facts in the chat as always. Think bigger, guys. A rising tide, life of all boats. We're in this together. GME on Soul. All right. As we get closer to earnings, that's enough of the GME on Soul. We're getting you're getting the mutes. Or oh wait, I gotta do it here. Did it on the wrong one. Put user in timeout. You can do that. That's funny. 24-hour timeout. I've never even done that yet. That's crazy. Let's see. Think bigger, guys. Nah, I'm good, Steve. That's it. Timeout for you. 24 hours. 24-hour suspension from the live stream. Lol, you're in timeout. This is so funny. It's like putting toddlers in timeout. It's crazy. Speculating with some dubious coin versus investing in a company is completely different. Not feeding the trolls bots anymore. Bye. Exactly. You're right. Goodbye. They were warned, Brett. You're right. I was like, you know what? I'm gonna keep it chill. They want to throw this nonsense in the chat. Let them hang out for a little bit. Let them hear some facts about the actual company. But I mean, you can still watch, guys. But you do have a 24-hour timeout. It's just funny. That's how they were in a timeout. But yeah, they were warned, exactly. Maybe a brighter green and red. Yeah, no, honestly, maybe a little more Christmas. Thank you, Noah, finally. I know, First Ranker, I was slacking. I was like, you know, just kind of leave them for now, you know, have some fun. Leave the GME soul people in there. But that's the first time they've really, like, come on my channel. So thanks for stopping by. That's all I could say. Fresh brew. But nah, honestly, I'm drinking this so slow it's starting to get warm. So I'm like, do I just dump it? Do I finish it? But dumping a beer is a crime. But at the same time, like, I'm kind of like barely even wanting it. Too busy yapping. But we're getting there, guys. We're about 35 minutes away from the market close. Let's check out the stock. Not doing too much. We had this little spike between like 2 and 2:30. Kind of dropped down. Nothing really doing since. I don't know about any of you guys, but as I've mentioned many times, I'm not doing any kind of options trades. To those that are, you know, I wish you the absolute most luck, but I think it's better to have the long-term perspective with GameStop because truly anything could happen in the short term. And I've said this a couple times already, but I want to say it again. Let this be your reminder that anything could happen, right? Anything could happen after hours. We could have amazing earnings across the board. Stock price gets killed. We could have meh earnings, stock price goes way up. We could have worse than expected earnings, stock price goes way up. We could have great earnings, the stock can go way up, right? There's all the possibilities out there. So just, excuse me, be mentally ready for anything, you know, whether you're invested or you're just trading, whatever it is, just be mentally ready. That's, I think, the best way to go about it, right? So we're almost there, and I'm excited to see what my estimates stack up to be against the actual numbers versus the analyst numbers. And more importantly, you know, I can just getting a better idea of where the company's at overall right now. And I'm excited to read the 10K and the upcoming streams as well, because it's just a lot of information in there. Like, I'm really going to try and go through and like mark up the 10K. I'm going to write that down. And then having it pre-prepared, like, failing to prepare is preparing to fail. That's just what they say, right? So I'm trying to get better at preparing stuff for streams, where if I prepare it, then it's easier to go through my notes, and like I can, like, if because I wrote the note, it'll remind me my initial thought process, and I'll be able to build on my initial thoughts, right? And sometimes you have to look at things too with like a fresh mind, right? Like how we perceive earnings as individuals, right, in this after hours is probably gonna be different than how you perceive it in the morning. Like you'll be like your emotions will feel different. That's what I mean. Like you'll maybe still kind of perceive it the same in terms of the numbers, but you'll be like either really excited or maybe really disappointed or really like whatever this after hours. But then tomorrow, depending on the stock price is moving too, you might feel even a little more excited, a little less excited. So it's just kind of important too to look at like whatever happens between today and tomorrow. Like you also then digest it, look at it again in a week, and you'll be able to just gain more perspective from looking at it with a fresh mind and just like a different time period where a little like you've had some time to sit on it, kind of, if that makes sense. And I feel like that's how it goes for me each time after. So I try not to get too intense in the moment, like no matter what happens. And again, it's easy to say that as a long-term investor. If you're short-term in any shape or form, then that's not really the perspective you're going to have, right? Or that's not really how you're going to think about it. But with a long-term perspective, like that's how I think about it. So Tetron to the moon, boys. Let's fucking go. Raven, thanks for popping by. Hope you're doing well, man. Yeah, no, it's could be where it's going. Maybe. We'll see. They turned off the buy button for GME stock. It's time to prosper the blockchain. GME Soul. Oh, Andrew. Oh no. You said the banned word for the day. GME Soul. GME Soul's the way. Just add James. I'm just gonna subtract James by giving him a timeout. It's crazy. That's what they call it. To the moon, boys. Let's fucking go. Yes, sir. Bro has to call us bots instead of actually realizing that you can't turn the buy button off for the blockchain. So Andrew, that's like the trend for you guys though. That's the idea that it's like, oh well, you can't turn the buy button off. I mean, but you could turn like the person who created the coin could just like rug pull it, and then you're pretty much not going to be able to buy it because it's going to be near worthless. So, but hate to do it to you, but I got to put you in a 24-hour timeout. You got a 24-hour chat suspension from the chat. Okay, Bob, get some rocks, please. Computer share, purple Tetron logo. LOL. Pret. Yeah, no, I like that. I thought maybe even completely rebranding different colors. Like, I don't even know why I chose red and green. It's mostly just because I just figured, like, so I'm editing this here. I'll just leave an infographic up, but I figured just like red and green is like markets, right? Things go up, things go down. So I just figured I'd do like red and green for the logo, but maybe we'll change it. I got to think about that a little bit more. But what time is the earnings call? James Bond, thanks for being here. But there's going to be no earnings today. I'm sorry, no earnings call today. There is earnings today right after the bell. But also, if you look at like, see, of course, now I have the wrong thing here. Back. So if you look at last year, right? Newsroom. Let's get all zoomed in. And they said release date for Q4, right? So this was the announcement in 2023 when they're okay, like it was early 2023. It was this time last year, about 380 days ago or so, right? March 8th, 2023. Said we're about to announce full year 2022 earnings. So about the same thing that's happening right now 1 year ago. And if you see, it says today announced that it will report fourth quarter and full year 2022 results after the market opens or closes on 21st. The company will host an investor conference call at 5 p.m. on the same day to review its results. The call and all supplemental information can be accessed on GameStop's investor relations website. So you see that right there, right? But then you see this earnings announced, and you've seen this in the last couple. Announces release date for fourth quarter and full year 2023 results. See, this year is March 12th instead of March 8th, a little bit later, but today announced it will report fourth quarter and full year 2023 results after the market closes on Tuesday, March 26th, 2024. So you notice there, no earnings call. So they've done that pretty much for the whole year. I think now it's been 4 full quarters. Let's see. Let's see when they announced. And Ryan Cohen's been CEO for almost a full year now. Damn, because it was or executive chairman since June 7th, and then and always the best place for your GameStop information. GameStop Investor Relations, guys. You just type in GameStop Investors Relations, it'll come up. You can find all this. Look through newsroom, SEC filing, context, corporate governance, or governance, yeah. But GameStop announced the selection of Ryan Cohen as Chief Executive Officer. So he became Executive Chairman June 7th. Then just a short while later, September 28th, becomes CEO. So this is really the first quarter we're getting reported where it's a full quarter where he's captain of the ship completely, where he's CEO, Executive Chairman, right? Because Q4 was November, like what we're about to see reported today, and for the full year, November, December, and January. So if he became CEO on September 28th, like he really only had the last couple days of September and October. So like basically 1/3 of Q3 as the CEO. So this is his first full quarter that's being reported where he's CEO. Not that, he's necessarily going to make this super dramatic impact right away by becoming CEO because he was already involved. So he's already been like steering the ship, but now he's even more hands-on since that time period, or since this date at least. And we'll see what more information we'll get on that, if any, right? Because again, as I mentioned before, like 10Qs, about 30 pages, 10K, about 92. 10K is always longer, has more information, more full year stuff, more stuff that they don't update on necessarily every quarter, just every year. But let's see, GameStop announces release date for third quarter fiscal 2023. So you see again, no mention of an earnings call. 2022. Or no, this is the actual results. Again, no mention of an earnings call. And then release date for Q1. So Q1 was the last time they had an earnings call. Although I believe this might have been the one where where was Matt Furlong fired or let go, whatever the situation was. But basically, I'm pretty sure Q1, someone could remind me, I'm pretty sure Q1 that the situation was he got let go a short while before that. So they came on, they were like, there's no conference call. Like they just said that after hours. Like they just did decide not to do it. Or maybe it was just after Q2. I'm losing track of the time on here. But the point is, no earnings call anytime in recent memory, and we won't be having one today. So it's really just about looking at the numbers, digesting those, and then also looking forward to the 10K and what we might see. I was going to say read the 10K, but 10K won't come out right away. It'll just be like the initial numbers. Like when you go to newsroom or SEC filings, or where was I before? Been all over now. Back. Yes, right here. We have it broken down by quarterly results. So what you'll see first come out today when this updates, like I'll be refreshing this in about 30 minutes or so, about 25 minutes away from the market close. GameStop doing a slight decline, now red on the day. Again, doesn't mean too much. It's really about the after hours. Although remember, whatever happens in the after hours doesn't necessarily determine what happens in the pre-market tomorrow, which doesn't necessarily determine what happens during the market tomorrow, right? So we got a long way to go, but definitely excited to see the numbers more than anything else. So having said all that, like what will come out first, like as we're refreshing, right? Trying to wait for it to come out, anxiously read it. You'll get the earnings release, which is like the overview, right? And like the general information. And then you get down here, you get the actual statements. And then that's pretty much it, right? But when the actual for 10Q comes out, that's where you get pretty much all the sim information, but then you also get like the table of contents, and you can also get like specific indications, right? Use of estimates, like specifically how they do that. More information on their cash equivalents and restricted cash. That's how I was able to learn, as mentioned before, that our cash equivalents on consolidated balance sheets are carried at fair value consistent primary of cash, money market funds, cash deposits with commercial banks, and highly rated direct short-term instruments with original maturity of 90 days or less. Restricted cash primarily of bank deposits that collateralize or obligations to vendors and landlords. So pretty much it tells you specifically what it means by cash and cash equivalents, whereas over here, like when you just get the earnings release, that's just the initial information. So we'll get the earnings release first, but the 10K will come out after. And then with the 10K, you know, it's a whole nother level of like information you're able to analyze, and you can just go line by line. Like obviously it takes very long, and not everyone's going to do that. I totally understand, but that's why I'm here, right? To do stuff like that and talk to you guys about it, get your opinions on it, share it with people who might not have seen it. And yeah, I like the stock. That's all I can really say. But let's see. Actually, make me chuckle. It's all sunshine until you realize some coin without a state backing it can be outlawed or not accept for payment from companies at a time. No value creation. Exactly, Decor. Exactly. Coins without use is just gambling. It's true. It's true, Decor. I really am just a Bitcoin guy personally. Like I believe in Ethereum a little bit, but with Bitcoin, I just believe in it so much more because it's a store of value. And I don't like. I'm not gonna go all on talking about Bitcoin right now, right? I'm not gonna say like Ethereum has no use cases. I think there's a lot that could be built on Ethereum and it's built to scale. But I'm talking about in terms of the coin itself and its value. Like I'm more of a Bitcoin guy than a crypto guy, but I do believe in blockchain technology a lot as a whole, especially Ethereum to build things on, especially involved with gaming and like Web3 gaming. So that's kind of my perspective on that real quick. But we want to know how many stores they closed in 2023. Yeah, Freshmaker. That's definitely like going to be an important factor. Let me. Ooh, wrong list here. Let me put that on here. Other things. Say store closures. We can throw that on the estimates or just kind of some thoughts. Maybe let's say like I don't know. I feel like they probably closed most unprofitable stores already, but there's just some off scenarios. I'm gonna say like 35 store closures. But then again, like where I could kind of counter that point, and again, something we don't really get an update on until it's the annual report, because see, this is a Q3 report, but if you look at like leases, right, like we don't get as much information. But here, like in the 10K, you could see how many leases are expiring each year. So there was a lot of leases that expire this year. So this is a very large percentage. I think I even had it written out somewhere. Um, 1 second, let me see if I can find that. So where is it? Going through my notes on the side. I hate mislocating information that I write down. I use too many note-taking apps. I gotta just like I'm trying to all integrate it into this Obsidian thing. It's pretty cool, but damn, I thought I was gonna sneeze there. If you guys are wondering why I'm making a face, but ah, damn, shake it off. Where is it? I can't find it on the side here. All right, well, scratch that. But back to where you guys are looking at here. But with like pretty much I just calculated like the number of stores, like the percentage of stores each year where the lease is expiring, and it is a situation where a lot of them were expiring throughout 2023, and you know now we are in 2024. So let's see if we can read a little bit more about this here to understand like what exactly, like how exactly the process is, or if there's any more just information. We sold and leased back in separate unrelated transactions, unaffiliated third parties, our corporate headquarters and ancillary office space in Grapevine, Texas, nearby refurbishment center. August 2020, we sold and leased back our Australian headquarters in Eagle Farm, Queensland to an unaffiliated third party. In September 2020, we sold and leased back our Canadian headquarters in Brampton, Ontario to an unaffiliated third party. So in 2020, they sold and leased back a lot of these different locations that they own. So they pretty much decided like we're just gonna lease, like we're not gonna own, like that's not gonna be, we're not gonna want to bother having that burden essentially. But moving forward, as of January 28, 2023, we own 3 and leased 14 office and distribution facilities totaling approximately 2.7 million square feet. As the lease expiration dates for the leased facilities range from 2023 to 2032, with an average remaining lease life, including reasonable certain options, of approximately 7 years. So I'll put that a piece of information here because I want to see, like, do we get any update on this? Because we do know the one distribution center is definitely in the process of closing down. So even since it's still in the process of closing down, as of January 28th or 31st, whatever it is for this year, 2024, it'll still technically be open. It might not even be calculating this, but maybe they'll have closed down some other office as well as part of cost cutting. So I'm going to add that on the Obsidian notes here. Make sure to get you guys back seeing everything. This is a side note. It's kind of just the full note for today. And, overall, they really just need 19, 20 cents of EPS to be net positive for the entire year. And I think it's looking very likely. I think, even the bears, like even the analysts, right, which I would say generally are bearish on the company, have basically said they expect to be the full year to be profitable for GameStop. So you see like a slight narrative shift, it's slow, but it is happening over time, right? So of course numbers speak louder than words though. So it really does come down to like what they're actually going to do today and like what is actually going to be reported. And we're getting closer and closer. We're only about 18 minutes from the market close. Let's check on the stock here. Put this more towards the front. Okay, we got a little price action upwards these last 5-ish minutes here or so, although I'm pretty zoomed in here. Pretty small relative to the day before, not really much, and probably pretty small relative to whatever's going to happen after hours, right? So keep an eye on that, but not going to worry about it too much. And really just need about 60 million plus of net income to be overall profitable for the year. And, I'm guiding, you can see my estimates on the bottom. I have analyst estimates going across the bottom. Again, for those that missed it before, take it with a grain of salt. I'm not trying to say it's definitely going to be that or anything like that. I'm just saying, hey, it might be. I'm going to share my opinion, put my best estimate out there, encourage everyone else to do estimates as well, and just put out whatever they think, whether it's online, whether it's just on a scratch pad for yourself, it's on a notepad on your laptop, whatever it may be, right? Just estimate, and I feel like it'll make you a better investor and it'll just make you more involved, whether it's GameStop or any company, right? So we'll see. We'll see. I mean, I say that a lot, but it's true, right? I mean, we can't see it until we can see it, right? So we're about probably 20-ish minutes away until the point where I can refresh the page and GameStop's earnings will pop up, right? Because you keep refreshing after 4 o'clock, you're gonna see me. I'm gonna be like click, 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 over and over and over until it comes up, right? So that will be exciting. It'll be an exciting next 15, 20 minutes or so. Let's see. I really want to know how many stores they closed in 2023. You think our CEO has invested $1 billion in cash? Nolan, honestly, not yet. I think, they might be doing that in the more long term, maybe like a year or so from now. That's what I was kind of saying before. I think it's possible if you saw the right opportunity at this point in time. And, the idea of Bitcoin's been floated, but I don't necessarily think that. I think they're probably going to wait for the right opportunity, like Warren Buffett style, be very patient until there's a market downturn or just something that's so undervalued where it makes a lot of sense for the company to invest in it. And I also think it has to be somewhat vertically aligned with what they do, so it has to be at like the bare minimum, some form of technology-based thing. I feel like the cash stays untouched. The economic conditions are still too unclear, and it's smart to see sustainable profits even if we see full year profitability. Exactly, Ryan. Exactly. You pretty much can have it where money is gonna like lose purchasing power, right, because of inflation, but at least you're getting the interest accumulated to offset that purchasing power being lost. So while you're taking the time to execute, right, like execute when the time is right, you can at least earn interest on your cash with the high interest rate environment and the fact they have a high interest cash equivalents, marketable securities on a strong balance sheet. But I think so too, Ryan. So exactly. How much money has this kid lost? 35 when I first heard of him. You can taste the desperation at this point. Adam, thank you for being here. Another one of my biggest haters / biggest fans because you always come back. You always come back. I knew you missed me. I knew you'd be back, but looks like you haven't lost interest in the stock either way. Exactly. No one lost anything. Sorry, Atanium. What is it? What is a Atanium even? Is that like some sort of periodic element I've never heard of, or what's the deal with that? I hope the companies don't sell and lease back their properties, kind of like Monopoly. I'm short. Been short for years now. I come around every earnings to watch the sad song play the tune that pays me. Stock won't crack $20 no matter how good. Adam, I'm not worried about it cracking $20 tomorrow. Like, maybe that'd be good for you as, like, you'd be like, oh, wow, like, it's actually a good company, but I'm just keeping a long-term viewpoint, man. But, see, you're a big fan of Tetron. Thanks for popping in. Ryan gonna chicken. Secret stalled snake. Why are you even here then? Go play in traffic. Exactly. Keep paying me, fools. You know what's sad? No one cares. Exactly. Exactly. It is what it is, Adam. But you might be about to be put in timeout. You're gonna join our GME Solana friends shortly, being put in timeout. The ones paying you is people selling. People here in stream will in general be buying, accumulating. Exactly, Decor. Exactly. And listen, it's all right. Adam wants to pop in. He wants to spew his nonsense. Like he can do what he's got to do. Just let out some anger. But imagine from your company with virtually no debt, cash in hand, and increasing profitability. Your fundamental analysis sucks. Go pick another company. Exactly, Ryan Sung. Like I think of all the companies to short, there's like way better options out there. Like absolutely, for sure. And I mean, let's start with like Reddit, right? Like look at their fundamentals and what is their stock been doing today? It's crazy how much price action. I couldn't even believe it last time when I was looking, and then I saw this morning. I was like, it's up 30% again. Like it's absolutely nuts. It really is absolutely crazy. Unreal. But we'll see what happens with that. But I think, if there's a company to short, it would be Reddit right now, in my opinion. He's not just being paid to troll. That's the only money he's making. Secret Salt Shake? It could be. It very well could be, man. But thanks for being here. I appreciate you guys for sure. Follow the truth and not the mainstream media narrative. Exactly, Freshmaker. Exactly. You got to follow the money and you just got to look at the numbers for yourself sometimes, right? Instead of just reading headlines for sure. Possibly Michael Patcher's alter ego. Maybe that's funny. That reminds me of. I realized I like cooked this guy in like a reply a while back. Kind of forgot because this always cracks me too. White Rabbit, shout out to him. He's a cool guy. Came back here to use this as foreplay. I thought that was funny. And then Walrus Farts, my boy, GameStop. Everyone's on here. Permanent Pen, but he said, keep in mind, Patch's price target is $6. We already have just cash equivalents of $4 shares, so he really devalues the business at $2 a share more. Tiff ranks words, not mine. This is their ranking. I didn't put it out there, so that's what I think of his opinion, right? It's got about, look at that, it's literally less than 1 star. It's slightly less than 1 star. Like, how often do you see that? So that's just some perspective there. Maybe it is his alter ego, as you guys said in the chat there, but getting close to earnings here. We're getting very, very close. It's almost that time. Good luck, Mr. Tetro. Wonder, thanks for being here. Thanks for popping in. Hope you're doing well, man. Here, snort, crushed up carrion. I like the stock. Geronimo, hey man, whatever gets you fired up, you do you. Agreed. Mainstream media these days sucks hard, sadly, in most topics. Exactly. Yeah, it's true. And it's unfortunate, like, even stuff like the simplest stuff is like so twisted. Like, just like I don't even know how to describe it. Just like a simple feel good story. It was like, oh, like this kid like did this incredible thing or something, and like I feel like now those stories come out, and like then it comes out later that it was like the parents like faked it because they wanted to be famous or something. Like you know what I'm saying? Like everything has like a false narrative to it now. Is it just me? Like even the simple stuff, it's crazy. Like we can't have like any media, and I think that's why there's a lot of individuals like myself, like live streaming, and whether it's posting on X, posting on YouTube, right? Whatever the case, it's just more individuals like posting on their own and just putting out information. And I'm obviously not putting out, like, I'm not saying like a news source, right? Like I cover GameStop stock, I cover economics, and I just talk about money and finance as a whole because I'm interested in it, right? And I think more people are interested in hearing what more people like myself and random individual who's looking at different things. They're more interested in someone such as myself or other content creators, right? Because they don't have anyone they're like reporting to, whereas like these media companies they're reporting to, they have these agendas for like whatever reasons, like whatever you believe, right? There are like clearly these ideas that are pushed, and just so much like deception, right? Just so much deception on the internet these days, and AI is just making it worse. It's like I always say, is like the scariest but the coolest thing ever. Like it's the coolest scariest thing because it has a lot of dope aspects to it, and like I love that I can create like the thumbnail, right, and just type like guy on a moon like going to a GameStop and just generates an image, right, and then GameStop can implement Ubic and then have an internal platform that's essentially powered by AI, using their information to provide real-time solutions to employees. And by the way, if you guys haven't seen this, Yobik, GameStop, look up this article. It's very interesting, or you can watch this video where a couple GameStop representatives talk about what it means for the company and like how they're implementing it. So it's cool and it's helping like a lot of things and it's advancing a lot of things, but it's also very scary because it's like, one, if you look at some of the people involved in like really directing how AI goes, such as like OpenAI, it's like I don't know if I really trust those people, but then even beyond that, right? It's hard to pick who to trust to make these kind of decisions, right? Like like governments or who, like, you know what I mean? Like it's very, very fragile, and it's like already the genie's out of the bottle with AI. So like there's no going back, and that's why companies like GameStop and even an individual such as myself are putting out, using AI to our advantage. For me, it's just like creating AI images for like what I'm posting. It's a very simple version, but for GameStop, it's AI internally in what they're doing. So yeah, it's exciting. But here we are. Yo, 84 people here right now. Very exciting. I appreciate all of you popping in. Um, yeah, I think it's almost earnings time, so let's just send the rest of this beer real quick. A little quick sending tin for the Vibingtons. You know what I mean? Abolished. Just like the short sellers. Done. Gone. But we'll see if that's the case after today's earnings. Excuse me. The volatility is starting to set in, though, as we do approach the earnings right here. So I'm actually gonna go take a quick piss and just record this really quick. I usually don't do long live streams, so I didn't really anticipate this, but you guys can just kind of get an idea of more about what this U-big thing is that GameStop implemented. But there was a shorter version. This is way too long. Let's see. Where was the video? It's on their YouTube. Hold on one second. Pull it up. It's definitely a great video. It's like a short highlight. U-big GameStop. Yeah, so customer testimonial. Okay, here you guys go. Boom. There you go. Ooh,
Collectibles started in the 80s. We have
lower.
just under 3,000 stores, just shy of 15,000
You're right back.
employees.
2 minutes.
Data was the biggest challenge before Ubic. We used a previous platform.
It was just writing and putting it out there and hoping that someone reads it.
We have a large physical footprint of brick and mortar stores. Because we're so spread out, it was important to create communication across all channels. So we've internally branded Ubic as main menu to keep it in theming with our gaming culture. The main things that we use with Ubic are the communications, the work functionality, as well as learning.
As a store manager, the number one thing I wanted from the store support center was to be able to actually get a hold of someone. Before, we had phone numbers or we had GSR, we could write an email and maybe we would get a response. But now you get a response from store ops team within the day and most of the time within the hour. So it's completely changed how we communicate to our store leaders. So store leaders are familiar with like normal social medias. It's very similar to that stuff. They love it.
Yeah, one of the benefits of using Ubic is being more modern. Being able to submit pictures and videos, and let's say like a store associate's having an issue. Now with Ubic, you can actually have like real-time photos sent to you from store associates and be able to help them in real time. It's kind of like a customer service support.
We joke with some of the other folks that we work with that we have like one of the screens that we have up is Ubic.
I feel like I'm on it like 8 to 10 hours a day. Being able to have that real-time feedback or the real-time answers and questions, that helps us and that helps the company because we can execute on things a lot faster.
I would say the most significant impact from a learning perspective is being able to talk to my learners directly. Being able to chat directly with store leaders not only lets them give me their feedback on what their teams are doing, it allows me to let them know like, hey, here's some information that might be helpful for your store.
We've seen a significant increase in messages being sent, and especially from a store perspective too. Their ability to communicate not only with their boss, but also with each other has been, I mean, we went from zero
almost
to
out of time.
tons.
We have almost 3,000 stores.
All right.
We made communities
back in
for
business.
all of those.
I guess
Utilizing
we'll let them play
Ubic,
at this point.
it's community, period.
You're seeing the level of engagement.
Through communities, it's a really fantastic way to prepare a training for the larger audience of about 15,000 employees.
Yeah, so exactly what he just said there for training purposes. Like it's basically their own internal app for GameStop employees, both in offices, on store locations, right? See, and then this person said, great news, oiling the machine. Let's fucking go. Exactly. See, not even that many people have seen this. Only 1 month ago it came out, but only 112 views. So definitely check this out if you guys want more information. And it pretty much just highlights like what's being mentioned in this article. But this article really does go into it pretty in depth. And if you guys want to follow me on X/Twitter, I am planning to do a write up on it after the earnings report. So definitely look forward to that. At Tetron Invest, X, Twitter, whatever you call it these days. I like to write some stuff on there, put out these infographics I make. So definitely keep an eye out for that. We're closing in, guys. 3 minutes. 3 minutes. We're getting very, very close. Oh, keep going the wrong thing. And gonna be able to update these infographics soon, right? Get these Q4 numbers in, year totals in for net income, margins. Gonna be able to update the cash. I've been updating that quarterly. Then we're gonna also be able to update Q4 and full year for general selling and general administrative costs. So almost there, guys. Listen, no matter what happens with the earnings, like it is what it is. In terms of the stock price, like whatever's gonna happen to the stock price, like we don't truly know, right? Like you don't know. So just be ready for anything. That's all I'm kind of saying here. And I like the stock. I believe in the company for the long term. We got a little positive price action. Looks like GameStop might close positive on the day at the very end here. Let's see as we move into the after hours. Oh, okay. Now we're up 3%. All of a sudden, pretty fairly large move. We hit 1550. Thanks for presenting earnings, Tetron. Got to sit back and enjoy whatever happens. Cheers to us. Exactly, Techcore. Thank you so much for being here. Yeah, no, I'm just trying to do my best, man. Just keep doing better and better over time. Just keep improving. And I love that I literally take off work for GameStop. Like it's crazy. Like people ask, like, oh, you're off tomorrow. What are you up to? I'm like, GameStop. Like, what do you mean? You're going there? Like, nah, keeping an eye on it. Like, I'll be talking about it on YouTube. I only tell a couple people. Other people, I'm like, oh yeah, I just got plans. Don't want to tell everyone at my job about my YouTube channel. But if anyone from my job is watching, shout out to you. Although should be working. It's still during the workday, right? So don't worry, I won't say anything. But we're almost there, guys. We're almost there. Let's get more zoomed in. Damn, I gotta use a better website for a chart. Yahoo Finance kind of blows, not gonna lie. And it doesn't seem like we're gonna get after hours right here, unless I go back. Just past 16, 1560 it was. No, you're good. No call today. Exactly, Brax. No earnings call. It's been no earnings call the past couple quarters, and it's gonna be the same case today. So we'll see what happens with the numbers. We're getting near the point where we're gonna be spam refreshing this page. I'm gonna put this up towards the front here. Getting locked in. When earnings, Nick, any minute now, man, any minute. The market's about to close in less than a minute, so earnings will be coming out any minute. Watch the full video already. Very interesting. Yeah, exactly, Fresh Makers. Some good stuff there. And, again, it's another like thing where it's not super major and it's going to be making them a gazillion dollars, but it's putting them in a place to operate more efficiently and have the right tools in place, right? Occupy Wall Street to Boogaloo. Nick, yeah, man. Hey, whatever floats your boat. Less than a minute. Yes, so. Odorless Urungus. I love the name. Yeah, I love all the goofy names. It makes me laugh so much. I think we both for charting, only for charting. Exactly. No, you're right, Freshmaker. That is a good one. I should probably pull that up. The only thing with those, I feel like it always has like your information. Like I don't want that. But I'll have to check that out again. So, all right. Well, we're gonna flush back and forth between the chart and the earnings. We're here. It's time. Earnings is coming out any minute now. Any minute now. It's almost that time to pour up another brew and sell it. Well, I don't know. I don't want to jinx it, right? Although like the numbers are what they are. Like I want to just send a beer just because it's an earnings report. It's a vibe. But at the same time, maybe I should be happy about earnings and then choose to drink the beer. Maybe we'll take that approach, right? I mean, again, though, whatever happens, happens. Like, I'm okay with it. Like, I really just want to see a profit. You see my estimates going along the bottom here. You got the analyst estimates going along the bottom. And we're going to see what the earnings are, right? So, let's see. Anything yet? Boom, 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 boom. Refresh, refresh, refresh. Nothing, nothing, nothing. Got a little bit of price action in the after hours. Is there a way to turn the after hours on here? What's going on? Because whenever I do this zoomed in one, it's just going to cut me off. Ridiculous. Settings. Extended hours. There we go. Here we are. All right, we saw a little jump and then right back down. Floating in the 1550s. Where's Q4? We're going to keep refreshing. It could be any minute now. Let's go. Let's go. This is Jerry McGuire. Show me the money. Uh, are you watching the GME earnings call and here together, guys? Sol, thank you for being here. But there will be no earnings call today, so it's really just about the numbers. How you can see that is if you go to Newsroom and you've seen on the last few reports, whenever they announce the earnings, so they announced it will report fourth quarter and full year earnings 2023 after the market close on Tuesday, March 26, 2024. Whereas if you look at last year when they announced the earnings report was going to be released, it was a situation where they told you, oh, this is the actual earnings. They told you what time the conference call was going to be and where you'd be able to locate it, dial in, yada yada. Now, past few times, there's been no earnings call. They're like, you know what? Don't believe us, just watch. That's kind of the mentality they've had, and I do get that. Some people aren't too fond of that, and I'm okay with that personally. Like, I think it is what it is, but it's not for everyone. It's just kind of what I say to people about GameStop. It's not for everyone. It's the truth of it. So any minute now, we should be getting numbers. Let's see if this is anything. A little spike, a little Jumpington. Okay, 1570. Although again, for me personally, it doesn't matter what the stock price does overnight. Like I'm not gonna be really doing anything tomorrow. There's a slight chance maybe I'll do a little buying if there was like a major dip. But as of right now, my game plan is just to hold, and that's just me personally. And I think on this journey that is GameStop that I'm personally documenting and talking about what I personally do, it's always important to remember, everybody else has their own goals in investing and just perspectives and way they want to go about things. So stay true to yourself, stick to your plan, you know, don't do anything too irrational. But of course, I'm not giving you financial advice. You're more than welcome to do whatever you want. But my point is, you got to be a man with a plan or a woman with a plan or a person with a plan, right? Like you got to be locked in with that plan. So for me, the plan is to hold long term, and that's where I've found myself to be as an individual investor. Like I just want to focus on the long term. I'm not really interested in doing any trading or chasing any short term options, and that's just me. But for some other people, they're a little more risk adverse. They want to mess around with some more options. Don't get me wrong, I've messed around in the past a lot, but through messing around in the past a lot, I was able to determine and learn the type of investor that I am. And for me, it's a long term investor when it comes to GameStop. When I initially started investing, like I'm very fortunate to gain the experience I did at such a young age. I started messing with stocks when I was like 15 or 16. I literally had my mom open like a joint brokerage account to allow me to trade some stocks. Like I didn't know anything I was doing. By the time I was 18, like 19, I got into options trading, was messing around all with that, and like I did the most crazy trades, and like I definitely lost money. But you know where I'm really lucky? I was a young, oh, here we are, dramatic movement. I wonder if we got the report. I was a young individual, and to finish my point here, oh boy, I was a young individual, and I was losing money, but a small amount because I was a young individual. I didn't have a lot of money to blow, right? Like I didn't have a lot of money to spend. It wasn't a situation where I was putting like all my entire life savings, like thousands of dollars into various stocks, right? Or options. I was just a young individual using what money I had to invest in what way I could. And I learned so many lessons from having that experience at a young age. And if I had started investing where I am now and I have more wealth and like I have a career and like I'm building myself up, right? I would have made probably a lot more major mistakes, and those major mistakes could have cost me a lot more. So when you start out, like you want to start small because you're gonna make mistakes, right? And as I'm speaking here, we are getting a dramatic movement, and I don't see the report out yet though. Let's just make sure. But thank you all for tuning in, really. And if you don't already, give me a follow on X/Twitter. I write about GameStop, some other economic stuff, and any updates for my live stream or anything with Tetron, I do put out on there. So appreciate if you can follow me on there. Smash the like button right now. I do appreciate that. Smash the like button. I meant to just say like hit that like button. Smash sounds just like I don't know, a little too dramatic, right? But clearly someone's seeing something they don't like in the after hours here thus far. Although I still don't see any actual numbers yet. So yeah, no call. Papa Cohen knows real G's moving silence like lasagna. I love lasagna and Ryan Cohen. Me too, Freshmaker. You know what? If GameStop goes to $20 a share in the after hours, I'm ordering lasagna tonight. That's it. No, I'm just kidding. If I wanted lasagna, I would just get it. But now that you guys are talking about it, I'm kind of starting to want it. But I do have a sandwich for after this. So do we have any data on how soon after close earnings dropped in the past? No. Dumb stormtroopers, exactly. Oh, here we go, results. Let's see. Where are we at here? What's going on? New tab, maybe? Still not seeing it. Oh, there it is. My bad, guys. All right, live reaction. Here we go. Net sales for the quarter, 1.794 billion. Damn, definitely way lower than anticipated versus 2.226 billion. SG&A was 359.2 million, or 20% of net sales. Okay, lower than anticipated for me. For the fourth quarter, compared to 453 million for the same quarter last year, so nearly $1 million drop. As you see, though, it's nearly the same net percentage of sales, so it kind of fell with revenue. Definitely, I got to be honest right up front, did not expect revenue to fall that much. But let's keep going here. Net income was 63.1 million for the fourth quarter, compared to net income of 48.2 million for the prior year's fourth quarter. Okay, they are fully profitable for the year. I'm absolutely happy to see that. It's not as much as I would have liked to see necessarily, and overall, it's a net profit though, right? And it sucks. They definitely had this dramatic fall in terms of revenue. I definitely didn't see that, especially what we're reading about over here with the GameStop. Not GameStop. The gaming industry strengthening a little bit throughout the year of 2023. That's definitely a little bit disappointing, and I'll definitely be looking at the 10K to see if I get more information on that. But moving on, net income, it was there. I would be very concerned if net income didn't put us to the point where if it wasn't positive, I'd be very concerned. I'd be slightly concerned if it wasn't enough to put us for full year profitability. But overall, it is going to get us profitable for full year 2023 for GameStop. If you look at the numbers here, you add that in, a net profit of about 61 million. This total net is going to be just enough, maybe about like 6 or 7 million just net profitable, right? So still some work to do. Really want to see now revenue scale with net income now that they're getting to the point like they are net profitable. But overall, cash equivalents, marketable securities is 1.19, so it is a little bit less. We'll have to go look at the cash flow statement for some more details on that. And see, it was previously 1.2 billion, and now it's 1.119 billion. Is that what it was? Right? Yeah, or 1.19. So about $80 million less in cash equivalents marketable on the balance sheet. Let's see if we can get more info on that. Long-term debt remains to a low interest unsecured term loan associated with the French government's response to COVID-19. Net sales were 5.273 billion for 2023 compared to 5.9 billion for 2022. So again, pretty significant drop off, but overall the improvement was definitely seen in SG&A, so the cost cutting can be seen. I definitely do appreciate that. You see 1.3 billion or 25.1% of net sales versus 1.6 billion or 28.4%. So percentage wise, there's about a 3.3% improvement. I do definitely like to see that. Would have liked to see revenue though hold up a little bit better. I think that's definitely the most disappointing thing on the report. And as you see the market reacting to that, bounce all the way back up. Although it is net profitable on the bottom lines, and we have a long way to go. And it is what it is in the short term, right? Like as I was saying right before this, to kind of try and just mentally prepare everyone. But we'll see. There's still a lot of time. And moving on here, adjusted EBITDA was 64.7 versus a negative 192.7 million for the same year last year, or same full year report of last year. So now moving down, getting a little more info. See, it's 14 weeks ended, I guess, because that's a leap year. That's what throws that off. So cost of sales definitely fell with revenue. That's good to see at least. It's not, again, the most ideal, but it'd be a lot more concerning if the cost of sales was almost as high as the same quarter of last year. So SG&A definitely saw improvement there. We see about an $80 million improvement. And then moving on, asset impairments, about 4.8, not much there. Operating earnings was 55.2 versus 46.2. And then they're able to earn more interest income. So interest income really is what kind of put them net profitable for the year. We do have an official result of 21 cents per share EPS. So a little bit lower than analyst expectations, lower than the Tetron expectations, unfortunately, but just reading through it here. So other gain, another 5 million. 500,000 that they earned somewhere, because this is in millions. We'll have to look into what that was. So earnings before income taxes 71 versus 52 of last year, and then you had income tax 7.9, slightly higher than last year. Overall net income of 63.1 million, which gets us to EPS of 21 cents. So there is an improvement year over year. Not quite the improvement I think a lot of individual investors wanted to see, but still moving in the right direction. And I'm definitely curious to see if there's any commentary about what took place with the revenue. So cost of sales went down 1 percentage point. That's a little encouraging to see. Gross profit up to 23.4. I had my estimate at, let's see, 23. Okay, so in range there. And then if we, let's see, compare it to some estimates I had, net profit, let's see, or net income was, or sorry, for this one, 3.5%. I had 4.1. Okay, not too far off. SG&A was 18.5. I had 18.5, came in at 20, so a little bit off there. Would have been nice to see it a little bit lower, but it does make sense, because quarter four is the most busy. There is the most spending that does go on during that time period, so that does have to be understood. So, yeah, I think it's an okay report so far to give you my honest first take. But as mentioned before, I really do want to digest this overnight, give a more in-depth take tomorrow and, in the coming weeks, and just really evaluate the situation as a whole with the company, stock price, etc. Because, it's just my initial take right now, just what I'm seeing initially, first glance at numbers. You guys are getting a live reaction right now. So definitely saw a significant fall off in revenue year over year. Cost of sales fell off to offset that a little bit, but gross profit did go down. I do find that a little bit concerning for the full year. Definitely happy to see SG&A saw a significant improvement. I'm going to look for even a little bit more SG&A improvement going into next year. Originally, I kind of thought maybe it would tail off a little bit. Or when I say tail off in terms of improving, where SG&A will probably kind of stay flat. But now I'm starting to sort of think that they're going to have to find ways to get SG&A even lower if revenue is still going to be an issue in the shorter term. So we'll continue to see what happens with that. They did earn way more interest income this year than last year. That just has to do with the higher interest rates. And again, that is attributable to their strong balance sheet, where they're able to earn on cash equivalents, marketable securities, earn that high interest. And then they had another loss net of 1.9. That could be miscellaneous things. But overall, year over year, the bottom line did improve. Went from negative 313 billion, or sorry, that would be terrible. Negative 313 million to negative or positive 6.7 million. So that's pretty much a $320 million swing on the bottom line versus the top line, right, where you see a drop of about 650 million in revenue. So write some quick notes here. Full year 2023. Prox, negative 600 million in revenue. And I'll fix this up later, but I just want to write it down now. Prox, or revenue, okay, I gotta be able to type. 6 point, 6 point, I didn't realize anyone else was home. That totally threw me off. It's 5.272 billion. 5.927 equals prox negative 600 million. And then net income. Damn, I'm writing this terribly. Terrible on the spot sometimes, guys. I do apologize. But I really do appreciate all of you being here. Subscribe if you haven't already. Drop a like. Catch me on X/Twitter, whatever you want to call it. But at Tetron Invest, I'll be posting updates on there definitely as I do digest this further. And that's why I kind of take these notes down here. I try to put them on there and just make it easily digestible for individuals. Maybe didn't catch the earnings live or just want to get some analysis on it. But pretty much you went from 313.1 to 6.7. And again, this is very sloppy. It's just supposed to be rough numbers, but just for future me, prox $300 million, $20 million swing, right? So, while there are disappointing aspects to the report, there's not a lot of situations that I can recall. And if you guys have any examples, feel free to drop them in the chat, where a company has $600 million less in revenue than the year prior. They go from 5.9 billion in revenue to 5.27 billion in revenue. And then on the bottom line, they go from negative $313 million to positive $6.7 million. So a negative $600 million swing on the top line, but a $320 positive swing on the bottom line. So it just really shows you the changes that are taking place as a whole. Like, because that is such a massive swing both ways, and it's in completely opposite directions. And then if you break it down in terms of EPS, there's a $1.05 EPS swing from, you get the negative 103 to 2 cents. Yeah, so then you got percentages down here, the full year, cost of sales going down. I definitely like to see that, 1.4 percentage points. Gross profit went up slightly. I'd like to see that go up a little bit more. And then SG&A, and I think part of that's, focusing on higher margin products across the board. Generally higher priced items you can get a bigger gross margin on because, it's being bought in bulk, and then just you're able to sell it for much higher. You should have more opportunities for like economics of scale. But SG&A, definitely significant improvement there. About a 3.3%. Yep, about 3.3% on the, or it would be 28.4 minus 25.4 would be 3. So 3 and change, right? So definitely good improvement there. The operating income, net income was 0.1% of revenue. Again, not astonishing in any way, but it's pretty much just enough, right? That's what 0.1 is, right? Just enough to be net profitable for the year. And that's where you get the 2 cents versus, negative 5.3% last year, which again is a massive change. So while my overall take is this report is, I guess you could say, mid, right? Like I would say my initial take is like there's some disappointments in the report, but like as I'm going through and reading this like full year-over-year change, like I'm feeling increasingly encouraged. And I think it's a good time to check how the stock price is doing. And I think any traders, right, that are quickly like digesting the news, they're probably looking at all this right now. So let's see what we got. But yeah, it seems to be floating in the 13s. Not quite at a 52-week low, but I get it. Some people are probably looking at it from the perspective like, oh, revenue's falling off. It wasn't as profitable as expected. Like they're completely done. And to that I say they just got to keep moving in the right direction. They're doing the small things right. I'm excited to read on the 10K and get more information specifically about some of the more stuff they're doing. It's not going to be too much. Like I wouldn't expect a whole lot. But at the same time, like there are always those small things, such as the business priorities, where you'll be able to read and get information. And I think it's good to compare in the 10K. Like you can find business priorities for last year, right? You just type in business priorities with Control F, and if you compare these to 2022, or sorry, this is 2022's 10K. So this was 2022's. If you compare it to 2021, it'd be different. And when the next 10K comes out, which should be later today or tomorrow, then the business priorities will probably have changed a little bit as well. And we'll just look for like different language a little bit just to analyze. And again, stick with me, guys. Subscribe, drop a like. I'll definitely be doing that as time goes on. And then also, like, I kind of like the 10K filing because I feel like the format is a little bit cleaner than just like when they post it here as like a filing, like it's just embedded in the website. But with the chat, and then we're gonna check the balance sheet and cash flows. Let's see. Hedge so mad, look at the dip. Or let's see, here you go, results crashing. Hedge so mad, look at the dip. LOL. Haha. Negative loss of 6.7 million for the year. Now, actually, it was positive loss, but losers, Adam, dude, you're my biggest fan, man. Thanks for always being here. Did they add in the $3 they made on the now defunct NFT store? Or needs to buy more crappy batteries? Jimmy dropped like a brick right now. Yeah, I'm John Lacey. It is what it is. That's short term. But I appreciate your level-headed analysis and numbers. Thank you, Michael. Like I said, I'm always just trying to keep it real, man. I'm just trying to keep it as real as I can. So Ryan Cohen not taking his salary as CEO really did make the difference. Yeah, Geronimo, that's very true. Because if he did, they wouldn't be profitable for the year. So that's a very, very good point. I didn't even think about that. Appreciate that comment. Self-made rel options trader the digital hustler, my put's about to print. Well, you're an options trader, so I guess that makes sense. I'm happy for you, I suppose. But I mean, as a long-term investor, I'm not. But hey, at least you made right money, right? Someone made money, but it is what it is. They shorted it terribly out of fear. The shorters are terrified. Joseph, yeah, I mean, I think those who are betting against the company are going to continue to bet against the company. That's just the reality of it. And I expected it to be pretty volatile after hours today. I mean, we'll see what continues to happen as the after hours goes on. Then there's, of course, the pre market and the trading day tomorrow. And we'll see. We've seen in the past, we haven't seen it in a while, but it does open the door, I think, for insider purchases, whether it's Ryan Cohen, Alan Adel, Larry Chang, or another board member choosing to acquire shares since it is near now its 52-week low. So we'll see if that's the case because they did achieve profitability. I'm definitely happy about that. Again, I think there's room for improvement, but when you look at something such as the fact that on the top line, there's a $600 million swing negatively, but then the bottom line, it was positively a $320 million swing. That's just not something you see too often. So I think it does say a lot about what the company's doing within. But also, like, you got to keep it real where it's like you want to see more revenue. Like, that's such a significant fall off in Q4. Like, seeing 1.7 was way lower than I expected, right? I mean, it's nearly 1.8, and cost of sales fell with it. So who knows? Maybe if they had an extra 100 million of some other products they chose to no longer sell in 2023, maybe those products would have wound up on clearance and they actually wouldn't have even turned a net profit on them. And in turn, it would have made the net profit non-existent, right? It would have been a negative net profit. So that's also part of where you have to trust like the management team. And when I say management, I don't just mean Ryan Cohen and board members. I just mean the people making the decisions within, because they really are what dictate the overall like flows of the company, so to speak. But let's get back here. So we got the balance sheet. Cash equivalents is lower. Marketable securities is nearly the same amount. Again, these are pretty much all in the same boat here, though, earning high interest. And we saw, with the interest income, 49.5 for the year, $49 and my gosh, $49.5 million of interest income for the year versus same full year report of last year, only 9.5 million. So about a 5x increase there on interest income. And with interest rates looking like they remain elevated, you could expect them to earn probably that. Maybe I would say anticipate them earning a little bit less than that this year, maybe more like 40 million. Because one, cash equivalents and cash is a little bit lower right now, and two, there are the possibility of rate hikes incoming. So we'll have to see about that. Then moving on, merchandise inventories, a little bit lower than last year at the same time. Less receivables, so it seems like a little bit more of that theme of just operating, more nimbly and just more efficiently and with a little bit less. And then you also have a situation where it's the York distribution center, and again, I'm going to look for that. It's another thing I'm going to be looking for, the 10K. I'm going to write that down so I don't forget. York distribution, like when that'll officially be done. I think it's this quarter where it's officially going to be just wound down. The York, Pennsylvania distribution center. So that's something that would factor into maybe a little bit less inventories because you have less inventory on hand because you have one less distribution center now. So we'll see if there's any insight on that in the report. A little bit less current assets, property and equipment, a little bit less. Again, probably just trying to operate a little bit more efficiently with a little bit less. Operating lease of right of use assets, a little bit lower. So that would make me think there are some store closures that are potentially taking place. Deferred income taxes about the same as last year. Non-current assets pretty much the same. Going on to liabilities, this long-term debt number remains extremely low. They're not issuing any debt, so that's going to just continue to go down. And the current portion of it was 10.8. Payable, definitely less than last year at the same time. Accounts payable, a little bit less liabilities that have been incurred. Current portion of the operating lease liabilities, again, a little bit less than last year. Pretty much the same, though, so it makes me think probably around the same amount of stores, maybe a little bit less. In total, 386 versus 382. And overall, a little bit less, pretty much same stockholders' equity, but a little bit less total liabilities to stockholders' equity. And for those who don't know, it always equals assets. So, everything came down a little bit, so to speak, in this quarter. But I think it's more so them just like operating efficiently. That's my perspective, at least. But overall, their net income was 63.1. This is for the quarter. So if you want to look quickly, just glance through the quarterly numbers. Overall net cash provided or used in investing activities, 20 million. So you have proceeds and purchases of marketable securities. That just means some matured and they purchased some more. And then capital expenditures. So we don't, if there was any investing activity, right? And if you see something different, definitely let me know. But as far as I can tell, there's been no purchases by Ryan Cohen or any member of management in this report, because if there was, we would have seen it in these investing activities right here. And I don't see any new line. I don't see any type of transaction, just purchases of marketable securities and proceeds and capital expenditures, right? So it is what it is. Kind of as I predicted, where I feel like it's something that's more going to come down the line, right? And we'll have to stay tuned for that. And again, see if there's more about it in the 10K of what it may look like for the company, right? Or just like what the official outline of it is, because it has been approved. So it does have to officially be in writing in some shape or form. But moving on, let's look at the full year cash flow. So net income 6.7 versus negative 313.1. And then if you move down, net cash flow used in operating activities. So a lot of accounts payable and accrued liabilities. That was definitely a major factor here. That's what like stands out to me just at a glance. Less in merchandise inventories than last year. And again, just glancing through here. And then you have the total activity of all marketable securities between the year as a whole, between every single quarter. And then going on, you got the repayment on the French loan. That's the only long-term debt. They're pretty much getting near done paying that off. I think in a year or two that'll be done. And then looking at net sales, let's see for Q4, definitely hardware and accessories was hurt. Software hurt as well, and collectibles hurt as well. So across the board, it looked lower. Technically, I guess hardware and accessories kind of was stronger for the quarter in a sense in terms of percentage of revenue if you compare these. But overall, like everything's just in the decline a bit. And my initial like hopefulness is that that is direction from the company, or direction from management for the company to really focus on products that are higher margin. So we'll see if there's any indication to maybe some different types of products they'll sell or anything like that. But I would like to, again, this is just me being, I guess you call it hopium, right? And as a potential explanation, right? Like I'm just simply speculating here that it's a situation where they're selling less products that they're probably just maybe break even on or barely turning a profit. So whenever they maybe have to sell, like let's say there's a product where they earn like such a small margin on, and then something's broken and someone returns it and they have to just eat the loss because they're trying to provide good customer service. If their margin's super small where they have to sell like 20 other consoles or particular accessory to make up for that one that was returned because it was broken and maybe it wasn't even GameStop's fault, that's just a tough situation, right? Because the margin's not good. So it's just the small stuff like that. Again, that's just purely speculation. I'm not saying that's definitely what took place here. And that's, for the quarter. This is for the full year. So software declined a little bit. You got to look at percentage when everything declines across the board. Hardware and accessories looked a little better. Collectibles declined again. I really was looking for collectibles to kind of bounce back and just do a little bit better. Collectibles is a very broad category, but I just think of it more like kids stuff too. I feel like that's something they could be a little bit more involved in, because video games are definitely something that kids are interested in. And I feel like now even more so than ever, because of how accessible technology is, every kid has an iPad at like 5 years old. It's kind of nuts. But yeah, just with that being the case, I think you have to like appeal more to kids in more situations and maybe look for some opportunity there. But SG&A, compare it, they're showing the improvement. This is quarter over quarter, then year over year. I do like that they're highlighting here. So you can see the following tables reconcile the company's SG&A expenses, operating income or loss, net income or loss, earnings or loss per share as presented in consolidated statement of operations prepared in accordance with U.S. generally acceptable accounting principles, GAAP. But I like how it lays out Q4 of each year as well as the full year for each year, just showing the improvements overall for the company. And I think their perspective of putting this out in this way, this particular news release for the quarter, is to show people like, yeah, like the top line isn't as great as we expected or wasn't quite where we want it to be. But if you look at where our focus is, it's on the bottom line, and you look at where we're moving and where we're at currently. And now it's really about maintaining this, right? Like it's going to be a little bit tough in Q1 because they just just made profitability for full year 2023, right, with 6.7 million. And yeah, Q4, you know, was strongly profitable with like 60-ish million or whatever it was, or 60.3 million. But Q1, you know, like if I pull up the numbers here, and I'll definitely be updating these very soon now that we have some updated numbers. Q1, if you look at it historically, has not been very good for net income. So even like 2023, the question is now, is it just a tough quarter where they're not really able to turn a profit yet at this point in time? Because I would be okay, although I still want to see a profit in Q1, I would be okay if like Q1 is still going to be slightly negative, but then Q2, Q3, and Q4 are profitable next year. And then the following year, 2025, they're profitable in every quarter. But I think it would be much more encouraging to see that no matter the quarter, they're able to turn a profit on the bottom line. They're able to have net income. I think that would be very exciting to see. So we'll definitely have to look ahead for that. That's kind of where my head goes to next. We'll check on the stock price. Seems like it's just floating lower. You know, for any long-term investor though, this is, I mean, I don't want to say like the most ideal, but it's ideal if you want to acquire a position to go long-term, right? And maybe you've been trying to wait for it to go lower. So everyone's, you know, in a different situation. Of course, you know, some people, options traders buying calls wanted to go up, options traders buying puts wanted to go down. And that's just the way this game goes, right? That is the stock market. And I accept that, and I'm all right with it, and I'm just going to ride this wave. I'll keep an eye on it throughout today, tomorrow, but it is what it is. You know, I'm just going to take a deep dive into 10K, really continue to analyze my investment. And I think GameStop or any company, right, when you read about it, you should always read about it. You should always question yourself, like, is this still something I believe in? Still an investment I like, still a company I like. You should always keep questioning that to yourself. So it keeps you like in the loop, reading about it and understanding more and keeping up to date with things and keep consistently validating why you believe in it, right? And for me, that's what I'm going to do with the 10K. And where you should sell an investment in the long term is when you see something, not because the stock price is not going how you want it, but if what you believe in originally you don't believe in anymore, that's what can, in my opinion, how long-term investment thesis gets swayed. Not just because of like particular price action of the stock. And it's the same when it's going up, right? Like if the stock's going up and you believe in it and your thesis is still the same and you still expect them to be worth more in the future, why would you sell it just because the stock price went up, right? So it kind of goes both ways. And for me, that's why I focus on the numbers themselves, the fundamentals. And, you know, I'm not trying to say I'm some trying to type of expert or anything like that. Like I encourage everybody to do their own research. Like always double check on anything I say. If it sounds questionable for whatever reason and I'm wrong, hey, just let me know. Like I make mistakes. I'm not perfect. Of course, I'm always doing my absolute best though to be as accurate as possible. But yeah, so the next thing for me is probably updating these graphics, taking a bunch of notes, and really what I want to keep doing. And again, if you guys haven't already, drop a follow on Twitter/X, whatever you call it these days. Keep writing stuff like this, make infographics, and just collect a lot of information. So when I do these live streams, I have like my own information to reference, and the information I am pulling is from the company filings and actual like reports of their own. But let's see if we did get the 10K yet. Oh, okay, 10K is already here, so we can start to look at that. Let's look for the DRS number. But yeah, we got everyone in the chat today. We got the Solana people, we got the haters, we got biggest of homies showing love. I appreciate all of you being here. Really, I really do appreciate you spending some time with me today. Cover GameStop earnings. But see, they shorted terribly the fear. DRS numbers unchanged. Scott, not surprised, honestly. I wish I could say I was surprised, but computer, what is it? DTCC or Seedin? Yep. So let's see. As of March 20th, 2024, there were 305, 873,200 shares of our Class A common stock outstanding. Of those outstanding shares, approximately 230.6 million were held by Seed & Co. on behalf of the Depository Trust and Clearing Corporation, or approximately 75% of shares. And approximately 75.3 million shares of our Class A common stock were held by registered holders with our transfer agent, or approximately 25%. Yeah, so literally unchanged again. And, you know, again, I'll let everyone kind of speculate on that and share what they think. But, you know, like I just think of it as like it is what it is, right? It is what it is. But let's see. What was the last report? 75.4, so 0.1 million less, so essentially 100,000 less. The percentages are still the same, 75%, 25%, but that's the latest there. Oh, damn. Chat just died on the side laptop, but let's see. Got to pull it up again real quick. Make sure I'm getting to everyone here. All right, back to business. Sorry about that. I had to just solve a quick problem real quick. But let's pull up the chat here real quick. Is there a way to pop this out? Oh, oh, that's so much better. How have I not done that by now? Let's see. Oh, I see my buddy Adam still here. My biggest lover, biggest fan of Tetron. They released 10K a few minutes ago. Thanks for streaming, Tetron. Followed you on X. Billy, thank you. I appreciate that. Yeah, I'll be putting out more information on there. You could stick with me that way. So, buying this dip, yeah, sophisticated. If you like the stock long term, that's what you should do when the stock goes down, right? You buy the dip. That's just the way it goes. Anyone find the DRS page? I had tried Control F, searching computer share. Don't see it. I think you just saw it. Finally made it in. Joseph Prendergast, thanks for popping in. Hope you're doing well. Yeah, pretty much you just Control F and you do seed because you can get to seed and co. That's where I found it, or depository. But just want to use a word that will come up once, and there's no other seed and co involved. So that's just the way it goes. But let's see. Where was I? Or, oh, I was in the chat. It disappeared. And then we'll keep going through here. Okay, definitely want to look at the business priorities. Like, this is definitely a page I'm looking at. And then see, this is exactly what I was talking about. The investment policy language. When I say language, I mean just specifics of what exactly it is, right? Like we saw, like, oh yeah, like Ryan Cohen's going to be able to invest the company's capital, but we didn't really see like how it is. Hold on, I got to plug in something real quick. I want to get too excited. Where are we at here? Man, it really is so much fun streaming earnings with you guys. I do really, really appreciate everyone being here. That's dropping a like, subscribing, showing some love in some shape or form. Like, I really, really appreciate you all. But let's check out the business priorities to get caught up on the chat here. I finally got the laptop back in. See, bro, we're in the black. Profit, no debt, gross margin growing. Exactly, Scott, exactly. It's great, but it's a bit of wind out of my sails. I think that's fair wheel burn. Totally tongue twister there. But yeah, I think that's fair. 75.3. Hey, buddy. Adam. Hello. How late is the report? Ruben, it is here. Welcome, Joe P. How the sales coming along? I got room for improvement. Tetron's crushing it. Keep up the good work, brah. Geronimo, thank you so much. I really appreciate you being here, man. I've seen you more lately, and I do appreciate seeing people more and more in the chat. But while all the haters here, I'm not wanting to go shill on some other stock if it doesn't stellar performance. The fact Shills should be here tells me I need to buy more. Is this good? Or this guy hasn't made anyone money yet? I just made a lot of money. Adam, you're good at what you do, man, with your trolling. You are good at what you do. But I'm not here to make anyone money. I'm here to share thoughts and opinions, talk about a stock I like. But, bro, tell me, is this fully report good or not? Ruben, I don't think it's that simple. I think there's good and bad, right? Like, I think the good part is that income swung $300 million. It went from a $7 million loss, or sorry, it went from a $313 million loss to a $7 million gain. So there's a huge swing on the bottom line. And as you kind of see here, and how they have it highlighted, they really broke down everything, how they're improving SG&A, improving operating income, improving net income, right? Like that's really what they're broken down, improving EPS. So I think it shows their extreme focus on the bottom line. And I think now they just have to maintain that and then find a way to scale up revenue. And when they scale up revenue, they scale up net income along with it because their core is set in place and operating efficiently. And obviously it's easier said than done, and they got a long way to go, but we'll just see how it plays out. Oh, it's a little bit of price action here in the after hours. Whoop. And I finally got the chat back on the side screen here, so we'll be able to go back to that in a sec. Dude, you make me so much money. I sell everything this guy says to buy. Well, the game's already dropped Q4 or not yet. Yes, sir, Ruben. He's like my #1 sales guy. This is a live case study of what not to do in the market. Adam, you're literally my biggest fan. You comment on everything I do. Like I think you don't think I'm serious, and like I actually don't mind at all. Like you're just providing good engagement. So Van the Shill trying to get Gallight, Wen Moon, Malkin and Ting, Nolan Henderson. Came across you on Super Stonks today. Great breakdown done. Uh, Nice job dealing with the haters. Subscribe. Thank you, Nolan. Thank you. No, I appreciate that. Actually, I didn't realize I was like posting on Super Stonk. I don't go on too much, so shout out to whoever posted me. I do appreciate that very much. But next quarter we'll be at 11. Sadness. But guess what, Adam? You'll be here for next earnings. You'll be here for next earnings report. I know it. You can't get enough of Tetron. Just admit it already. It's okay. You can admit it. Who doesn't love Tetron, right? That's just the way it goes. But yeah, let's keep going through the 10K here. So, okay, definitely the stores. We saw 35 stores opened and 69 closed, 69 in the US. So, a net amount of about 34 stores closed. Although I'm very curious, are these newer modeled stores similar to Milan, Italy? Maybe not that in depth, that advanced, but do we see anything like that? Canada, 13 stores opened. 13 closed, none opened. From what I've been seeing about Canada, it's just economics are really difficult there for the average individual right now in terms of like discretionary spending and just being able to spend on things such as games and items that GameStop would sell. So can't say I'm too surprised about that. With the US, I'd say I feel like it's kind of in line with expectations, you know, a slight decrease. And overall, they did close more stores than expected because I did expect, whoa, this should be here. I was expecting 35 store closures, so it's definitely way off on that. But then again, you know, when you look at the revenue, it starts to make sense. And when you looked at how many leases were set to expire in 2023, I think maybe I definitely was a little bit too low. I know for sure now I was too low on that number. But with Australia, they closed 19 stores and they opened 4. Europe opened 4, closed 186. So a lot of stores closed out in Europe. I feel like that was kind of seemed to be coming. You know, they wound down operations in several different countries already. I believe Ireland was one of them that just comes to mind off the top of my head. And as that continues to happen, we'll see. Is it just really going to focus on like an online footprint in Europe? I don't think they're ever going to completely get out of it, but I think they're just dealing with whatever's in front of them. And for whatever reason, or a multitude of reasons, I'm sure, particular stores in Europe weren't doing well, whereas not as many particular stores in the US weren't doing well. But then they also chose to open some more stores. And I'm definitely curious to see, or if any of you guys happen to know about any recent store openings at GameStop in your area, just to see like what the new stores look like. Are they different in any way? Maybe it's just a better location, it's more suitable, something of that nature, or maybe it's part of something bigger and they're trying to do more in these particular stores. But I guess we'll have to kind of stay tuned and see if that happens. Let's see. Can you just adjust your headset mic? You sound like an air traffic controller. Oh, my bad. Like farther away? Does this sound better? Hold on, me. Like, definitely give me more insight because I'm trying to be better, and I feel like maybe that is what it is. Maybe it's got to be more like this. Definitely let me know if that sounds better. Sounds a little bit better. Yeah, although maybe I am an air traffic controller. Tetron on the GameStop train to the moon. But does Tetron love Tetris? Behold the Singularity engine. I do enjoy Tetris. I don't think I'm very good at it, but I do find it enjoyable. And it is funny when I was younger, you know, or like I just use the nickname, like, or people always say that with Tetron. Like, oh, like Tetris? And I'm like, yeah, you know, like boop, 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 boop. Gotta move the blocks, right? Maybe we'll play, like, have Tetron plays Tetris live. But very good question. Only took 3 years to turn the company profitable. Let's fucking go. Exactly, Ryan. I could definitely see why some people wanted it to be faster. But, you know, I also think a lot of people who are invested for the long term understand like this is a slow process and it's going to take time, right? It's going to continue to take more time. And I'm not saying like you could take that statement however you want as an individual listening right now, right? Where I'm not saying that's a good or bad thing. I'm saying it's going to take more time. That's just the reality of it. So I prefer it to go faster than slower, obviously, but I'm just saying I'm very understanding that it's going to take time. So we kind of looked through this a little bit already, where we saw, you know, 3.1% improvement in SG&A, definitely a significant number drop, over 300 million drop. Revenue fell about 600 million, or maybe it's like 550, right? Or 650 million, right? Because if it went from 5.9 to 5.3, that would be 6, and then about another half. So about 650 million drop. But then if you look at cost of goods, most of that's offset there because there's a near $600 million drop there from about 4.5 billion to about 3.9. So a little bit less than like revenue, but SG&A declined enough to offset that, but still turn a profit. And definitely it is worth noting, I will say, that part of the reason, or the reason they're profitable on the bottom line in terms of net income was because of their interest income, right? But also part of their income tax expense, this income tax expense has a lot to do with this, right? So that's also worth noting as well. But in a high interest rate environment, they're going to be able to keep taking advantage until they spend that capital elsewhere. But I have to say, I didn't expect revenue to fall 11% year over year, but definitely the bottom line is very encouraging because if it was a situation where 11% revenue decline for year over year, but then net income was still negative, I find that a lot more concerning. It just kind of shows like everything declining or just pulling back and just not continuing to move in that right direction. But really turning a net profit was the most important thing to me, and I'm very glad they did that. And that's why I'd say it's like a mixed bag of results where like there's some negative aspects but there's positives, right? Like the negative would be definitely like the revenue as one of them, net income not as being as high as predicted. And then another aspect would be a positivity, would be the large swing on the bottom line because you go from negative $313 million for the year operating 2022 right here, or negative 5.3% of revenue to 0.1% of revenue, or $6.7 million on the bottom line. So literally a $320 million swing on the bottom line, despite losing not making 650, like making $650 million less, but still making 320 million more on the bottom line. Like that's just pretty incredible, honestly. Like I'm not saying like I wanted revenue to go down, but I'm just saying when you look at that and realize that net income was still able to improve that much, so with the revenue situation, I find that definitely impressive and definitely keeps me encouraged. Although the revenue is a little bit of a slight concern right now, I would say. But U.S. continues to be the main market. In Europe, they rebounded a little bit. They did better year over year, which is definitely interesting considering they closed a lot of stores. Maybe they did a little bit better as part of the store closures because when a store closes, you do have to remember that it's a situation where they're putting a lot of stuff on clearance, trying to get rid of everything, and inevitably things will sell for less, but they'll also be just pushing it out more, and that just comes up at the top line. And that could also be a slight factor in terms of maybe why the bottom line wasn't as good as anticipated, because when they're closing down some of these stores, they're just putting things down clearance, clearance, clearance until literally pretty much everything's gone, right? So if that's the situation, the farther you go down on clearance, the more it would hurt the net margin of the company, right? So maybe that's a little bit of a factor, but again, just talking off the dome here, so just speculating. Nothing's for certain. But they improved. What we do know is percentage-wise, the revenue increased 14.1% in Europe for last year, and then all the other regions did decline by double digits. So definitely unfortunate, but at least Europe was able to improve a little bit. If I want to take one positive out of this information. So gross profit decreased 77.9 or 5.7 versus a gross profit as a percentage of net sales increased 24.5 compared to 23.1. Decrease in gross profit is primarily attributable to the decrease in net sales, as further outlined in the net sales commentary, partially offset by 83.5 million or 42.2% decrease in freight expenses, resulting in decline in net sales and added cost optimizations. So cost optimizations and less freight, that's part like offsetting SG&A. And then after I read through this information right here, this page, I want to go back and read more about the net sales further outside of the net sales commentary. So that's what we'll be looking at next. But SG&A expenses decreased 357.1 million or 21.2% in fiscal 2023 compared to the prior year. And SG&A as a percentage of net sales decreased to 25.1% compared to 28.4%. Decline in 2023 compared to the previous year is primarily attributable to the 316.3 million reduction in labor-related costs, consulting services, overpaid consultants, right? Remember that, and marketing expenses, driven by our continued focus on cost reduction efforts. SG&A expenses also declined in fiscal 2023 due to a one-time digital impairment of 33.7 recognized in 2022. Store-related costs decreased 12.3 million the current year in connection with store closures, primarily in the European segment, and that's where we see right here, or up here rather, the stores that closed, a very large amount. Asset impairments, pretty much the same, not much going on there. We recognize a net interest income of 49.5 million compared to net interest income of 9.5 million, so nearly a 5x. The impact is primarily attributable to interest income increasing as a result of higher returns on invested cash equivalents, cash equivalents, and marketable securities. Income tax expense net. We recognize income tax expense of 6.4 million compared to 11 million. We recognize an effective tax rate of 48.9. Damn, that's pretty high. In 2023 compared to negative 3.6 in 2022. And if you're wondering why this is negative, I'm pretty certain that has to do with the fact that they had prepaid taxes for the year of 2022. The decrease in income tax expense is primarily due to the settlement of positions with certain taxing authorities and reductions in unrecognized tax benefits. See, has to do with like they can like prepay taxes, and there's some different stuff they can do with the filing. So that's kind of like the technicals here. But income taxes, for more information, but what we want to see is the net sales summary. It should be up here. Let's see if it's up. Of course, Adam T will be here as long as Doug Siva pays his stage tech. Yeah, no, listen. As long as GameStop reports earnings and I'm streaming, my boy Adam will be here. He just he can't get enough hate on GameStop, so it is what it is. But oh yeah, I wanted to read the investments, but let's see. Net sales summary. We'll have to find that. Yep. All right. I guess we could circle back to that later. I want to read about the investment policy because we do have that official here now. During 2023 and 2022, we generated approximately 34 and 38% respectively of our sales in the fourth quarter. I mean, that's pretty expected. I guess in a way, like, that's not really a positive. I was going to say like a lower percentage of revenue was recognized in Q4, so it's like they're becoming a less seasonal business and just more well-rounded out. But like, I don't think that's really a good point, honestly. And it's just kind of how the cards laid out in this particular year. But where were we? Damn. Okay, let's look up investments. Okay. On December 5th, 2023, the board of directors approved a new investment policy, the quote, investment policy, end quote. Subsequently, on March 21st, 2024, the board of directors unanimously authorized revisions to the investment policy to codify the role of certain members of the board of directors in overseeing the company's investments. In accordance with the revised investment policy, the board of directors has delegated authority to manage the company's portfolio of securities investments to an investment committee consisting of the company's chairman of the board and chief executive officer, Ryan Cohen, and two independent members of the board of directors, together with such personnel and advisors as the investment committee may choose. The company's investments must conform to guidelines set forth in the revised investment policy or be approved by either the investment committee by unanimous vote or the full board of directors by majority vote. Additionally, the investment committee may recommend the board of directors further modifications to the investment policy from time to time. The investment committee will direct the investment activity of the company in public and private markets pursuant to authority granted by the board of directors. Depending on certain market conditions and various risk factors, Mr. Cohen or other members of the investment committee, each in their personal capacity or through affiliated investment vehicles, may at times invest in the same securities at which the company invests, or own affiliated investment vehicles, aka Ryan Venture or RC Ventures. Like in that one interview with Toast, he mentions Oh yeah, you're looking at RC Ventures right here, like just like you're looking at Tetron right here. This is the whole team Tetron right here, just me. So same situation, and that's just what they mean by affiliated investment vehicles. If you're confused on that, but the board anticipates that such investments will align with the interests of the company, will align the interests of the company with the interests of related parties because it places the personal resources of such directors at risk in substantially the same manner as resources of the companies in connection with investment decisions made by the investment committee on behalf of the company. I want to read that last sentence again. It is a little unfortunate it's cut off here, but the board anticipates that such investments will align the interests of the company with the interests of related parties because it places the personal resources of such directors at risk in sustainability the same manner as resources of the company in connection with investment decisions made by the investment committee on behalf of the company. So, how I'm reading that is the company is saying, we're going to invest our capital and we're going to allow individuals to also invest their capital, right? They're going to be able to, and I say individuals, I mean Ryan Cohen and whoever the two unnamed board members are, although I would imagine one of them is Larry Chang, and if I had to guess, the other one's Alan Adel. So it says Ryan Cohen and two independent board directors together with such personnel and advisors in the investment committee. But pretty much saying, like what this last sentence is saying to me is, they're going to use their own money to invest in these same things that they're going to put the company capital into at some point or another. It's just a matter of when. I guess it's a little bit of if slash when, but the point is they're going to try and show people like we're going to invest alongside individually with our own money alongside what we're having GameStop invest in. So we'll see how that plays out. It's interesting, official language on it right here. This is page 21 if you want to read about it more. But you got to look at the official stuff sometimes. Just fly or something. Let's see. Our principal sources of liquidity are cash from operations, cash on hand, and borrowings, capital markets, revolving credit facilities. That's just for like when you're buying inventory on a consistent basis. But the investment policy. Okay, so more details. Our marketable securities are also carried at fair value and include investments highly rated short-term government notes, government bills, and time deposits. And marketable securities have maturity date greater than 90 days but less than 1 year. Okay, recognize there. And then see 2.6 million cash equivalents because they're less than 90 days. But to read more on the investment policy, on December 5th, 2023, the board of directors approved the new investment policy, amended investment policy part 2 item 7. Management's discussion and analysis of financial condition and results of the operation of investments for information. Gains and losses of marketable securities may fluctuate significantly from period to period. However, the amount of gain or loss of marketable securities for any given period may have no predictive value, and variations in amount from period to period may have no actual analytical value. There's not much there. Some of our vendors have requested and may continue to request credit support collateral for our inventory purchasing obligations, pretty standard. And the levels of such collateral will depend on a variety of factors, including our inventory purchase levels, available payment terms for inventories, availability of borrowing capacity in our credit facilities, variable credit terms. 6 unsecured loans by our French subsidiary Micromania SAS, total of €40, were extended for 5 years. As of 2024, it's 28.5 million outstanding. They're just extending it, but it's literally like a 1 or 2% rate. So they earn a higher interest rate on their cash than the interest they pay on debt. So essentially it's good debt on the balance sheet because one, it's such a minuscule amount compared to the cash equivalents, marketable securities. And two, it's also a situation where it's such they're earning more. Like they might as well pay it off as slow as possible because the money they would use to just pay that off, they wouldn't have to pay the 1 or 2% interest rate anymore. I think it's literally like 1.1 or something like that. But you might as well just earn the 5%, take the money you're earning and use that and apply that to the loan payment, right? So that's like good debt, so to speak. And that's the only loan they've had or any debt they've had since Ryan Cohen's been involved and pretty much captain of the ship. And here they show the cash flows. So for last year, there was net positive in operating activities, but there's other factors, there's inventory and various other things. Investing activities, this really varies mostly because of the marketable securities going on in there. Financing, not much going on there. But overall, there is less cash equivalents and marketable securities for the end of the year, which is a little bit unfortunate. I'm not too concerned. They still do have a pretty strong balance sheet where things stand today. But I want to obviously see them continue to improve upon that and eventually invest that cash, right? But it's going to take time. And I think, again, it's going to be Warren Buffett style. Wait for a crash, wait for the perfect opportunity. Like one of Warren Buffett's most famous quotes is, to paraphrase, something along the lines of, picking stocks is like playing baseball, but there's no called strikes. You can watch as many pitches come by as you want, as many pitches until you're finally ready, and boom, you can crack it. It's the perfect pitch. You can hit a home run, right? Or it's not always gonna be a home run, right? Just because you have a meatball down the plate or an easy fastball and you go to swing for the seats, you might hit a ground ball. And that's kind of the same with investing, right? But if you are very patient for a very good pitch, you can find very good opportunities. And I see that being Ryan Cohen's like investment philosophy in terms of how he's going to go about potentially making investments with the company's capital. And I do believe very likely the two individuals, because it says two other board directors alongside him, probably Larry Chang and Alan Adel. Those are kind of his like right hand man or right hand men or like right hand guys that he seems to commonly work with just from his time at Chewy, because they were both very, very involved there. Obviously, Larry Chang came from Volition Capital and was the first major investor in GameStop. And that was, or sorry, not GameStop, Chewy. And that was after literally, like, I think it was hundreds of pitches, and Ryan Cohen just did not give up until he got funding. And obviously, it worked out very well for himself and Larry Chang and Volition Capital. So, just some insight there. But yeah, obviously, things got to continue to improve, right? And no changes on the share buyback program. We did not repurchase any shares over the past 3 years. As of the report, we still have 101.3 million remaining under the repurchase authorization. And you might be like, oh, well, how they never voted that in, or how does that ever happen? But it says on March 4th, 2019, our board of directors approached a share repurchase authorization, allowing us to repurchase up to 300 million of our Class A common stock. The authorization has no expiration date. So that was when they were buying back shares in 2019, and I think even into early 2021, they spent about $200 million on that. However, they didn't spend the full amount, but it was never like abolished, but it was never like extended upon. Like it's just kind of been idle. So theoretically, at any point in time, GameStop can go out and spend $101.3 million on share repurchases. But if they wanted to buy back more, they would have to reauthorize the policy, or they would have to expand upon the authorization, right, to do so and do more. But theoretically, they can do it at any time, but it's not because current management's put that in place. It's just the last one was put in place with no expiration date. So this can kind of just be there at any point in time. And that reminds me, I touched on this the other day, like I just been putting up polls. If you guys don't already, drop a follow at TetronInvest on X/Twitter, whatever you call it these days. But put up a poll, and I've been trying to do more of these just to get insights of different individuals that own GameStop stock, or even if you don't own it, and just share your opinion, right? I said should have added a third option for neither on this poll, but I appreciate seeing everyone's responses. So the poll was, which would you rather see GameStop do first, buy back shares or issue dividend? Buyback shares was a slight winner at 56.3%, whereas issue dividend was 43.1%. A lot of different opinions in here, and I said should have put neither because a lot of people did wind up saying neither, and kind of just thinking they should do some kind of purchase or expansion or spend the capital in a way that's going to lead to further shareholder value creation in like just expanding upon the company. And when I wrote this a while back, and it still rings true today, the strong balance sheet gives them the opportunity to take their time and have the opportunity to execute in the long term and just build upwards, right? And some ways they could do it or just shareholder initiatives in general, right? Our share repurchases, dividends, acquisitions, improving the core business, and that's a very vague one, but it could be expanded upon in various ways, or expansions to new segment of business. So it remains to be seen how they go about it. And then also, this was written before Ryan Cohen had that new investment policy basically put in where he was able to invest the company's capital. So now a possibility is maybe not acquisitions, but or it wouldn't really, I guess, fall on this list anywhere, but investing in various assets, right? Or something of that nature, you can kind of put it as. But see, of course, MT will be here as long as it pays tech. Hopefully a bounce comes tomorrow if I get some fire hopium, if you're looking. Yeah, we'll see, Dan. We'll see. Let's take a look. Yeah, we got a little upwards action here. Maybe someone bought some shares, some institution. Who knows, right? And just remember, anything could happen between now, pre-market tomorrow, the market tomorrow, and then in the coming weeks. Like you never truly know what's going to happen in the short term with the stock. I mean, of course, there's always ways to graph it. You could do the MACD, you could do the VS volatility index, or not volatility index. What is it? I don't know. I haven't even done like indicators in a long time, but they're all kinds of indicators, right? I'm not saying it's totally impossible and everyone has their specialties, right? But for me, I just look at it as a simple perspective. Anything can happen in the short term. It's about focusing on the long term and the fundamentals of the company, and that's just what I stick with. But so with the 2 billion in cash lying around, selling off unprofitable retail stores, what will Ryan Cohen do with it? Exploit an online space, acquire a stream competitor, their only competitor, Steam Marketplace. Yeah, no, I mean I don't know about that near reality, but I do like the idea of them spending the money on something correlating more so with gaming and if anything technology, right? And I think it's again remains to be seen, and it's gonna be a situation where it's not going to be sudden. It's going to be when the moment is perfect. The perfect pitch comes, then they're going to go for the home run. That's how I see it at least. But profits is cash money. Business first. More time to collect rocket fuel, kibble, and 51 meows. Meow, cat that roars sometimes. Thanks for being here. And yeah, exactly. Not everyone has a perspective, and I totally get that. But it's just going to be a slow process, right? Like that's just the reality of it. It's going to take more time. And again, I keep saying it's going to take more time. And some people hear that and they go, okay, like it is what it is. Other people hear that, like, how could you invest in it knowing it's going to take more time? Oh my God, you're moving the goalposts, yada, yada, yada. But I just believe in what I have and what GameStop is as a whole. And I'm okay for them to take their time. It's like SpongeBob, when Patrick, like they're like racing their pets, and it's like the Rock. He's like, "It's okay, buddy. You go when you feel like it." That's what I feel about GameStop. Like, it's okay, GameStop. You run up in terms of stock price whenever you feel like it. Take your time, no rush. I'll just be here accumulating because I like the stock. We don't have 2 billion in cash. We have 1.199 billion. Yes, Stevie, correct. Sorry, just reading off comment by comment, but you are correct. Does it say anything about what Cohen used $1 billion in cash for? GME info, it does not, as far as I'm aware. So where I believe we would have saw it is under, like if you just go here, we're all over the place. Like under investing activities, because it's the investment policy. Like we would have seen it showing up, or sorry, investment policy slash investing activities would fall in here. This is financing, but in terms of investing activities, like pretty much the main portion of it is marketable securities, like being purchased and proceeds. So the cash flow is a little bit skewed by marketable securities because they're constantly buying the marketable securities and then they're maturing and or selling, probably maturing in most cases. And then when it matures, it just goes back as a cash and cash equivalent. So it's kind of just something that's happening, if that makes sense. It's not that they necessarily have like the difference of this number is 14 million, right? But it doesn't mean they have $14 million less. It just means they have $14 million less of marketable securities that wound up turning into cash, right? Because it matured. But as far as I'm aware, nothing about Ryan Cohen's investment at this time. And when we do see it, if/when, it's going to be in here. That's how I'm seeing it. It's a $300 million swing on income over year, from negative 313.1 million for last year to plus 6.7 million this year. The only thing I need to see, one direction, up. MG, very good comment. Thank you for being here. And it's facts. Yeah, it's an incredible swing on the bottom line. And seeing that revenue declined about $650 million, but the bottom line was still able to swing $320 million higher is pretty remarkable. That's kind of what I was saying when it first came out, where I was a little like, okay, wow, what's going on with the revenue? But then as I started to go through the numbers more and look down them and just literally react to them live, I'm like, oh, well, yeah, revenue went down a lot, but look at the bottom line. Like, this is incredible considering what happened to the top line. A lot of companies, you know, in a similar situation, although I don't know any off the top of my head, I feel like they would really, really be impacted by the revenue declining that much to the point where their net profits would be hurt very much so, not improved significantly. So that's definitely an encouraging sign. 277 million is invested in marketable securities earning interest. Exactly. And even cash equivalents, right? Like if you read the specifics, and like I have it here from like previously, and I'm definitely going to update this infographic and we'll calculate how much cash per share. That'll be something I'll be doing in the near future. You can look out for some updated infographics in the near future. Gotta finish them up. Also going to try and change the color scheme a little bit, make them look a little bit better. But we'll have to update this number. But if you see here, like as per the 10Q filing I pulled this from, and we could double check this with 10K, but it's essentially the same language, maybe slightly changed. I think we already passed it at some point too. But cash equivalents consist of U.S. government bonds, notes, money market funds, cash deposits, commercial banks, and highly rated direct short-term instruments that mature in 90 days or less. Marketable securities are made up of highly rated short-term government bonds and notes, as well as time deposits that mature in less than 1 year. So marketable securities are greater than 3 months, but less than 1 year. So it's still a current asset because current means less than 1 year. And then total cash, cash equivalents, it's just straight cash, like a money market fund, right? Like, when you put money in Fidelity and if you don't invest it right away, it just sits in a money market fund and you earn a little bit of interest. That's a money market fund. But it's still technically the cash equivalent. Like, you could just pull it out at any time, right? Like the next business day. So it's kind of the same for them. So like I don't look too hard at like the difference between marketable securities, cash equivalents. I just look at the total because it can kind of bounce back and forth, right? Because cash equivalent is something that's less than 90 days. Marketable security, more than 90 days, but less than 1 year. So it's kind of important note to keep in mind. But I would love to see them, or let's get a little too ahead. All that drop did was put the price back in the Dorito again. Michael, yeah, shout out Badass Trader. He's been doing the Dorito of Doom for a long time. How are analysts' expected revenues calculated? Wouldn't it be the best interest to quote unquote expect a higher than / realistic logical number in order for the EPS to not hit that and subsequently fall? Yeah, honestly, I'm not too sure. Behold the Singularity Engine. Thanks for being here. That's a good question. I'm not sure how they exactly calculate it. I think it's just based on following the company, reading the information coming out of it. And I think that's part of what makes GameStop so hard to predict because there's not a lot of information coming out of it. And, I think usually it's a situation too where if you have an analyst covering a company like, let's say Pepsi, right? Like I bet there's a ton of analysts covering it. And I bet those analysts, right? Like let's see how many analysts are covering Pepsi, just for the sake of the example here. But when we look up Pepsi, right? And Donald Trump's thing you went public today. I completely forgot about that. I just saw it trending there. But okay, analysis. Whoa, going slow. Okay, company analysis covering it this year, next year. 20 analysts or analysis. 20 analysts are covering, right? I would imagine some of them probably have like a guy in the company, like a source. Like in football when like Adam Schefter is always tweeting out like sources tell me like so and so is going to this team. It's probably the same with analysts where they have like a source within teams to kind of provide them with information, or not teams, but companies. And then in the case of GameStop, since they've really slimmed things down and Ryan Cohen and management has been very hush hush about everything they're doing, that's probably why they're having a difficult time making estimates because they don't really have like an insider source like they maybe did in the past, or just in general there's less information coming out of them. So I think that might be like an aspect of it. But see, if Code doesn't buy the next few days, that would concern me. GME info, I see what you're saying, but at the same time, he does already have such a large amount. And if they ever did potentially buy back shares in the future, you have to remember he can only hold up to 20%, although I'm not sure the specifics of that if share buybacks come in. Don't get me wrong, I would love to see him purchase shares in the next few days. And I think it's a very real possibility. It's a very, very real possibility. I'm not going to say it's a lock, and I'm not going to say if he doesn't, that I'm going to be very concerned, but I'll feel very encouraged if he did. I would love to see GME contest with Steam, especially with all their connections with gaming companies and publishers. Steam takes a heavy cut on purchases. GME wouldn't need to do exclusives, but offer smaller game publishers a smaller cut in their profits. Rarushu, thank you for being here. I appreciate that comment. I do really like that idea, and I kind of felt like maybe that's what was happening with GameStop Player when it was developing, but the thing is now we really haven't heard anything on GameStop Player, and it's been some time. And the NFT marketplace was wound down, the GameStop wall was marked down, or just wound down as a whole. And you just have to wonder, are they completely done with Web3 gaming? Maybe that's in the 10K here somewhere, and I just didn't get to it yet, but let's see. Well, I was going to type gaming, but that's not going to help. So, yeah, with that, I'm not sure. And maybe it's a situation where they're going to have Web3 capability, for games, but it's not going to involve like currencies themselves in any shape or form. But then I guess how can you truly own your assets if it's not blockchain? I don't know. So I'm not sure what exactly is going on with that at this point, but it seems like they might be shying away for it. But I do like the idea of them competing with Steam, and maybe GameStop Player was something to do that, and maybe it wasn't what I once thought it was, or you once thought it was, right? Or any individual once thought it was, but it's a situation where it becomes a platform over time, and it starts as one thing and it evolves more and more. So we'll have to see. I really do like the idea though, and I appreciate you sharing that idea in the chat. But what happened to liabilities? Your boy 69. Thank you for being here. So let's see. Yeah, I'd have to read about that a little bit more. I'm not too sure. Let's see if we can find anything. It's definitely tough on the spot because this is like nice, or let's say 90. The other one was 92 pages. This one's 76 pages. But it's just tough going through 76 pages like on the fly, trying to quickly get the information for you guys. I'll definitely do my best here. We establish a liability upon the issuance of merchandise, credit, and sale of gift cards. I guess that's contract liabilities. So increase, decrease. Let's go back to more about it actually. We establish a liability upon the issuance of merchandise credits and the sale of gift cards. Revenue is subsequently recognized when the credits and gift cards are redeemed. In addition, we recognize breakage in revenue upon redemption in proportion to historical redemption patterns, regardless of the age of the unused gift cards and merchandise credit liabilities. To extend the future of redemption patterns differ from those historically experienced, there will be various in the recorded breakage. Okay, so that's not what I was looking for, but that does give me insight. I didn't realize they actually sell this many gift cards. $860 million gift cards, or 800 million? Damn, that's actually crazy. Like the increase versus decrease. So if it was increase and then decrease, does that mean like $798 million of gift cards was bought? Like that's actually wild. But let's see, consistent redemptions. Oh, also factors in GameStop Pro rewards and extended warranties. So that's also a factor, but larger number than expected. But I definitely got to look at the liabilities more. What happened? And then also, there was the final. It was the final year, or sorry, final quarter Q4 2023 of the SG&A expense allocated for Digital World / Mutable X situation, and pretty much they were recognizing a little bit of an amount in SG&A for their like milestone agreement with IMX. They pretty much were giving them tokens or getting granted tokens, and it was being allocated like in SG&A. So that's going away this year. That was briefly touched on here. And then I definitely want to see the leases, like this number. I don't know, my face is so itchy. I feel like I've just been like sitting still for so long. It's crazy. Definitely one of the longest streams I've done. If we're unable to renew or enter into lease unfavorable terms, our earnings may be adversely affected. This is in the risk disclosure. Okay, perfect. So number of stores. So yeah, you could see a lot of stores were extended to 2028, and we should see how this differs from the last 10K. That should definitely be good to look at here. Okay, type in properties. This is 10Q. Properties. Okay, let's do a little comparison. Zoom out a little. Okay, so 2024, 1,350. Here, 891. So it seems like if this number went from 800, 2024 went from 891 to 1,350, to me, that would imply that some of the stores, maybe they're not so sure about. They're like, all right, we're going to extend it one more year and then see how we feel and kind of see where interest rates are at and how this particular store is doing, right? When we get a little more analytics and can compare it for full year 2023 versus full year 2024 for a particular store, then they can make the determination, right? So they'll have a lot more decisions to make again in 2024, or throughout 2024, that is. And then looking at 2025, went from 690 to 580, so maybe those were extended upon. And then a lot for 2028 or later, and obviously some of them now fall in 2027. And then obviously it's not like the perfect comparison, but you can just kind of see like total stores and when exactly they expire. So this was like a very large chunk of the stores expiring during the year. This is still the largest chunk, but not as large a chunk percentage wise as the same report last year. But you also look at the other details, like as of February 3rd, 2024, we own 2 and leased 12 office and distribution facilities, approximately 2 million square feet. Lease expiration dates for these facilities range from 2024 to 2032. Average life of all of them is 6 years essentially. And then that's where you see here too. we at the time last year when the 10K came out, right? So 1 year ago, pretty much, as of January 28th, 2023, compared to February 3rd, 2024, about 1 year time in between, they went from 14 office, 3 owned and 14 office and distribution facilities that are leased to 2 owned and 12 leased office and distribution facilities. And you can see also that still includes York, Pennsylvania, and that is also being wound down. In January 2023, we announced plans to close the Shepherdsville, Kentucky distribution center facility to consolidate our fulfillment facilities or fulfillment activities. This was complete in fiscal 2023. In January 2024, we announced plans to close the York, Pennsylvania distribution facility, which will also consolidate U.S. fulfillment activities to our Grapevine, Texas facility during our first quarter fiscal 2024. So yeah, pretty much after this quarter ends, pretty much next month, because February, March, April is Q1. So by the end of next month, by the end of Q1, the York, Pennsylvania's distribution center or fulfillment and distribution center will be wound down, and then Grapevine, Texas will pretty much have everything. And when you look at the square footage, you just see like they're gonna have to really, really be optimizing Grapevine, Texas, and it just shows you the level that they're really scaling things down. And initially, just seeing this, I'm like, wow, is revenue possibly going to decrease again next year? But then net income increases even more? Is it another year of that? Maybe. I don't know. I'm just throwing the idea out there as I'm digesting all this for the first time. And it kind of goes back to something I said when I started going through all this. And also, I encourage it to be the same for everyone and try and take it with the same approach where you're going to review the information right now. You're going to feel certain emotions. You're going to digest it in a certain way. But then when you look at it tomorrow, and then you look at it next week, and then you look at it before next earnings report, you're going to perceive it in different ways. So you want to look at it multiple times in different perspectives and understand you're going to have different emotions. Like it's just natural human tendency, but try and just keep it like super real with yourself. Like that's what I try and do at least, right? And just keep it real and just focus on the core numbers and what makes sense and what doesn't. And we'll continue to see. But so you can see here, Grapevine, Texas is still there. The Kentucky one is gone off this list here. Milan, Italy is still there. Eagle Farm still there. Brampton's still there. York's still there for now, but York's going to be gone. So just a massive amount of fulfillment and distribution being just wound down. So pretty much now what they've decided is, if you look at this, right, if York, Pennsylvania is being wound down, it's just about wound down all the way. And then Kentucky, USA, Shepherdsville, Kentucky, USA is already closed. That means now going into 2024 Q2 and beyond, it's a situation where, damn, why do I keep saying that today, guys? Those of you that are watching for the first time, like, yo, why does this guy keep saying, oh, it's just a situation where I feel like every stream I have one or two phrases that for some reason I always circle back to when I'm explaining things. So I do apologize for that. I don't know why, but that's just like the tendency I have for whatever reason. But today, the situation is they're going to have one fulfillment center per region, right? So they're going to have Grapevine, Texas for the United States. They're going to have Brampton, Ontario for Canada. They're going to have Eagle Farm, Queensland for Australia. And they're going to have Milan, Italy for Europe. That's the just cold hard truth of it, because now they've closed down York. That's going to be closed by the end of Q1, which ends next month. Kentucky's already completely wound down. So the cost cutting and the savings from the Kentucky distribution center will be reflected already pretty much in this report, at least the second half of the year. Whereas the York, Pennsylvania one is going to be reflected Q2 and beyond, and maybe even Q3 or Q4 of 2024. Like we really see the difference, because the deal is that there's going to be severance, there's going to be costs of winding down, and just some steps that need to be taken that might still cost the company money and are pretty much one-time expenses. But as that happens, like that's where you read the 10Q and the 10K, and like you get the specific information on that. And again, the computer share number went down 0.1 million, 100,000 less, so slight decrease there. But overview, definitely want to look at the business priorities compared to last year. So let's see. Compare, just see. Let's see. Oh, damn, more people popping in the chat. No, I appreciate everyone popping in today. You know, I totally understand not everyone's going to watch everything, but I really do appreciate anyone popping in. How many paying pro members do we have? Very good question. I do want to see that. Remember page 21. GameStop Pro. Let's see. Do we have any numbers on this? I know I'm a GameStop Pro. I don't know about you guys. Damn, alright, first finger. I'll have to circle back for that because I don't see it for whatever reason here, but I'm going to go back to page 21. Let's start comparing. Let's see, did earnings call happen already? Oh, just get disconnected. Mic check? Oh, okay, I'm good. I don't know why I thought that mic got disconnected. That was weird. But, let's see what happened to liabilities. Earnings call happened already. Please increase volume. What time is call? All right, volume. There we go. Boom. Hopefully should be a little bit better. Someone before told me I was sounding like a flight attendant with the mic too close to me, so I was trying to balance it out, but maybe I need to be a little closer. Let's see. Test the sound real quick. All right, there we go. Now we're good. So yeah, no call. That's what I find a bit odd. If analyst sources cannot reliably be trusted, how come their numbers are so important for investor sentiment? A lot of gray areas in this market. Thanks for applause. Yeah, no, exactly, man, exactly. And thank you for asking the question, and thanks for engaging. I really appreciate that. As our friend Ken said in a recent interview, the analysts actively work to set the fair price of securities. Hey, Michael's words, not mine. But that's just what they say. What I miss? We mooning? Not negative banana. I know it's definitely not negative banana. That's commenting that for sure. But no, yeah, nothing right now. You know, just another day. No, I'm just kidding. Obviously, it's earnings day. Just kind of digesting it, looking through it. Obviously, we got a little bit of negative activity after hours, but like I said, going in, it doesn't really affect anything for me. If anything, I'll consider buying a little bit now that we did see this decline. So that's just me, though. Everyone's got to do what's best for themselves. That's just the reality of it. Let's see, right? And we do love our friend Ken. He's such a cool guy. Would never spread information about the public's sake for his own interests. Fair price, certainly would not. A man of fairness, beauty, and the eye of the beholder. Ryan Cohen reduced the size of the company to consolidate and becomes profitable the first time in years. Exactly, MG. Mainstream media. Sales dropped by 19% for GameStop. I think technically it's 11%, but I know what you mean. I know what you mean. But also, Beholder's extensive network of corruption. An 8K was filed. Oh, did e-commerce sales go up? Forum description report of unscheduled material or corporate event. Oh no, more Michaels. Good question though. What time's earnings call? No call. No call. Go. GME. Just keep holding. Doesn't matter at this point. Cost 8. I like the stock. What can I say? Man, I was able to get in this aftermarket dip because I can. I think you can, actually. I mean, I guess it depends on your brokerage. So maybe depending on your brokerage, you might not be able to. But a lot of them do have after hours if you want to check it. Usually it's just like a setting, like in the buy ticket, depending on the one. Like I know, like I use Fidelity. So like I just have to do like trade type, like extended hours or something like that. Guess she's heading back down to the 11 range. Chuck, possibly. Thanks for popping in. We'll have to see. There's a long way between tomorrow's market open and the rest of today. Then you have the pre-market, and even when the market opens tomorrow, right, it could go down more, go up more. So it's possible. You know, I think it's one of those. It is what it is, right? Like it sounds stupid, but I really don't care too much. Like I'm just focused on the long term and just looking at the numbers and digesting them and becoming more and more aware of them, and then I can just keep comparing it to what's happening with the stock price, right? But just consistently focusing on the numbers. No call, no call, Jasmine Patel. It's trying to pop over the Dorito top now. Yeah, no, I gotta see the Dorito again. I haven't looked at it in a long time, but shout out to Badass Trader. I'm always ready to buy. I'm a long-term holder. Revenue drop kind of sucks. No sugarcoating it, but we still profitable, baby. Not negative banana? Exactly. Exactly. That's exactly what I pretty much said at the beginning when I started going through everything. Like, it sucks. It's unfortunate. It's not what I want to see, but seeing the swing on the bottom line for going from negative $313 million for 2022 to 6.7 million positive in 2023, that's a $320 million swing on the bottom line, despite revenue falling off 650 million. So that I feel like makes up for it. And of course, again, there is no sugarcoating it. Like you said, like it's unfortunate to see the revenue declining, but Just bought more. Hey, happy for you, JJ. Happy. Do you believe there will be a short squeeze still, Austin? That's a great question, right? There's a lot of speculation, and the reality of it is the market mechanics are so complex. So I think in some shape or form, yes, because there are still people betting against it. But how exactly it looks and if it's officially a short squeeze, I feel like it's kind of open for interpretation, if that makes sense, because there's just so many strange mechanics to how the markets work, and that's what I've learned over time through my journey being a GameStop investor and just looking at a lot of different things. So it's not like that black and white, but I do still personally believe it's worth a lot more in the future, and there will be a squeeze of some kind, and maybe it's just squeezes here and there, and certain times it's defined as a squeeze and it's not. Certain times it looks like a squeeze and it actually is, but other times you think it is, but it wasn't. It was actually someone that wound up that was buying and you didn't realize it was a large institution or an individual that's on the board, and then it comes out later, right? So it really depends, right? Like it's all relative, but that's why I personally just focus on the company because I can't control all that, but I know if the company's controlling what they control and continuing to improve, then that's the best thing for my investment. So GameStop is following a strategic. So the one on the left, just to quickly clarify, left side 2023, right side 2022 business priorities. GameStop is following a strategic plan to leverage its unique position and brand recognition in gaming through a new phase of transformation. Our strategic plan is designed to optimize our core business and achieve profitability. GameStop is actively focused on the below objectives, establishing omnichannel retail excellence. We aim to be the leading destination for games and entertainment products throughout our stores and e-commerce platforms. To accomplish this, we are taking steps to ensure we are a fast and convenient solution for our customers. This includes increased product availability across all channels, faster fulfillment through ship from store offerings, and a further improved customer service experience. So I like that. I like that they say fast and convenient solution for our customers because we live in a fast world, right? Everything's swipe, 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 click, click, click in 2 seconds. Like if I'm not entertaining for 2 seconds, right? There's definitely someone watching this right now that's going to click away because it's just a fast world, right? Like that's how it goes. Like we live in a very fast world. So your product shipping has to be fast. Your response has to be fast. Your website has to be fast. So I like that they're acknowledging that, right? And I don't see that mentioned here. We put fast. Oh, let's see. Ensure a fast and convenient solution for our customers. Okay, so they did have that. Oh, so this is in the business strategy. Though this is business priorities. So a little bit different, but pretty much the same. So achieve profitability. Last year, we optimized our corporate cost structure to align with our current and anticipated future needs following the completion of a majority of the necessary upgrades to our systems, fulfillment centers, and overall foundation. So completion of a majority of the necessity upgrades. So again, that goes back to when Ryan Cohen initially got involved, took the reins, and was like, okay, this company is extremely underdeveloped in terms of their technology and just how they're doing everything. So they had to put all that stuff in place. And it's stuff such as this, right? Like YogiBo, where now they have their own internal AI and like collaborative culture, as they put it here, right? And basically can communicate like store to store, regional manager to individual store, customer service agent on the phone. They can communicate all through this like internal app that they have. And a lot of companies have stuff like this now, but GameStop never really did. And they were just using like a lot of like, just like phone call, like printed out stuff for training, like super out of date things. So they had to really like turn that around. But if you look here now, right, to circle back, where are we? So you say they basically completed the majority of that. In 2023, they said during 2023, we continue to optimize our cost structure to align with our current anticipated future needs. We will continue to focus on cost containment as we look to operate with increased efficiency. So to me, this says like the major costs, like the way they changed the language from 2022 to 2023. I see it as them basically saying like, okay, we've done the major changes where we've cut the major costs, but now we're going to just continue to operate as efficiently as possible. We'll cut costs where we can, but I think basically saying like the major changes have been completed and the major upgrades to get them up to speed are here. They're up to speed, and now it's just about continued execution. That's how I rate it, at least. Of course, you're more than welcome to interpret it differently. Leverage brand equity to support growth. GameStop has many strengths and assets, including household brand recognition and a significant store network. GameStop has many strengths and assets, including household brand recognition and a significant network. We intend to use these assets to attract new partnership arrangements, expand product offerings, and acquire new customers. We will simultaneously explore and pragmatically invest in strategic initiatives to support our growth. So interesting that they took this away. It's one of those where is it interesting and does it mean something, or is it just they decided to change the language? But I feel like even if they decided to change the language is near identical in other spots, right? Like for the first part of it, they didn't change that at all. So what made them particularly change that? And again, that's just a question for you to answer. I don't have the answer for that. Like I'm just bringing up the speculation, bringing up the idea here. But we believe the efforts are important aspects of our continued business to enable long-term value creation for our shareholders. As part of our efforts to achieve sustained profitability, we continue to evaluate our portfolio of assets to validate their strategic and financial fit to eliminate redundancies. During 2023, we exited our operations in Ireland, Switzerland, and Austria. While we expect our cost containment efforts to yield reductions in SG expenses in the long term, we have incurred and may continue to incur non-recurring costs related to the efforts in the short term. That's as previously mentioned, where they might have severance package, they might have other costs that are associated with shutting something down that are one-time costs that'll show up. However, in the long term, obviously, it wouldn't be relevant because it's a one-time cost. And we already went through the investment policy a little bit. But yeah, I think it's also really good to continue to just compare like each report, right? So again, if you're just joining, left side 2023, right side 2022. And I want to see anything else major I missed. I mean, I'm getting pretty burnt out. It's crazy. I've been streaming since like 1. It's definitely, I think, my longest stream. If not the longest, it's up there with one of the other earnings stream, right? But hope everyone's doing well. Really, I appreciate everyone popping in for real. It's now a profitable company. The revenue decline doesn't bother me. Any bearish view from this point on only looks away in isolation or paired with ignorance. There are more cuts to make as well. Exactly, Michael. And just as we mentioned, or I was just talking about there are going to be situations where there's one-time costs associated with things being wound down. GameStop bought shares. Never mind, read that wrong. Oh no, you're good. You're good. No worries. We are profitable with no cash gain. Yeah, Summer. The situation is. There I am again saying it. So the situation is, if there was the situation is counter on this stream and the over under, I say the over under has got to be like 99. I feel like I said it 100 times today for some strange reason. I just go through these phases. I don't know if you guys are the same like this, where you just kind of like have like not like a catchphrase, but just start certain things like you keep saying, or like you just like go to like sentence starter. Like I don't know how to describe it. It's just a funny thing. It's just like a tendency I'm noticing with myself more and more. But while they were profitable, they this is a full year, the 6.7, right? If you want to look at the particular quarter, right, then you would look at numbers that came out here for the 13 weeks. So you have to look at cash flow statements. So the major factor, if I remember correctly from just looking, was inventory for operations. Yeah, for the 14 weeks. See, a lot more on inventory. Or sorry, it was only 11 million in terms negative loss of 11.3 million or 11. Oh my gosh, yeah, it's definitely almost time to wrap it up. I feel like myself getting burnt out, but yeah. So overall, they had less cash than the start of the period, right? So that is why overall they have like a less cash pile, and I will have to update like this infographic I have here from 3.96 a share, and I'll update these numbers as well because they're a little bit lower. And then, just for perspective, let's get this one in here. For perspective, I keep going back to this one on my page, but Q2, see as of Q2, this one's as of Q3, and soon it'll be as of Q4. But with Q2, it was 392 a share, it was about 1.19 billion, it was at 1.2, and now we're going to be at a spot where, let's look on the balance sheet. Cash equivalents, marketable securities. Get the calculator out real quick. Do 921.7 plus 277.6. So right now they have 1.199.3 cash equivalents, marketable securities, and that stacks up against most recent quarter like this. So goes from about 1.2 billion to about 1.2, or Yeah, slightly less, just very, very slightly less, right? So it's still kind of floating in the same range. But overall, I think as I'm really digesting this now and just cooling down of the hype going in and everything and just going for a while now, I think I could say I'm decently satisfied with the report. I think definitely the sore thumb, or whatever you want to call it, or I don't know if that's the expression, that whatever, it's a thing that stands out that's unfortunate is the revenue. But when you look at the fact that all these stores close in Europe, like it makes sense, and that they're closing stores and they're just continuing the focus on profitability. It's tough, right? Like you have to understand, I'm not like, with everything I'm talking about, I'm not saying it's an easy business model to operate. Like it's a tough business model. I've worked in retail. It's extremely tough on the people. It's extremely tough on the managers. It's extremely tough all around because there's only so many people that can work. There's only so many hours. There's only so much of this, so much of that, right? And I can mostly speak from an in-store experience from my time when I worked at Marshalls, and I just understand like the intensity of the environment, right? And it's not a simple business to operate. Not that any business is easy to operate, right? But I'm just saying to have these changes really put in play really does take strong leadership from the top and having it go all the way down to top board of directors, head of management, to district guys, to regional, to whatever the way it scales down to store manager to employee, right? And big part of it for me, or like something I see that's helping them do that, is this Yobik thing. If you guys haven't checked out already, look it up. Yobik, GameStop. Pretty much, it's a platform that allows them to put in all their information, right? Like all the information about GameStop, like their policies, procedures, all those sorts of things. Like return policy might be an example. Procedure when someone's doing a trade in, right? All those different types of things that a newer employee or a manager might need to check on because it only comes up like once in a blue moon, right? They now have this internal system they can use. And then also, if you're a customer service agent, like taking a call to the hotline, which by the way, there is no annoying phone menus. When you call, you get someone on the phone right away. So if that occurs, they can look, oh, what store did you buy it in? It was store 1234. Oh, okay. Or well, maybe the individual wouldn't know the store number, but they would be able to tell them the location and they can look it up, look at it, look at what's happening within that store. So it's basically like a giant database, and all these different things like allow the company to provide a better customer experience and just continue to improve things overall. And again, it's not flashy, it's not something that's going to make them like a gazillion dollars, but it's just going to allow them to become increasingly profitable and operate increasingly more intelligently. And of course, time will tell. I think this report is an example of that because net income, again, $320 million swing on the bottom line, despite a $650 million revenue decline, right? So I wrote it here, just like summarizing. So approximately 650 million less revenue, right? They went from 5.9 billion to about 5.27 billion of revenue, and then net income over the same period for 2022 went from negative 313 million to about 6 million positive. So it's a $320 million swing on the bottom line, but then a negative decline of 600, like a decline of earnings by $650 million. So to have that kind of swing on the bottom line, it just shows me they're absolutely focused on growing the bottom line more than the top line right now. And eventually they do have to grow the top line, though. That's the thing. And I don't ideally want to see 2024 as another year where revenue declines, but I wouldn't rule it out. But where I would kind of be okay with it, and I think it's a little more valid, is if then there's significant increase again to net income, right? Like let's say, just for like random numbers, right? Like maybe revenue comes in next year like 4.9 billion, but then net income is like 275 million, right? So again, like the revenue going down isn't ideal, but like that would be another massive swing on the bottom line, or even like 200 million. So I guess as they're moving in that direction, they have to just keep operating more efficiently, but then when the right opportunity arises, just pounce on it to increase revenue, because revenue does have to increase. That's what I'm trying to say. I'm not saying revenue can decrease forever. Like, it does have to increase. But if your bottom line is increasing, like, you're still taking action. It's not that nothing's happening, and it just might take a little bit longer to get to a place, or you just have to find that thing that's going to drive revenue forwards. Like, I think that's definitely the major X factor. But yeah, I feel like I'm running out of air. I've been talking for a long time now, so might have to start to wrap it up here. But damn, it's been an awesome stream. So many of you have been here. It's literally getting dark in this room now. So get the light on real quick for the end here. But no, I could not be more appreciative that all of you stopped in today. Just say hi. Even the haters, the GME Solana people we dealt with before, those of you that were with me in the very beginning. So we've seen it all today. But they invested 200 more million into inventory. We said 2023 had one more week than 2022. Thank you, Fresh Maker. I like that. Appreciate the stream, DB. Appreciate you being here, man. What I missed on the investment policy? Any news about securities invested in or future investments or mergers and acquisitions? Not at this time, Moon Man. Thanks for popping in, though. Nothing right now. We're over the Dorito top on a closed 5-minute candle. Also, the February 2021 after hours run took place at 6 p.m. IIRC, or I'm assuming is it a typo, or but yeah, I think you mean like after hours. Can you explain how they're profitable but have less cash? Thank you for the stream. They made money but paid off liabilities. Exactly, Michael. What he said, non-recurring liabilities. Yep, I see. Thank you. See, I love that. Everyone teaching each other, helping each other improve in the chat. You gotta love it. Retail is actually hell. I don't know how other brands develop, but put in that context, the revenue upside does seem promising. Exactly, Behold. Exactly. New PS4 coming out next year. GTA in 2025 will melt faces. Very good point. Not negative banana. Very good point. Johnny G Diamond Hands. It's not the destination. It's the journey. We making money is all that matters, and my invest makes me cash flow every day. Yeah, Johnny G Diamond Hands. Diamond Hands, baby. That's how it is, right? But no, I appreciate you popping in, number one. And it is about the journey, right? And that's what I'm personally doing with my YouTube channel, documenting my investment journey, my journey as a GameStop investor, and being invested and interested in various different topics that are economics and stocks. And I don't want to be in the business of saying like, oh, this is the best thing since fire, right? Like, trust me, this is the most crazy stock. Oh, there's such an opportunity here, right? Like, I just want to talk about things that other people are talking about and just kind of open the door to discussion amongst individuals and myself and other individuals and all that. So I think it really is just a journey. That's the best way to put it. That's my point. It is a journey. That's what Tetron is. It's Tetron's investment journey, pretty much. And you guys are just joining the ride, and you guys are all part of it in some shape or form. I love it. Profits over revenue. Exactly. Look at the state of the economy as well overall. Take that into consideration. Very good point, your boy. I can tell you from speaking to a lot of other young individuals, it's very hard. A lot of people having a hard time starting their life just because like everything's so expensive. Like, coworker of mine says, like, he's like, bro, like literally existing is so expensive. I never realized. I'm like, yeah, it's crazy. And he's right though. He's right. Just existing, like just eating and living a very simple life still costs a lot in today's world, right? And fortunately, it doesn't seem like that's getting any better anytime soon. Although I wish everybody the best, and I'm gonna obviously do what's best for myself. And I'm not saying like, oh, all is hopeless, but I'm just saying everyone's got to do what's best for themselves because things unfortunately don't look like they're getting better. So everyone's got to like work a little harder to like make a little bit more. That's kind of just the reality that I'm seeing around me for a lot of other young individuals and older individuals as well. But I'm still not convinced that the Web3 stuff is dead and bullish. Whatever's happening, would say that they're adopting the Unreal Engine and potential Web3 integrations there. Yeah, no, Michael. I mean, I'm not saying it's totally dead. I see what you're saying, where it's like maybe there is still involvement. They're waiting for a certain something or a certain partner or whatever the case. But we'll have to see. We'll have to see. I'll see if there's anything that happens with Player, like, because that's the only thing that there's been no official word on, right? Like, NFT Marketplace was wound down, GameStop Wallet was wound down, but GameStop Player, no new information on it, right? So, not sure exactly what the deal is with that. We'll have to find out, and I suppose we will at some point or another. But what do you reckon is more important to the market? Curious. Uh, what do you mean, like, example, Rocket League? Oh yeah. I see what you're saying. But what do you reckon is important to the market? In terms of like what they would do, or like just markets as a whole, I just look at it as like you want to own great companies. Like I did a very, very simple explanation of what I look for in the market. Just you want to own great companies and great assets because the dollar's being inflated away. So that's also where I think GameStop has to eventually use their capital, but you don't want to rush. Like you want to seek the right opportunity and earn that high interest in the meantime. But for individuals, I think it's just becoming increasingly important to understand the importance of owning assets and like building up yourself with wealth. And also, when I say build wealth, it's more than just like getting rich and making money. It's like mentally having that wealth, right? And physically and just building yourself up as a whole. So that's how I look at wealth, at least. But by definition, wealth is technically dollars and cents. Uh, Ika, thanks for stopping in. Keep doing your thing, Tetron, yourself, from Rants, Diamond 40, one of the only people here on YouTube I trust. Appreciate your efforts. Thank you, Michael. I'm just trying to keep it real all the time. It's not always easy, and with streaming, it's hard. You're just live, and then sometimes, like, your mind, you start thinking about the next thing you're going to say, and then it trips you up on what you're originally saying, and then you don't ever actually finish what you're originally saying. So sometimes I have to be like, all right, namaste, one point at a time. Like in the beginning of this stream, even if you watch it back, like I feel like I was like all over the place. I was like, blah, 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 but then like locked in, dialed in, was just driving forward. Let's see. Yeah, I'm just existing at this point. I know it should be new boy, I know, but just keep fighting, man. Just keep doing the most you can. Keep saving money wherever you can. Be as frugal. Just got to do the best you can out here. I wish you all the best. What other company has shut down anything that could make them money because of regulatory uncertainty? That's a good point, Michael. That's true. There has to be a strategic reason. They don't trust the market right now for some reason, or don't want to be blamed for a big rug pull, something I don't know. Exactly, Michael. Yeah, no, I think that's a very valid point where they're in a situation where there are a lot of people betting against it and or hating on GameStop, right? So any little thing that they might be able to say, oh, you can't do that. We're going to sue them for it. I think they just do not want to deal with the legal fees. But again, you're right. Like, what other companies do you see that have cited that? But then again, not a lot of other companies are involved in like Web3 and whatnot. But got to replay the stream leader. Missed a lot of it because of work. It's all good, Ryan. It's all good, man. Watch whatever you can. I do appreciate you very much. But yeah, you'll see. It was definitely a long stream today. Definitely a long stream. But I thought you seem very cool-headed and well-reflected. That's why I come back here. You don't seem to be seriously biased towards either side, but have genuine curiosity to learn. Thank you, Behold. Thank you very much. I appreciate that comment very much. Yeah, no, I really try to just keep bettering myself, and like I understand that I have a long way to go to become like the best version of myself. I'm 23 right now, so I'm fortunate to have the experience I do in the stock market. And when I say that, let me preface that by saying like I've messed with stocks and different things since I've been 16. I used to even like the original, when I say original, it was original to me, like crypto hype wave in like 2017. I was like trying to trade like the random coins and whatever. I was like, what is all this stuff? This is crazy. But I was very, very fortunate that I was messing around at a time where I had like very little amount of money. I'm just a high school kid, right? Like working a part-time job, a little bit of extra money I would just mess around with. But I learned very valuable lessons to avoid, scams and rug pull coins and trading options recklessly, right? Like I learned all those lessons at a young age before I had a real amount of capital to actually invest and work with. So I'm very, very fortunate for that. But I also recognize like where I'm at right now, there's still a lot more for me to learn because there's people who've been in this game much longer than I have in terms of stocks and economics. So all I can do is keep grinding, right? But I really appreciate all you guys. 12 hours between yourself and rants. Get some rest. Yeah, it's crazy, man. Just keep going. But unit stock goes to $5. The share buyback can occur, then boom, isn't it? Tiny, thanks for popping in. Yeah, I mean, we'll have to see. If the share goes super low, maybe they buy back shares. I've run this poll, showed it already, I think. Oh, I got the same thing here. Whereas pretty mixed bag in terms of buying back shares or issuing dividend, but also a lot of people think neither, and that's where I tweeted later. Should have added neither. So follow me on Twitter if you don't already, X, whatever you call it these days, at Tetron Invest, where I'll be putting out these polls just to get a perspective of different GameStop investors. So next time maybe I'll run this poll again and put neither or other options on there just to see what people think. But yep, love seeing this curious generation going for it. I started my career at 23. You're going to do very well, my man. Thank you, Michael. Thank you. I appreciate that. I gotta just stay disciplined, and I'm trying to fix my attention span because, like every other young person, like swipe, and I mean, I don't have TikTok, and I really just get caught on like YouTube Shorts sometimes, and sometimes Twitter, and I think I'm a lot better than a lot of the people my age, but there's still a lot of room for improvement. That's what I'm saying. So, try and just keep getting better at being disciplined and just more focused, because that's the biggest thing. And me and my brother talk about this a lot, where it's like a lot of people our age, we realize like have such a difficulty focusing, and that's why they can't execute or like better themselves, because they're just so like, oh this, oh that, oh that. You know, it's like attention spans are just so bad. And I'm scared for like the next generation of kids coming up, where they grew up just swiping. Like they're growing up right now just swipe, 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 like quick, quick, quick. Like the world's just getting so fast technologically. It's crazy. You know, when you think about the fact that Google's only like 25-ish years old, what does another 25 years of technology look like after you see from just a basic search engine to where we've come now with AI? What does another 25 years of this stuff look like? And that's where I'm like, AI is the coolest, but the scariest shit ever. And that's where I have that perspective, because technology just evolves faster and faster. And it's like, it's almost like exponential in terms of how it's evolving. And just know, robots, if you're watching this, I respect you. Don't corrupt me. We can coexist all as well. But if I had saved everything since then, I put in Gmail, I have a bigger holding than not a cat. Damn. We grew up like that too. I didn't really start saving until 30. Swiping was a bit slower. Yeah, no, that's true, Michael. I know what you mean. Like, definitely, that's true. You have like Instagram's been around for a long time, and I've pretty much grown up with that. But I feel like now it's just ever since TikTok's become a thing, like that's really I feel like where we've gone off a cliff a little bit. But it is what it is, right? But thank you guys so much for watching. I'm finally actually gonna wrap it up here. No more like half goodbyes for like 30 minutes. But I really, really appreciate you guys so much. Stay tuned. You know, I'll be putting out more stuff about GameStop, and we'll see what happens with the price action the rest of the day, tomorrow morning, and tomorrow during the day. Just remember, you know, do what's best for you, focus on what matters to you, and have a good night.